Morning, everyone, and welcome to the Traders Corner Stock and Options Investors Summit, Traders Roadmap to Success. My name is Anthony Chapman, and I'll be your host throughout today's event. We're excited you've decided to spend the day with us because I truly believe you're going to walk away with valuable ideas that can help you become a more confident investor and trader. Let's face it, the markets have been anything but predictable lately. We've seen tremendous volatility driven by inflation concerns, interest rate uncertainty, geopolitical events, earnings surprises, artificial intelligence, sector rotation, and rapidly changing market sentiment. Sounds like a lot. In an environment like this, it becomes more important than ever to learn from experienced professionals who are actively navigating today's markets. That's exactly why we've assembled 9 outstanding market experts who will each be sharing one of their favorite and most profitable strategies. Whether you're an investor, options trader, swing trader, or active trader, today's presentations are packed with practical ideas that you can begin applying immediately. A quick reminder before we begin, each presenter has put together a special offer exclusively for today's attendees. Whenever a presentation concludes, I'll remind you that the link to learn more can be found right in the chat box. So you also have opportunities to ask questions throughout the day. Make sure you take advantage of that. And don't forget, everyone who registered also receives our exclusive special report, 7 stocks to own before the next global energy shock. So now let's get started. Our first presenter is someone many of you already know and respect. Price Headley is the founder of Big Trends and has spent decades helping investors identify high probability trading opportunities through disciplined technical analysis and market timing. Today, he'll show you how his same day SPY option strategy identifies powerful opportunities using first hour range patterns, relative volume confirmation, and structured risk management. So please join me in welcoming Price Headley.
Well, thank you, Anthony. Good morning, everybody. Thrilled to be kicking off today's Stock and Options Summit, and always a pleasure to join in on these special Traders Corner events. It is, like Anthony said, it's been an amazing market environment, just day to day, so much change. If you were looking last night after the close, after the Fed didn't hike rates, initially the market rallied and then basically gave all that up and more into the close. And then you look at it overnight and you say, oh, well, Meta had terrible earnings and market's going to be down coming into tomorrow morning. And guess what? The market is up. We've got the Nasdaq up 2.5% this morning. We've got the S&P up a full percent, all right off the get-go here, just in the early minutes of today's trading. So what that tells you is that you've got to be careful about making assumptions, right? You've got to be careful about trading what you believe. You've really got to trade what you see, and you've got to manage your risk. And so one of the best things that's happened in 2026 from our point of view is that the SEC abolished the pattern day trader rule back in April, which used to be mean that you had to have 25 grand or more in your account to day trade actively. Now that rule is gone, and so that's going to bring a lot more people into stock and options trading on a smaller account basis, and the market is perfectly configured for that, in my opinion, as it relates to this types of day-to-day swings that we saw. I mean, yesterday was phenomenal, up and down, up and then back down again. So how do we get a piece of that, right? So one of of course, probably the biggest vehicle out there is the S&P 500 and the ETF that tracks it, the SPY. When it comes to, of course, S&P 500 is what just about every money manager tracks their performance against. And so a lot of money managers use the SPY either to hedge or to get more exposure. And so the idea is that, okay, guess what? With this kind of volatility, we can then say that zero DTE options, same day options have become incredibly popular. I mean, we're talking about contracts that are often trading hundreds of thousands of contracts in the final day of their options life. So it's not for widows and orphans here, what I'm going to share with you. At the same time, it's manageable risk and a potential for a lot bigger reward relative to your risk. So, of course, you can pop in any questions you want there on that question mark in the top right of your screen. Anything you have on your mind, pop it in there. You'll see that question box pop up, and love to get your feedback. Let's go ahead and get started. Remind you that the information that I share with you in today's presentation is based on our proprietary research. It's intended for illustrative purposes only and should not be considered specific advisory recommendations. As you know, stock and options trading have large potential rewards, but let's face it, they've also got large potential risk, right? So always got to manage our risk in every trade. We'll talk about how we do that here with SPY same day options, and also how we look to take our risk down to then ride the rest of our position for potentially a much bigger winner. But remember, the past performance of any trading system or method is not necessarily indicative of its future results, right? We know that the future results are going to vary. But what you got to have is you've got to have a method to the madness. You got to have a system to take advantage of patterns, and that's what I'm going to share with you is our favorite patterns on the SPY intraday. See your terms of use on our bigtrends.com homepage for more info here. Now, the other great thing about SPY, not only is it incredibly liquid, not just in its underlying ETF, but of course in the SPY options that are so active, which of course means that you've got very tight bid-ask spreads, very small costs to participate, is that you get your focus back, right? I don't know about you, but I feel like that the biggest challenge I face and we face here at Big Trends is that there's so many different things flashing at all of us here, right? There's so much news crossing the wire, so many different opinions being spouted on the financial media. There's so many different potential things you could invest in and trade, right? And so the key is, okay, how do we align ourselves with the best, and in our case, some of the most liquid situations to make it easy to get in, easy to get out. So SPY really gives us that laser focus back. And so 37 years of experience for me, but even with the experience, we've still got to follow the system. We still got to let the system drive the trades. We're going to show you a bunch of success stories when it works, also what it looks like when we get stopped out, and how we look to rinse and repeat these to stack the chips in our favor over time, but just kind of be steady and consistent in your capital allocation. That's the one thing you can really mess up a good system if you load the boat and just go heavy on a trade and then back off on another trade. You want to be more consistent in your capital allocation on each trade to really let the system do the heavy lifting. So we'll share with you more about it. If you don't know me, I've been trading stocks and options now for 37 years. Launched BigTrends.com nearly 27 years ago in November of 99, and blessed to serve tens of thousands of folks here in our Big Trends community. Again, teaching systems, teaching and education has always been a big part of this, and saying, okay, how do we grow portfolios? How do we manage risk? How do we look to stay in the game for the long haul? We want you in the game for the long haul as well. So let's kick off today's event with a recent winning trade example. We're going to go into more details on how this same day SPY trader system works here. So, okay, let's look at it right away here. What we've got is we got 5-minute candles on SPY here. Spiders, as they're often called. And so what we're looking to track here is what is the high-low range in the first hour of the trading day. So we're gonna basically define that off of, okay, before we get to trading after 10:30, we're gonna look to define, okay, what's happening off of a recent high in the first hour. So you see this first high triggered right here, and actually the first low triggered about 10 minutes into the open there. And so this is going back to an entry that we actually picked up on a breakout outside of that range. And the amazing thing about this is that these signals can come uh, even midday, even as late as 2 to 2:30. So we've got some really unique patterns where we can hop in at various points throughout the trading day, but we need to get that first hour under the belt. And so you say, well, what about this one here? When it popped down and we've got our volume, relative volume filter on the bottom here. Well, that was big volume on that red potential breakdown. If it had kept dropping, that probably would have been a problem for the market. But one candle, one bar, one data point doesn't make a trend. So we will see a lot of fake outs in addition to true breakouts. And so we actually have ways to trade both the breakouts and the fake outs for you today. We actually don't try to trade breakdowns on the put side. We actually try to trade more of fake outs up that pop back down to trade our put purchases playing the downside. But the calls can trade both upside breakouts as we extend our way outside of that upper resistance level and break out to the upside for potential trend days higher. But then also we will see some flips down that can turn into flips back up, buying calls off of a dip as well. Okay, so this one, we want to have not just one breakout candle here, but we want to have a couple of breakout candles, and it has to have enough volume. So candle 1 and candle 2, remember those are just 5 minutes at a time. That's happening right around the midpoint of the trading day, by the way. These are Eastern time, 12:45 Eastern. That's the smack dab middle of the trading day between 9:30 and 4. Oh, by the way, SPY options will keep trading until 4:15. They don't stop trading at 4. So that can also be something to be aware of. But we'll always be out of these trades by 3:30 at the latest. We don't want to cut it too close for subscribers when we call out real-time entries on our real-time email. And you can also get text alerts to your smartphone. We want to make sure that you're just focusing on basically following the pattern and then getting out with plenty of time to go. So this is going to be a 3:30 exit. Now notice what we bought here. Okay, so like I said, not for widows and orphans, right? We're buying usually uh, near the money, maybe a hair out of the money if it's early in the session, soon after that first hour's high-low range is established. Or in this case, we bought it just slightly in the money. You can see when we broke out here, we're almost at 754 on the spot. This is back on July 10th. Of course, what every single day expirations for SPY are listed for at least the next couple of weeks, right? So you've got tons of flexibility. But of course, when you're trading the last day, in this case, the last half day of the option's life, say, man, that just sounds like it's cutting it too close. I used to think that several years back, and then I saw just how powerful this could be, where frankly, you're paying basically the least amount of premium you could pay relative to what the market's expectations are for basically a trade window. And I've always said, why buy more time than we need, right? If we know that we can catch this move in a matter of a few hours, be out by 3:30, give subscribers plenty of time to get out, and that's plenty of time to get out. We're say, look, okay, in this case, look, we're buying it almost a point in the money, and we're paying $1.25. $1.24 was our average entry price. That means if you don't know options, that means that you'd pay $124 to control each option contract controls 100 shares of SPY. At 754, that means if you're buying 100 shares of SPY, it costs you just over 75 grand. You're controlling 75 grand plus worth of SPY stock for $124. Now, the trade-off is we're not around for a long time, right? We will be out by 3:30, win, lose, or draw. So going into the trade, what we tell subscribers is, look, any of these patterns, our first rule of thumb from a risk management perspective is don't lose more than half of what you put in. We feel like the 50% price stop is the best way to trade these. I know a lot of people that would try to put tighter stops on it, and I'll see a lot of people that get shaken out if you're too tight on your stop. You say, well, I don't want to risk too much money. Well, you define what's your maximum dollars of risk. This example I'm going to show you today, we're using $1,000 maximum investment, assuming then we're looking at about a $500 risk if we hit our 50% price stop. If that's too much for you, if you say you want half of that risk, then cut your size down in half, right? I'd rather see you trading fewer contracts than trading tighter stops. That's the better way to risk manage these 0 DTE final day of the options life trades. Because you see what happens here is when we get in there on our buy signal, that's a breakout. We did get enough volume there to tell us that we're getting our relative volume filter. It's got to be at least the blue first level of higher volume. The green is the second higher level volume. The red is the massive maximum volume 5-minute candles. And so we're going to talk about what each of those mean in a slide in a little bit. But the idea is that we get the volume confirming the breakout. Okay, we want to see that there's enough participation in that move. And so therefore, what we're going to do is we're going to say, okay, look, with this in place, we get in at $1.24. Right away, we put our stop at a 50% stop loss. Okay, that means if it trades down to 62 cents, we get out. Notice over the next 15 or 20 minutes after we get in, we are pulling back a little bit. You see that over the next 15 minutes, it kind of retests near that little short-term intraday high zone right there, which is around 753.6. Okay, so if we bought it at 754, it goes to maybe 753 and a half. We're down a half point. These options are slightly in the money, so they'd probably lose maybe 30 cents on that. They're not losing the 62 cents, from our entry level, right? If they did, we'd stop it out. So that's important, is to say, do you have enough wiggle room to stick with the trade? So we might have been down 25, even 30% and not be sweating it, right? Not be saying we're not worried about this trade. We're saying if the stop hits, we take it. What do we do on the profit side? We actually have a hybrid approach where our first goal becomes to get a lot of our risk money back if we get a 50% gain. We don't want to shoot necessarily for a 100% gain, because some of those trades won't get there. They might get to 50, but they won't get to 100. So we're kind of trying to take advantage of some of that volatility and noise and say, look, sell half your position when you're up 50%. Now, that doesn't get all of your risk capital back, right? If we bought 8 contracts for $124 a piece, on that $1,000 cap, you'd be in for $992. Before commissions, remember, commissions are way down. You pay no more than the buck per side on commissions if you're just getting started. But as you get more active, a lot of people I know, myself included, are paying a half buck per contract. So 8 contracts in and out shouldn't cost you more than $8 to $16 maximum. Okay, so point is that okay, look, we're in for $992. we saw 4 at 186 bucks a piece when they pop up there to our first target. Now this is hitting just into 3 o'clock, right? We're going to get out by 3:30 at the latest. So we don't have that much time left in this trade. And as you can see in this example, by 3:30, it ticks a little bit higher. We're out in the second half at 62%. We've got much bigger examples to show you, but this is just a recent example from earlier this month where we can show you, okay, an example where we're like, okay, that trade, we gave it that chance to run. And by the time the first targets hit, we've only got a half hour to go, and we end up making 556 bucks in profit. So again, not the hugest example, but still not bad for a few hours of work, right? So we're going to show you some more examples, but first let's just talk a little bit about same day SPY trader. So we know we're in and out the same trading day. Day trades are not a problem. If you're going to be really active in your day trades and your broker's not already implemented the no pattern day trader rule that was abolished in April, you can check with other brokers, or you can always add other brokerage accounts if you were going to be super active. But this is a great thing, this allowing smaller accounts to really get more involved with more active in and out trades in the same day. Zero DTs have really been all the rage over the past couple of years. Now the strategy I showed you, a confirmed breakout on the call side. And then we're going to talk about failed breakouts here in a minute too, because we look at these volume thresholds to say there's a lot of fake outs in the market. In the old days, I would try to skip the fake outs and just trade the true breakouts. But we noticed there's enough there's even more of those fake outs with SPY. I mean, you saw the volatility yesterday into the Fed meeting and after, that the idea is that, okay, how can we take advantage of some of those fake outs and not get sort of stuck with a lot of other traders, but actually say, let's actually trade the other direction when the fake out confirms. So we'll get into that here in a minute. But then we're looking near the money, at the money ATM, or near the money, near the strike price. Says, guess what? Those are going to be some of your most leveraged options to give you some of your ultimate bang for your buck. The 5-minute chart we feel is ideal for getting a lot of data quickly without getting so much market noise, right? The 1-minute charts, I've looked at them. They're a lot noisier, right? I mean, the reality is you can get more fake outs than what you think your view is here if you're not careful. So basically, we're trying to minimize some of that noise and get more of the true read of the true trend. So we call that first hour the initial balance, the initial first hour range. We're not going to trade in that first hour of the strategy. So the earliest we could start getting a signal would be at the 10:35 a.m. close once that first hour's range is established. So we'll show you more charts here, but we do always require that volume confirmation. The relative volume thresholds will show us where we should participate. So that way, with 3 different levels of volume, we can actually get plenty of trade opportunities, plenty of profit potential. Of course, same day options give you a ton of leverage. I just showed you an example where $75,000 of SPY could be controlled for 124 bucks, right? I mean, that's like a 500 to 1 theoretical leverage ballpark. So you're saying, okay, well, we may not get exactly that because, of course, we're going to have time erosion. So we got to manage that time risk. That's how we do it, by using a price stop first, but also by using that scaling out at 2 different profit targets and saying, look, our average contract price has actually been that same entry price I just showed you before, 124 bucks on average per contract, sometimes more, sometimes less, over the past 3.5 years on this system. So first thing first, 50% price stop. Whether you're trading 2 contracts would be the bare minimum, I'd say, to trade. So that way you can sell half at a 50% gain, let the other one run. And then obviously, as you get confident, then you can scale up. But I always tell new subscribers coming in, I'd like you to start small and build your habit of execution and build your habit of, I'll follow each trade that gets called out, win, lose, or draw. And so that way, trading small says that you're not worried so much about making maximum money yet. You're worried about proving to yourself you can follow the system. So then the first rule is take that first 50% profit target on the first half of your position, and then let the rest of the trade run until 3:30. Win, lose, or draw on that second piece, right? So sometimes they won't keep going. So we'll talk about what happens if they don't. But let's look at another recent winner. Now, this is a fake out, okay? Upside attempted breakout in the first 5-minute surge above that range. And notice this was happening there about the 120, 125 zone there, right? So this is Eastern time. So you're saying, geez, you're only going to hold this trade for at most a couple hours till 3:30. That's fine. You see, there's plenty of potential here. This was happening back on May 22nd. And you see, so we established that first a first hour's high of the range in the first 15 minutes of the trading day. We got the pop up initially. Then you saw that we popped back down right before 10:30. We were all the way down here. So that line then extends all the way out. See the rest of the day here, right? So a lot of times on our fake outs, we would expect that there's a good chance you can go from the high end of the resistance area back to the low end of the support area. And so that's kind of a generalized expectation. It's not always going to happen. This one didn't quite get there by 3:30, but it got close. But the idea is that, look, you see that first candle potential breakout. We're getting it on big volume. Guess what? First data point doesn't matter. It's the next data point that matters, right? If the market had kept going to the upside on that big volume, we could have had one of our upside call breakout trades. But instead, it does the exact opposite, right? You're saying, wow, we're putting a lot of weight on that 5-minute second candle for either follow through or not. And we've seen that that's the tell. That's the aha. Okay, guess what? It tried, it failed, or it tried, it succeeded, right? So the idea here is that on the upside breakouts, that second candle is going to really be telling. Or if we do try to get through there, then we come back into the range. You'll see some examples where that can also drive a failure. If the great upside breakouts don't come back into that prior resistance level. Okay, they just keep going and march steadily higher. They might retest it, but they don't get back into it. So you can see here that at that point on that close back below, we sent an alert out to subscribers saying, okay, look, 749, our system says you should get into those 749 puts. You see we're closing that bar just around 748, maybe a hair below that. We'll call it a point in the money. We're paying about $1.50, right? So about a third of our option there is time risk if nothing happens and we stay stuck at 748, right? At 748 at the end of the day, at 4:15 when the options stop trading, if it finished at 748, those options would be worth $1, right? So you say, geez, I've got a third of my position as time risk. You see why? Because there's still plenty of potential for that SPY trade to move, right? So you're paying for the opportunity to get that thing to start moving in your favor here. So that's why the patterns are so important. You only want to trade when you see the edge where your pattern tells you you should be pulling the trigger. If you don't know what your edge is, you shouldn't be trading at all. Okay, wait till you define your edge. So we help define edges like this for subscribers across a variety of systems. This has become one of our most popular and freshest opportunities here. Now, you see we hit 3 of those 6 contracts at a 50% gain. They're about 30 minutes later, right? We pop down. What's that pink line, by the way? That pink line is what's called the volume weighted average price. We watch that as kind of a relative sort of a guide of about where the market is trending up or down here, right? So the principle though is that, look, when we get a 50% gain, we take it, and now, and by the way, you know, if you think about it, okay, we bought 6 contracts at just under $150 a piece. That would be about $900, just a hair under $900 invested. We sold 3 of them at 221. That's like 663 back out. So the worst case would be if the other 3 contracts went to nothing at 330, you could be down about 25% on your overall position when you've sold half at 50%. So we think that's a worthy risk relative to the upside of letting it run into 330. By letting this trade run on the next 3 contracts, you see that it flipped on down to about 745 and a half. Remember, we got a 749 put. Right to sell at 749 is worth 3.5 at 745 and a half, and we're locking it down at 353, 140% at right into that 330 window there. That trade generates $840 in profit for about 2 hours of work, right? 2 hours of monitoring the trade and saying, okay, look, you put on your trade, you put your 50% price stop in, you take the first half off of plus 50, and then you pull the stop on the other half position. Once you get plus 50, you've gotten most of your risk money back. Then you're saying, okay, I'm going to let the rest run until 330, win, lose, or draw. Okay, so we'll show you more examples of that. So it's just really an interesting approach to say part of your objective in any of your trade strategies should be how can you give yourself more staying power to let the trade run when you're getting confirmation from the market that you're on the right track, right? In that case, I think of the quote from Jesse Livermore, Reminiscences of a Stock Operator, great book to read about the life and times of Jesse Livermore, even though it's technically fictionalized, but basically it's all based on Jesse Livermore, the great trader's life from 100 years ago. But the idea is that he said, you know, it wasn't my buying or my selling that made me the most money. It was my sitting. Okay. How can you sit with a trade on a 0 DT option? Well, when you get 50% gains on the first half, you can sit with it till 330, right? Whether you're sitting with it for a couple hours or for a bulk of the trading day right after 10:30 entries, you're saying, look, we're giving it a chance to turn into something potentially much bigger with very manageable risk. So you always want to set up your trade so you can make a lot more than what you're risking. That's what, especially as an options buyer, that's what we want to do is historically. So 3 distinct setups here. We've showed you 2 of them so far. The momentum long, which is we break out above that initial range high for 2 straight closes, and then we get it on volume enough to stay with the trade. Then we showed you below where we actually the third one here, the look above. We look above meaning we tried to break out and then we failed. And so then we have a short signal or a put buying signal playing it off of that failed upper end of the range, trading it potentially back towards the lower of the range. Then we'll talk more about the downside fake outs that can turn into a call, flip back up too. But the idea is that we always want that relative volume to be meaningful enough to make it worth trading. We look at the volume weighted average price or VWAP. We look at a moving averages. We look at average true range. But the idea is that those key high low points of that range are really defining points to say something key. I call it an inflection point. Something critical is happening here. We're either getting a confirmed breakout or we're faking out and going the other way. So we don't give away that here for free, but when you become a subscriber, you learn that. Now here's our graphic on those volume gates, as we call it. So the blue kind of minimum volume level that we got to see enough volume on the blue line, we call it a medium volume signal, that's only good for upside breakouts for the momentum system long. We don't trade momentum short because by the time the market's broken down too much, a lot of times you'll see value buyers come in and it'll rip back up too many times. So we want to say, look, of course, the market tends to have an uptrending bias over a longer period of time. So you're going to see that medium volume is good enough for getting you on those momentum long breakouts above that top resistance of that initial balance opening range. Green bars come in now for the bullish reversals as well. We haven't looked at those yet, but we'll look at that. But we just showed you bearish reversals must get the red maximum, right? We can only get bearish put signals if we get super high volume off of a failed breakout, right? That tells you that people got stuck. Why do these setups work so well? We got a little graphic on that too. We call it a trap, right? If you see the trap is that people think it's a breakout to the upside, the bait is that you're seeing price poking just past that first hour high or low, and then basically you're seeing that then we get a flip in the other direction, right? So if the move doesn't hold, you got a lot of people who had chased into the breakout. They're now on the wrong side, right? So once you're on the wrong side, what happens from a trading perspective? You bail, right? You say, I got to go the other way. So if you got a lot of buyers on a breakout they thought was happening, and then it's a fake out, it flips back down, then all those potential buyers are now becoming sellers who are trapped, right? The trap is that they're stuck. I mean, you look at yesterday with the trap of the Fed and saying, the market looked like it was breaking to the upside, and then it just get ripped back the other direction to the downside in the final hour of the day, right? So the principle here is that you say, okay, look, people that bought there, they're going to add more selling pressure on the failures, right? It's also why if you bought there and it's rallying, then of course, they're not feeling that pressure to sell, right? So that they're feeling the pressure to keep participating. Guess what? The institutions are driving the market. You and I, though, share a similar thing to institutions. We all want more of a good thing and less of a bad thing, right? So it's working, we want more of it to the upside. If it's not working, we want out, right? So that's what institutions are very similar that way. And we think the volume is the tell to say that a real crowd got caught. A real crowd is stuck in that trade, and thus you'll get even more volume coming back the other direction. So more trade examples. Here is a flip from the downside potential breakdown and setting up for this flip back to the upside here. So that was telling us that it was happening on enough volume there on that green kind of second tier, what we called high volume setup there, and saying that still works for a bullish flip, right? We're testing that lower end of the range. We're starting to flip. And so we told subscribers there to buy a little bit more expensive option than average. We bought the $257 a contract on the 562 strike call when we were finishing right there about 562.5. You say, whoa, that's only a half point in the money. I've got a lot of time risk there. But that's right after our 1030 lower end of the range has been established. We're about 1055. And we're saying, okay, buy those calls slightly in the money, and we rip to the first target within about 20 minutes. So we do recommend for new subscribers coming in that you not only have the email setups emailed to you in real time, but we do recommend you get the text alerts to your smartphone. So that way it's only a matter of a few minutes for you to get the alert log into your brokerage platform, 2 or 3 minutes, boom, place your order, and you're good to go, right? There's usually a reasonable enough time window in those next 5 to 10 minutes to get on into that trade. But once you get in those alerts reasonably quickly, and you saw some other examples where it pulled back against us a little bit in the first 10 or 15 minutes, and then it flips back in our favor. So the point is that get in as quickly as you can once we send out these real-time alerts to you when you become a subscriber. You see it popped up even higher here towards 570, but of course our rule was to wait till 330. So we didn't sell at the exact high here. We're not expecting to be perfectionists here, right? We got the 562 calls. They got as high as about 570 and change. So up to about $8 intrinsically, but we're out there at 569 worth about $7 intrinsically at 330, right? So it's, you paid 257, now it's 699. Even on one contract, you've made more than triple what your initial 50% gain was. You made 171%, and you took down a $700 profit, even on just an initial investment here of about $781, right? So you made about 90% on this trade for you can see being in this trade about a maximum of just under 5 hours here. So and you see that's where 330 paid off, right? Look at the reversal back down. You will always see the volume late in the day be high typically because you get a lot of people squaring their positions right near the final couple of ticks of the market, the last 5 to 10 minutes. We're not messing with volume as an indicator on the way out. We just want it as an indicator on the way in and say, look, now we just follow these trend setups here. So the key is that letting the rest run until 330 and we get the 50% gain is important, and pulling that stop is important so you don't get faked out. So here's another one where you see that we did flip back up. As I was saying, sometimes you'll see it retrace on us after we get our signal. Our entry is right there at about 594 and a half. We're buying 594 calls for $1.66 right there, right before the midpoint of the trading day, about 12:40 p.m. Eastern. 3 contracts entered 166. You're in for you can see $996. You sell half of those when you make your 50% gain. And that you see, we had to endure a little first pullback. We did not get stopped out because we used that 50% price stop, right? We might have been down 30% on that retracement of that support line. We don't want to wait for that retracement because it might not give it to us. On the flip, you can see sometimes these things come ripping back the other direction. You can see our first target is still hit here in about 35 minutes. And so first target there, and then second target hit at 214% at 330. We're up to just over 599. We've got the 594 calls worth a little over $5 intrinsically. You see, there's not much time left in the last 30 to 45 minutes of these as they go deeper in the money. We're still happy to ride those second half of the position for more than a triple total trade profit of $1,300 on your initial 996. So you see how this works to get that risk off the table and then let the rest run. That's the ultimate staying power. What does a loser look like? You can see here, this is an example of a trade that didn't work for us here. We were thinking that this was giving us an upside confirmation, right? Because we got not one, but two closes up on the breakout. It looked like outside of that range, right? And you see it's happening about 115. You can see we were buying just under 738. We're buying 740 calls, and those were pretty cheap, right? There were 84 cents. Why would we buy a couple points out of the money with only a few hours to go before the end of the day? Because our system said that this is a slow but steady uptrend that actually can be very stable historically. So we're betting on that continuing. It doesn't continue. We lose 51%. Our stop out, you see, happens around 2:40 p.m. and we're out of the trade. You say you don't want to be in hope mode there because, of course, even though it bounces back a little bit by the end of the day, you're still 2.5 points out of the money. You'd be facing a total 100% loss if you just are passive and wait on those. We take the 50% loss. If we hit that uncle point, then we're done with the trade. We're moving on. Not worth the risk of holding. Okay, so that happens sometimes, and it's part of the game. But we know that the upside is potentially much bigger. So the beauty of this strategy, of course, is that you're not sweating anything overnight. You're back to the sidelines in cash. You're waiting for the next trade, and then you're saying, okay, I don't put on a trade until the next morning after 10:30 and can get a new trade on even into 2:30. So whenever we call it a real-time entry signal, you'll know it with the real-time email and text alert that you can get. Now look at this. Look below and fail here. You can see not much volume happening after that first hour is established on the range. Pretty wide range it looks like, right? And you see though, we try to break down, they have the hard flip back up. So we got the try to break down bar that's showing some bigger volume than average, but then the flip back up is just as big. That green line there checks the boxes. We're about 661. So we're buying at that point a 660 call. The point in the money, we're paying 239 just before the midpoint of the trading day. You can see we trade right back to the VWAP line, and that actually is where we get our first target up 50%. We sell 2 of our 4 contracts. We had invested, you can see, about $956, and then you can see we're out of 2 contracts, getting back about $775 or whatever. So the idea is that $750 or so. The idea is that we're gonna try to get actually 720. We're gonna try to get about 2/3 of our capital back. I'm sorry, 3/4 of it actually back on that, selling half at a 50% gain. That's a lot of numbers there, but basically the idea being that your maximum risk is a 25% loss on the whole position once you sell half at 50% gain, right? If the other half goes to nothing. So in this case, the other half goes up a little bit more. By 330, we're out at 69.8% gain. The total profit 574. You can see averaging out here at around a 60% gain overall. So the principle is that if you had kept a stop in there on this retracement, it came back down, you'd be back to a losing position right there, right at 230. You're like, oh man, I'm going to lose on the second half. Who knows? I mean, it's possible you could. It's possible that it could go on to something much bigger. So the idea is that, look, you got minimal risk. You can let it run. So what does it look like if we close the rest at a loss after we take the first target at 50% gain? Here's an example of that. We see there's your fake out coming back after an attempted breakout, which we never got enough volume on to get on the upside. Then we get volume surging on this. Remember, I say volume's got to be the best volume. The red is the biggest volume relative to the averages that we look at. That's happening as we flip back into that range there. So right in there, we're saying this is a failure of the attempted upside breakout. And so you can see that we're getting in there about 701. We're buying the at the money 701 puts. They're at 1230. We're paying $109 a contract. That would get us 9 contracts in, $981. If you got an odd number of contracts, we sell slightly more than half. We sell 5 of our 9. And so we just round up from 4.5 to 5 here. Sell 5 of your contracts at the first target at 50%. It's going to get you most of your risk money back here. You're going to get about $800 back. And then you're saying, now I've got 4 contracts left. I give it a chance to run. It ends up at almost a 50% loss at 330 there, right? Because we're back at the strike price with 45 minutes to go at 330. And I'm saying, okay, just sell the time value at that point, take the 48.6% loss on the last piece, and this trade still made $63, right? So it puts you in a position where your risk is minimal if it doesn't fire versus much bigger reward. This method, of course, can trade plenty of downside with put options, some more fake outs. You can see it's the coming back into that range, and you got to see that red candle here. So we'll send you all the settings here when you become a subscriber. So there's definitely some predefined patterns that have to hit through those volume gates. We're just under 742 at that point, and that's coming in at about 215. You say, wow, I'm only going to be in this trade for an hour and 15 minutes at most. That's okay. Look what happens over the next hour and 15 minutes. We go $146 in per contract, sell the first piece out there, and then that first piece is sold within 15 or 20 minutes, and then but look, it bounced against us for 5 minutes, right? So you got a chance to get in, and then the next piece is cashed out, 95% gain. Sure, it went even lower. I'm not playing the woulda, coulda, shoulda game. I'm saying we just take down $636 for just over an hour's work, right? So the point is, you can rinse and repeat these. Here's a big failure. You can see this is prior August 4th here, but you can see that coming back into that range, there's your red highest possible volume relatively on that failure point there at about 451 and a half. We're buying 452 puts, only paying 79 cents. So literally in about a half hour, you make your first target. But look at what happens on your second target. This is one of the bigger examples here. When we get around a 500% gain, we're like, hey, bulls and bears get rich, hogs get slaughtered. We're right about 315. We're like, okay, 500%. We're getting kind of ready to say, take it down. We make 517%. You see that it does edge a little bit lower that day, but look, okay, that trade is going to be a much bigger home run, where your initial investment of about $950 turns into, you can see about over 3,500 bucks. You make almost 2,700 bucks on that trade. So that's the power of letting the runner run to potentially something much bigger. As you can see, it not only came back to the lower end of the prior support, which is around 448 and 3/4. By the time we're out, we're at 447 or so, right? So it just shows you the power of not having predefined notions about you must sell it at the prior support or exit the prior support or anything, but just saying, look, 500% winners is really where you get paid on half of your position. So point being that, okay, I'm kind of running out of time here, but basically here's an upside call extension where we got in at 50%. You see that we did hop out. The first piece up 50, and then the 330 rule saved us here out around 725 on the rest. And then if you'd waited to the end of the day, you'd have actually turned a profit into a loss in that second half. It's finishing around 723.7, right? It'd be worth about 70 cents. So it just shows you why you want to have a plan on how you take these. One from a few months ago, real quick. There's one of those fake outs on the downside. It flips back up on good volume. We had the 653 calls when SPY's about 653. About 40 minutes later, we're taking the first target down. Next one out at 330. 106%, 668. So even bigger winner hit 2 days later. There's an extension move. You get that big breakout. That gave you about 10 minutes to get in there, and then a few minutes after you get in, you're already getting your 50% target on the first piece. The rest runs to 230%. Usually the best trades are right from the start. So that's what you want to see. 1,300 bucks made. All these examples, of course, are from the past where we can't guarantee future performance, but know that we're going to help you take advantage of this, right? So with just my last few minutes, I want to show you a super special we set up for you, how you can get these real-time same-day SPY trader trade alerts with all the education that a longer-term subscriber would get, with all the support, and basically because it's such a great kind of a trial offer that basically we're only going to make it available to the first 25 traders. Normally 12 months of trade alerts here would cost you $297 a month times 12 months. It would cost you over $3,500 in value. Okay, $297 a month times 12. We're going to give with all the weekly video training that I did with all the settings and rules sheet, dedicated email to reach my analyst team and myself if you've got a question on the system. I'm going to slash it for you today. We're going to take that $3,500 down. And we said, look, hey, I showed you a bunch of examples where you could have easily made 1,300 bucks or more on a variety of trades. So if that wasn't enough, I'm going to give you this super special promo code today and today only. Take this promo code on the special page I'm about to give you. Anthony will help post it for me. SPY1000. Take it down an extra grand. Take you all the way down for a full year access for basically the cost of 1 month's access normally, right? $297 for a full year's access. We'll take you to the end of July 2027 for just 297 bucks, less than $1 a day. So there's your link we've set up for you. It's bigtrends.com/corner. I've got just like 2 minutes. Okay. So basically, let me just show you real quick how you can do this. So I'm going to go there right now. Just type it into your webpage or copy over the link that Anthony posts in your chat there. bigtrends.com/corner. Thanks, Anthony, for doing that. Okay. And then basically, you'll notice how this works here. That waiting for it to pop up here as well. It'll just reroute it to this special order page link. By the time you get to our order page, what I love about them, they're really KISS principle, keeping it simple. By the time you get here, you know what to do. But if you don't, this is what I want to show you real quick. We're reminding you even on what you're getting here. You're getting not a month, you're getting 12 months of access for basically the price of one. You're getting, it's like buy one, get 11 more free, right? And so massive value here, massive leverage. That's what same day SPY options give you. We want to give you that same leverage with your subscription investment here. Keep the vast majority of your money working hard for you in your trading portfolio. So we remind you, there's your promo code, SPY1000, when you go to bigtrends.com/corner. So what do you do with that promo code? I copy and paste it, but you can, I'll type it in, but there's your link that you got to click on. Have a promo code link right there. It'll pop up that promo code box, either paste it in or type it in, SPY1000, and then you hit the apply button, and there you go. Instant $1,000 savings today and today only on that special page at bigtrends.com/corner. So it takes you all the way down to 297. If you got any questions, you can call our toll-free 800 Big Trends number, 800-244-8736. Make a note of it here, or drop us an email, clientcare@bigtrends.com. Tell us you saw us on Traders Corner, and basically we'll make sure that we get everything, help you get set up to lock in this massive savings of a full year's investment for only $297. Just review terms and conditions, hit the I agree button, and whether you put your information on that page, or whether you click through to PayPal, you don't have to type anything else. If you use PayPal, you just click through to PayPal securely. You lock in a full year's value. I'm out of time, ready for many more great fellow traders and speakers to come, so stick with all of them. If you got any questions, let us know. And thanks, Anthony, for having me. It's always a pleasure to be with you and to kick off today's event.
Oh, thank you so much, Price. We really appreciate you. Outstanding presentation as usual, and a terrific way to kick off today's summit. Thank you for sharing your trading process and for putting together such a generous offer for our attendees. So be sure to check that out. Everyone, if you'd like to learn more about Price's program, the link is now available in the chat. Our next presenter focuses on another area where institutional money leaves clues every single day. Melissa Armo is the founder of the Stock Swoosh and one of today's leading educators in institutional trading, institutional gap trading. She's helped thousands of traders understand how to identify the stocks attracting professional money during the opening hour of the trading day. Today, she'll share how trading golden gaps can potentially create opportunities in stocks, options, swing trading, and long-term investing. So I guarantee you're going to enjoy this. So please welcome Melissa Armo.
Hi, I can't share the screen yet.
I know I'm working on it, Melissa. How are you?
I am good. Hold on.
You're always good.
Hold on. Let me see. Can you see it?
Yeah.
Okay. Where would I see questions though?
Questions are going to be up to the far right there where it says people, and then next to people there's chat, and then next to chat there's questions.
Oh, there we go. There we go.
Yeah.
I got it. Now, if I have my chart up, if I have pull this up here, can you see it?
Yeah, we could see that.
Okay, I can go back and forth. Great. Thanks for having me. I think I have to 11:15. Is that correct?
Yep, that's correct.
Wonderful. Great to be here, everyone. And feel free to ask questions as we go along here today. It is a very, very interesting time right now in the market. For those of you that don't know what I do, my name is Melissa Armo. I own my own company called the Stock Swoosh. I trade every day. I trade gaps, which we're going to talk about. But guess what? I'm mostly short. So we have had a phenomenal period here. The market has been falling off a cliff every single day almost for the last month. So it's been shocking to people. It's been devastating to some people that buy dips, that go long, that buy support. I've gotten lots of emails from strangers and people, asking me questions about my class because they're losing money trading. And that's typically when people need help. When people start to lose money and they're doing something, then all of a sudden it stops, they wonder why. So we're going to flip back and forth here today. Of course, we had the Fed meeting yesterday. Market had a positive reaction to that initially, and then the market fell off a cliff after that too. So we're going to talk about trading on the side of institutional money and gaps. And again, like I said, I prefer to short, which I find gives me a niche because a lot of day traders actually prefer to go long. Why? I don't know. I don't know really. Shorting is fun. You can make a lot of money shorting. You can make money fast shorting. So there's really lots and lots of benefits to shorting. And if you've never shorted before, it's actually, an eye-opening experience because again, stocks move quite fast to the downside because panic comes in. If you have questions, you can email me at melissa@thestockswoosh.com. I do appear on TV. I talk about the stock market. I've been talking about the fact that I think that the Fed ends up raising interest rates at some point this year. I don't know when. They didn't yesterday. I didn't expect they would, but they might. They might later in the year, and that's going to be a shock to the market too. You can always call me at 929-3200 GAP. I'm a real person. I live in New York City, and I've been trading for almost 20 years. So it is summer. It's a beautiful picture of Central Park. I took that picture. And earnings season is right now. Tonight we have two big earnings, Apple and Amazon. Am I in those trades? No, I don't know what they're going to do in earnings, but I focus on stocks that are gapping, which we're going to talk about, and a lot of stocks gap on earnings. Sometimes they gap up, sometimes they gap down. You don't know until after the earnings, but it's a very busy time to trade. So now is actually a good time to make money. Why? Because it's busy. And again, if you were in the right direction in many stocks or the market, this week, you made money. If you were in the wrong direction, you lost. As simple as it sounds, you actually have to be in the right direction to make money. And a lot of traders, when they lose, are in the wrong direction. So again, everybody wants to trade for different reasons. Some people want part-time money. They're part-time trading. Some people are doing options. Some people are doing day trades. either way, even if you want to do this full time, it means making more money is the point of, yes, you can buy things for yourself, but it really means peace of mind, because in today's economy, again, interest rates could go up. They're still, I think, too high. I still think inflation is too high. So, having more money gives you peace of mind. That's really what it is about. I put the room stats in here. I have to update this, but this is through last week, the 21st. We're over $1 million for the year in the room. My average risk is $5,000 a trade. I have the winners and the losers, 64% win ratio year to date. Again, this doesn't include the last week. And then I have the options newsletter results. I risk more for my options, just so you know. So the total's more, but it's the same system that I use. My gap system, again, many of these are shorts, some are longs though. And I'm risking an average of around $8,000 a trade. Our stats, though, are 64% win ratio. So whether you want to do options or day trades with me and how much you want to risk is up to you. Now you know you can. This is new this year for the last 2 months ago, whatever. You can trade day trades. You can trade on margin, and you can have a margin account, and you don't need 25,000 anymore. So that's something new this year, which has really opened up a lot of availability for people to start trading with smaller accounts. So if you have 10 grand, you can basically trade with 40,000 in buying power, which is pretty good, Or if you have 20, you can trade with 80. So again, this is not through the last week, but it's through up to last week, the 21st. We're up over 2.8 million for the year. Again, I've been trading for almost 20 years. So I don't do anything else. What I'm talking today, I don't do anything else. I do day trades, I do options, but it's the same system. So if you're someone that wants to trade and you're back and forth and you really want to do this for a career, you need a trading system. You're not going to become successful if you don't. And I'm sorry to say that buying the dip is not a system. If it was that easy to just buy every dip and everything, no one would ever lose any money. And that's one of the reasons that people are really getting crushed lately. So what is the crux of the problem why many people lose? Why don't people win? Again, what am I even talking about here? The crux of the problem refers to the core, heart, and most critical part of an issue. It is a fundamental root cause or decisive point that must be addressed to resolve a challenge. Like if you are trading and losing, or if you're making money sometimes and then giving it back. Getting to the crux means peeling back peripheral details to find out what everything really boils down to. Like, why are you losing if you're losing? Because you don't have a system that consistently works in any market condition, whether it's bullish, whether it's bearish, whether whatever. You need something that's going to work in any time frame. The problem is we had that rally after the ceasefire that almost went straight up in the market. Let me just pull that up real quick. And then everybody got really fat and happy with longs. Here, yes, if you went long here, you made money. Yes, we made 1 million new highs, but people had to know this wasn't going to last. This was really an anomaly, really an anomaly in the market. So again, you have to be able to make money if the market goes in a downturn too. What are you going to do? You're going to go long every day? No, it's going to be a disaster. And that's unfortunately what has been happening to people recently. So you need a system. For me, my system is a checklist. So I get up every morning and I find gaps. We're going to talk about what a gap is in a minute. And I rate the gap. If the gap rates 20 points or more using my 26-point checklist, I will take the gap in the direction of the gap. So here are some trades I'm just going to go over. These are back from early July, late June. 2 weeks of trades. My point about the consistency is in order to make some headway for yourself by the end of the year, 12 months from now, you've got to be consistent with what you're doing. You can't say, I'm going long because the market's rallying, or I'm going to buy this because Trump tweeted. There's no consistency in that. Do you know what I'm saying? So I'm just going to go through 2 weeks of trades. Monday on the 29th, we didn't do anything. This is the week before July 4th. Tuesday, then, we did Netflix. Okay, so let's talk about what a gap is. So I'm looking every morning for a stock to gap. So what's a gap? When a stock closes at one price at 4 o'clock and opens at a different price at 9:30. That's what I look for every day. Then I go through a point system, a rating system to determine, is this gap rate 20 points or more? Is it going to fall or is it going to rally? In this case here, I said, you know what? This is going to fall. This was June 30th, and we did a short. So we entered at 73.05, boom, got out at 72.15, made $4,500. So this was a short. This was a day trade. You would have needed a margin account to do this, or you could have done a put. You could have done a put here too. But this is a gap. It's a difference between the close and the open. There are also bullish gaps, but that was a bearish gaps. 6:30, we did Meta as well. This doesn't look like much, but actually this was a good trade. Closed here, gap down, drop, boom, we shorted the tail. entered 555.70, exited 552, made $4,440. So in this little tally guy, we were short and made money and got out with profit. That's all you really need every day. Take it, get the move, get out, done, boom. That's all that you need every day, every day, every day. You could look for something like that. Again, I'm looking for the same thing every day. Then Wednesday, we did NVIDIA. What was this? The first here. Stock closed here, gap down. Again, we got the tail. Boom. This is a sell-off here. That is what this is representing. And again, closed here, gap down. So at 4 o'clock, it closed at one price, and then at 9:30, it opened at a lower price. Made 6,300 on that. And then we also did INTC. We've been shorting this here. Closed here, gap down. This was July 1st, fell off a cliff. And it's interesting, again, besides the ceasefire, that this one sector with SanDisk and Mu and everything in it, the bottom line is that sector rallied. So that entire sector lifted the market. And then when this sector started selling off, which it has recently, the market's been crashing too. So made 11,360 that day. Friday, I was off then on the 2nd for the holiday. So that we had 4 winners, 0 losers, 0 break even, 100% win ratio, made 26,600 in that 1 week. Then I closed the room for July 4th. It was a nice holiday, nice time to take off. It was a nice break. Came back then, this is week 2, just showing you 2 weeks of trades with to show you the consistency. 7/13, we did INTC again. Here we have it. Stock closed here, gap down, open, drop, boom, it's a short. Shorted at 104.60, got out at 102.50, made 6,300. You could have taken less size. You could have taken 500 shares. You take whatever you can afford to risk. Again, you have to look at your margin, your buying power, the size of your cash. But it's the idea of being consistent. It's the idea of getting the direction right. If you're long here, you're down. You're losing. Then on the 14th, we did IBM. This was a good one. This was earnings. Stock closed here, gap down. This was the start of earnings season. You could have bought a put. We did puts in this too, but you could have bought a put. You could have held it. You could have done it as a day trade. Got in, got out. Shorted at 224.10. Exited at 219.25. Now I want to show you where this went. So I don't always get the low of the day exit. I'm not even worried about that. I'm looking to get in, get out. I trade in the morning fast and quick. Again, this stock closed up here at 290. This stock gap down here at 220 something and change, 225 and change or whatever it opened. This fell. So if you're going long this for a gap fill, which a lot of people think works, and it does not work. That does not work consistently as a way to make money in the market. I'm looking to always take the gap the direction of the gap if it rates good. So you say, well, wait a minute, some flip. Yes, I'm not doing those. That's the whole point of the rating system. You can't go long every gap down. You can't short every gap down. That's why I'm going through the points. Okay. Then Wednesday I was off the 15th and Thursday was off the 15th. And then Friday we did Netflix, which I lost in on the 17th. This was earnings. Stock closed here, gap down. Here's a case. I did do it and it flipped. So I lost. Then I did a second trade. We shorted the market. This, I don't know if any of you remembers this, was again just 2 weeks ago. And look where the price of market is from now. It's crazy, actually. Market closed here, gap down. We shorted this, boom. So then I had a nice recovery here after the Netflix stock shorted the market, and I had a huge trade. Now, again, if you cannot afford to take this as a margin trade because the market's expensive now, even the options are expensive though, you could have done a daily put, the closest to the strike of the expiration date of the 17th, and you could have bought the put, got in, got out, where I did the day trade. But I did do the day trade and made 25,650. And it was just this taily guy. And again, this is a gap down. So again, 8 winners this week, 1 loser, 88% win ratio, made 58,000. So you see how you have to have more winners than losers. You have to have a consistent system. You have to keep doing what you're doing as long as you can do it under any market condition. Because if you need the market to get your longs, you're going to lose when the market sells off, which it did this past week. If you need the market to drop and you want to go long, whatever, it's the same thing in reverse. So how did I know to do all these trades? I understood what to do. A lot of people just want to take trades blindly from people and just sign up for subscriptions. Well, that's fine. You could do that. If you don't understand why the person's doing the trade or you don't understand anything about the behind work of it, you will screw up the trade. Learning helps your conviction. Like, again, I don't have this in here. I don't think I had time to put it in here. Tesla was a big one. We did. I don't think I had time to put this in here. because this was just the other day. So we did this. So Tesla was a short. So again, in the morning, in the room, I have this video on YouTube. I said, if 100% conviction just falls today, do it, do it, do it. And everybody did it, and we made money. So whether you do a day trade, whether you do a put. Now, how did I know 100% that that would work? Because again, the rating system told me it would work. So again, this isn't about fundamentals. If you want to read about fundamentals and that it helps you take the trade, fine. But I don't have time to do that in the morning. So for me, it's the consistency of doing the same thing every day that works. One of the reasons this market's been tricky for people is because Trump tweets sometimes, flips people's trades around, and then people get upset or they get worried or they don't want to do a short, or maybe they're scared even in a long that something could happen with the war. You have to have conviction in your trade. You have to have the consistency in it to take the risk, whether you take a small size or a big size. So how do I get that? I go through the checklist. This is what I teach in my class. I teach a class once a month on my method, and then I use it every day in the room. And then I call the trades in the room. People do them with me live. But I mean, again, you know, we're getting a lot of gaps right now because it's earnings season. I just showed you the Tesla one was really good. And there's some tonight, but I don't know what they're going to do or what we're going to do tomorrow. But I know I'm going to watch them. And then I'm going to rate them. And then I'll make a decision tomorrow morning, just like I did with the Tesla. But one of the best gaps we had was the IBM, which we did do puts in, and I did do the day trade into. So on Tuesday the 14th, I do options as well. I sent this trade out to the newsletter subscribers in the morning, the 225 IBM puts. I sent it before the open. So you can't do this trade until after the open. But if you did, you would have bought the put, got the drop, do. Again, buying a put is a short. If you have a retirement account, maybe you know that's something you want to trade. It's up to you. You have to find out if you can trade your retirement account. But again, you can't short on margin in a retirement account. You can buy stocks, but you can't short. But you could buy puts. So that's something worth checking out for people, and some people with me are doing that. So instead of shorting on the margin for the price of the 225, you could have bought the put for 950. Again, 10 contracts cost 9,500, was 100% return on investment. This was a nice trade. You would have held it overnight to get the drop. What if you did one? Could have made 950. Again, that's a nice trade. So if you don't like doing day trades, if you want to do options, you can use my system for options. Any questions here so far? Trying to watch my time here. So sometimes people come to me and they want to trade full time. It's not a full-time hour job though. You get up in the morning, do your pre-work, do the ratings, get ready, get organized for the open. We trade in the first hour, then we're done. Now, if you're doing options, okay, fine. You got to check them. I check them in the morning, check them at lunch. We usually are entering the trades in the morning. You can put the trade on, wait it out. You could put a sell order in after you get it. You don't even have to watch it. So again, you could be more flexible, or you don't, maybe you work and you work full time and you can't even be in the room and you want to do the options. That's fine too. The nice thing about trading as a job is you don't have to work weekends ever. You're done every day, even if you're watching things before. It's really not a lot of hours in the week. So it's something that everybody can do if you want to schedule your time to do it. And it's usually, I find people, if they want to change careers, you have to find a way to make time in your life right now with your job until you can transition to make enough money to cover it to quit. So you have to figure out a way to do it, even if you're only trading 2 days a week or 3 days a week or whatever the case may be. But the point I'm trying to make is that you need the right tools to be successful and to get good results. Again, I'm getting a lot of emails from people recently. They're losing money and getting killed because the market is falling and they're buying every dip. The market's getting bought today. So people are buying the dip today. I'm not, but people are. So again, are we still lower? Yeah, I think we are still lower. So there's no way in hell I'm buying this market today. I said a couple months ago that I thought this was the summer of shorts. It turned out to be the summer of shorts. And I didn't think we'd make new highs this summer, and we won't. I don't even know now if we'll make new highs before the end of the year. We could, but I don't even know if we will. If we keep selling off, we won't have time to do it. So that means that everybody that's buying support and everyone that's buying the dip and everyone that keeps wanting to go long, these sectors that ran up now that have been crushed, if people think they're going to make money going long, and that's all people want to do, how are you going to make any money in the next 5 months if all you want to do is go long? You're not going to. You're going to lose. So again, sometimes the environment changes And what you're doing or might have done for 6 months or 3 months or 2 months or whatever worked, and then it stops working. But the point is, it never really worked consistently anyways. Do you follow what I mean? Like what I'm doing, I've been doing for almost 20 years. So, and I've done it through bullish markets and bearish markets. Now, because I prefer to short, if the market turns, let's pull this up here. If the market turns and goes in a downtrend, which it's not yet, but say it does, will I make more money? Maybe, because then we'll have more weeks like we had the last week. But to be honest with you, I mean, I could have held shorts I was in, puts I was in, overnight trades I was in. I could have held them longer. I didn't. I got out of trades Tuesday. I was in puts coming into this week. But I got out of trades because of the fact that I didn't know what the Fed would say or do. I didn't think they were going to lower rates. So I took the safe thing, which was exit the trades I was in with profit. But I wouldn't be surprised if the market turns. You could say, well, we're not that far off the highs. True, but what does that have to do with anything? It has absolutely nothing to do with anything at all, really. So again, I urge people to really know what to do. Really know what to do. Like now is not a time for people that don't know what to do to trade. You really need the right tools to be successful and to get good results. So I have a system that I use where I get up in the morning, I rate the gap. I do go long sometimes. We do bullish gaps. We do bearish gaps. I looked at Microsoft today. I could have gone long that. I didn't, but maybe I will tomorrow. We'll see. I wasn't crazy about that though. But I will look at a good bullish gap if I see it. And again, Apple's out tonight. Who knows? Apple could gap up. Apple could be a good long tomorrow. That chart's been screaming higher, even though that tumbled today. So, but I prefer to short for the reasons I told you. Most traders don't know how to short. They're not good at shorting. They don't know where to short. And also stocks to the downside fall much, much faster than they ever go and rally. So I use a 26-point checklist to figure out what I'm doing. And the whole point of panic is exactly what you saw. And we're talking about institutional money here. This is selling. In fact, let's look at the 15-minute chart. Yes, well, you can see it right here. Look at this. So I can see here yesterday that people went long during the Fed announcement. While I was talking, people went long in here. And then we totally crashed. So anyone that went long from noon all the way up till 2:45 while he was talking lost yesterday. Unless you got out, in that rally at the very point, perfect point. Again, I didn't go long. I'm just saying, you see how quickly this went doink like that. So you have a 2-hour rally, 3-hour rally that's lost in 45 minutes. And that's how quickly we're losing this now. We're falling right now. Look at this. We could even break today's low and go red today. I don't even know. It's 10:53. Again, I didn't go long here today, and I'm not shorting a gap up, but we're falling right now. Look at this. So again, selling comes in fast and quick. So how do I determine what the smart money is doing? I use my tools. It's my rating system. It's based on technical analysis. It's based on a chart. I do the work. I do the pre-work. You got to have charts. You got to have live charts. You got to have good charts. So again, if you want to become a professional to do this and make real money, like serious money, and money enough that could, help you retire early or have extra savings or replace your job or do it as a career, then you have to take it seriously. Otherwise, you're back and forth willy-nilly and not really getting anywhere, losing or break even or making a little, which is not really worth anyone's time. So I find gaps and rate them using a checklist. Gaps have to be qualified. The checklist tells you what to look for in the price of the stock. I'm trading the side of institutional money for the momentum moves. Big momentum equals big money. What happened yesterday? We sold off. That was institutional selling. That was big, big money that came in and dumped it. You could say why. You could say they didn't believe the Fed. You didn't like what he said. The war, whatever. We sold off. Okay. Any questions here? I don't see any questions. I don't know if I'm looking at the right place. I think I am looking at questions. Does anyone have any questions? Okay. Getting back to what I was saying, though, a lot of people, have been trading the news, trading Trump's tweets, you're going to get burned. I mean, you are getting burned if you're doing that now. So yeah, sometimes maybe that worked in the last 12 months, but that's not a strategy either. You know what I mean? So again, you have to look at what's really going on in the chart. So my tools are the rating system. Again, it's on a daily chart. I use this tool each morning to determine what stock to trade and when. It is a very useful tool in any market, but particularly in this type of market, because we can whip around. It can also help you decide if you should exit a long. So say you're in a short, you get a good gap, it rates good as a gap to short, and you're in it long. Well, then you can exit the long. You're like, oh my God, Melissa's going to short this today. I better get out. It's going to fall. There's another way to use it. And it's the whole point of taking the guesswork out of your trading, because that's what people are doing a lot. They're guessing, and they're really guessing a lot now. Greg has a question. Let me look at it. How long does it take to score each opportunity across a 26-point checklist? Is it scoring a manual automated process? I don't have anything automated. If that's something you want to do on your own, that's up to you. So it is a manual process, which I use my eyes and use my brain each morning. Now, I would say I open the room at 9 a.m. We start trading at 9:30. I would say give yourself an hour. I think that's fine. You could start at 8 or 8:30. Again, room opens at 9. I put my picks in the room in the morning at 9. I don't like to rush it though. So I would say if you're brand new, it probably will take you 10 minutes to rate a gap. Once you get used to doing it, it could take you 5 or less. But I'm not rating 10,000 things. I'm making a small watch list. And then I go through and I say this one rates better than this one. And again, if I get a gap that rates 25, that's better than one that rates 20. Do you know what I'm saying? But it doesn't take as long as you think. But if you want to automate it, then that's up to you. So in order to become successful in the market, you have to become an expert, a specialist in one specific strategy. I choose a strategy that reads institutional money. I did not go long this market since, I don't even remember. And again, I called the summer of shorts like some point in early June. We've sold off since then off the high. We were very early in puts and in shorts, and I could have held a lot of them. And I didn't, because the point of trading is not to hold and squeeze every penny and be a greedy pig. The point is to make money. So if you're in a trade and you have $5,000 invested in a put and you hold it overnight and you get up the next day and you're up 100%, I mean, you really should get out. If you don't get out, then that 5,000 is still being sucked up in that trade, and it could reverse against you the next day. That's another common error that traders make. Even if they take a good trade, they get to be pigs. So again, what I usually do is, and we've been doing this, like I did the 700s, I did the 685s. I keep doing different strikes. So I'll do one, take it, get out, book the money, take another one, get out, book the money, take another one, get out, book the money. That's what I usually do. So I can get the whole move of the market all the way down by chunking it out. That's a better way, because again, you're still using up that money in the trade until you get out. It's never over to the fat lady sings, you're not out of the trade. So when I'm seeing the type of selling that I've been seeing, I know I'm right on point here, that institutional money is, number one, not buying the market, and number two, they're dumping the market. And again, we haven't even had a scary sell-off yet. I have to watch my time here. This isn't a scary sell-off. This isn't a scary sell-off at all. We could have a scary sell-off, I don't know, in September. This is not a scary sell-off. I'm waiting for a scary sell-off. I want to make sure I'm in it when it happens. It could happen overnight in a gap. What would be a scary sell-off? I'm just making this up. Let's say everything bombs tonight. I don't know. And I'm not in Amazon. I'm not in Apple. Don't get me wrong here. I'm not in anything. But if again, those are down and something happens with the war, this could be tomorrow, or it could be Monday, or it could be next Wednesday. Would that be scary? That would start to look a little scarier, especially if we open here and kept dropping. I mean, look at this. This is probably where we're going, actually. See that? So that will be a big, big shocker-rooney for everybody. Literally. Like, people look at this and say, well, this is extended. This is extended here. This is a big sell that's extended. This isn't extended. This isn't extended at all. Do you follow me? Like, a scary sell-off would be a big gap down here, and then boom, would look like this, really, which we did. It would look like similar to that or worse. This is a good example of institutional money. They dumped Tesla. I don't know why. I didn't read the earnings. I don't have time to do that crap. And it doesn't matter. The rating system told me this would fall. So I want to short it. I want to do a put. I want to do it. Anyways, it's power money in the market. This brings momentum and opportunity because if you get in the right direction, you can make money. And if you're in the wrong direction, you're going to lose. People want to blame themselves and say, well, I did do this and I should have done that and I killed it. You probably didn't have a good trade if you lost. That's the facts. You probably were in the wrong direction. So again, reading this is a skill. You come and take my class, you're going to learn a skill set. You're going to learn how to read gaps. You're going to learn how to read institutional money. You're going to learn how to short. That in and of itself is a skill set. Most people, when they see something down, like Tesla, will want to go long it. They just automatically say, oh my God, this, again, like the market, I think this is just down too much now. It can't keep going down. You know when it can't keep going down? When it's at zero. I wouldn't short it at zero. I wouldn't short it at a penny. This idea that people think that things are extended is total nonsense. It's so crazy, you know? So reading this is a skill. The skill can be acquired through education. So trading education is very important. And far too often traders don't understand exactly how important it is because it's make or break it if you're going to make money or lose. And you can be making money for 6 months going on the market if it's making new highs every week. And then all of a sudden it crashes and then you lose. You can lose all the money you made in 6 months in a week or a month. And that is exactly what is happening to people this summer. And then it becomes increasingly more difficult for people to spend the money in education when they're down, when they're losing, which is when they need it. Do you follow me? And they have to dig themselves out of a hole. And it's just the way that it is. But sometimes if you're in a bad spot, take it for what it's worth and say, wait a minute, maybe I need to realize that what I was doing wasn't working anyways. And this is my chance to actually learn something that's actually half decent and good. And don't forget, it's okay to ask for help and admit you don't know and say, I don't know. I don't know why this did this. I don't know why my longs didn't work. I don't know why this didn't go. It's okay to admit that what you're doing is not working. No one's going to make you feel stupid. Most day traders lose. So you have to say, I don't know what I'm doing. I need help, Melissa. Okay. Tell me what you're doing. And then you go from there. The sooner you come to terms with reality, if you're losing money, that you don't know what you're doing and that you need help, you're going to have to pay someone that help because no one's going to help you for free. And no one's going to help you for next to no money either. That's another thing. So get real with it. You know what I mean? Like this is the real world here. I mean, I live in New York City. It doesn't get any more real than this. Ask Anthony. The faster you can turn it around, and you can turn it around, you can turn it around quickly. So, I mean, again, you could be in a downturn and losing, and then you could turn it around quickly. And how do you do that? A string of green days, getting on the right track, getting your confidence back up, okay? Because once you're losing, your confidence is in the toilet. So how can you become successful trading? It's not by risking a lot. It's by being consistent. The focus. I get up in the morning, I'm looking for bearish gaps first. If I don't find any that rate 20 points or more, then I'm going to look for bullish gaps. I get up in the morning and I'm looking at the market and I'm looking at earnings and I'm seeing what I can do, what rate's good or not. If I don't get anything, I don't do anything. I have a very strict focus. Okay. So you have to look at it like you're running your own business. You have to be very practical about it, very professional. So again, what is a golden gap and what is a gap? A stock gap from the opening price today is different than the closing price of yesterday's trading. A gap is a break in price action from one day to the next. Simple. So almost everything gaps every day. I mean, that's a fact. So this closed here, gap down. This was Netflix. This sold off. Why did this reverse here? Again, I stopped in that day trade. I think this is overdone here. Actually, let's look at this today. I think this is just overplayed here at this point now. Like I might watch Netflix a couple weeks from now or in a month. Oh, this tried to fall today. Let's look. This is a little overplayed. Actually, I could have done this today. I didn't think of looking at this today. So again, I think this got overplayed here. But this was a bearish gap, and I did not go long this. There was another one, fell. Here was a bullish gap, close here, gapped up, rallied. Didn't go long that, but that is a bullish gap. Again, here's the market. We've been shorting this, close to your gap down. Feels like a long time ago, but it was only 2 weeks ago. Fell, close to your gap down, dropped. This was Friday, again, 2 weeks ago. Rallied, closed, down. So you have to determine who's in control. If the bulls are in control, you got to be long. If the bears are in control, you want to be short. So it's who's in control. Again, if you're on the right side of the control, you will win. If you're on the wrong side, you will lose. Period. End of story. That's just how it is. Whether you do day trades, whether you do swing trades, whether you do options, it doesn't matter. The control, institutional money is in the market and is in control at all times, even if you think it's not, it is. This is what traders find very tricky. And sometimes they get frustrating and think everyone's against them. It's like, no, well, you shouldn't have been long anyways there. You know what I'm saying? So what is a golden gap? A golden gap is a gap that rates 20 points or more per the Golden Gap 26-point rating system. This is a system I created. This is what you come and learn from me. This is how I make money. You can take the trade in the direction of the gap. You do the trade as a day trade or an option. So again, how do I know ahead of time? Like I knew Tesla would fall before it did that. I don't get in the trade until after the open, but I rated it and then I said, this is going to fall. And then I wait for the setup and then I get in, then I short it. But it's the checklist that tells you what to trade and what to look for every day. Here's another one we did Google. This was a while ago, 7-8. We did the 355 Google puts. Wait, what day was that? 7-8. God, this feels like a while ago. Here, close to your gap down, fell, close to your gap down, boom, zoom. So you could have got out here or you could have got out here. Why? Because it gapped down. So you would have been up. Again, do you see where this is? Snug as a bug. Fell under 350, and here we did the 355s. How do you make money in options? Again, you got to get it through the strike. So sometimes I'm doing them at the money. Sometimes I do it away from the money. I could have done the 350s here, and then that would have been the target. When it hit it, boom, out, done. So again, sometimes it depends on the cost. This wasn't too crazy. 530 for one. Again, took an advanced trader risk. I'm trading for a while. Sold at 10, almost 100%. Got out the next day. If you did two, again, you could have made 940. Again, you're in one day, out the next, done. So the point I'm trying to make is if you learn how to read the footprints of big position players before the momentum occurs, because that's how you're making money. The momentum is coming in and it's carrying the trade forward. So we made money shorting in the market because we're in puts because the momentum just carried it down, carried it down, carried it down. You don't have to do anything. You just wait and let it carry you like you're floating in the pool. The momentum occurs and you can take the position in the right direction and get out after the move happens for profit. Again, you do have to make sure you book the money, but you have to understand how to trade with this side of power and you need to know how to find it. So that's what a lot of people don't know how to do. Knowing how to read what institutional money looks like is essential to become a successful trader. The benefit is that you can win big trading on the side of power, and that is a benefit. And like I said earlier, too many people are all over the place. Having a system to follow daily gives you a focus. And you could be anywhere in the world and trade. You don't have to be in New York like me. I have some people in different countries. So why did I decide to do gaps? Gaps are the most powerful show of price action in a chart. Gaps have large moves. Gaps can move up or down. Some of the biggest momentum moves in a daily chart come actually from a gap. When I trade, I'm looking for and trading momentum. Then whether you have a small size or a large size, you will get a good risk to reward because that's the point. So I get up in the morning, rate the gap. This is what you learn in my class from me. You will also learn the entries. Whether you want to do them as day trades or options is up to you. But the rating system is the key factor that helps me determine who's in control to decide, do I want to do a put? If I'm doing a put, then the control is on the side of the bears. If I'm shorting as a day trade, the control is on the side of the bears. You follow me? So it's a fight to the death, the bears or the bulls. So today we're fighting a little bit here. This is a little fight going on in the market. Who's going to win? Well, it's too early in the day to see. So is this a total shift to control back in the side of the bulls? No. But for today, it's a temporary. So again, if you went long today, you made money. Now, I did not do this. I told you why. But the day's too early. I don't know. We have 5 hours left of the day. Who can tell? But again, it would be very, 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 very bearish if we end up closing near the lows in this, whether we turn red or just have a little baby green with a tail. That would not be bullish. Do you understand? I did nothing in that today. But it's about the control. You're always looking for a big flow of money to see if it's going in a certain direction, because that's what moves the market. That's what moves stocks. That's what creates momentum and sets the trend in charts. When you're looking for institutional money, you're really reading the side of power in a stock. You want to be in the side of the power in order for you to make money trading. Institutional money is in charge of the market and stocks at all times. So I only trade gaps. I only trade gaps for rate 20 points or more. Every day I'm looking for day trades. I call the trades in the room. You can do the trades with me in the room, but you got to be there live. The options go to your newsletter as a newsletter to your email. But if you want the day trades, you have to be in the room. And I like to get out fast. Sometimes they keep going, but I think it's easier to get out of day trades very quickly. And I'm just very, very consistent with what I do. Mostly shorting, like I said, mostly doing, options and day trades, but I will occasionally go long. Again, a put is a short and an option, okay? And I'm looking for institutional money. And I just find that it's actually, once you learn how to short, it's really easy. It's fun. You can make a lot of money really fast because panic comes in quickly. Yesterday was a good example of that, but there's many other examples of that. I could give many other days if I had more time to talk here. So I'm going to have to skip through, I think, some slides here to get to the end. But you want to think about what I said today. Think intellectually. Buying support is actually not a consistent strategy. It works if something's in a power trend. It works if something is continuing up like the market did from that ceasefire flip. But that is not something that happens. That was an anomaly. It's not something that happens all the time. It was that easy to just buy every dip or buy every support level. No one would ever lose. And there's 20 million support levels and everything. So how do you know which one's going to hold? The problem is people are just guessing now. They're just gambling. They think this one's going to hold. Today people think this is going to hold. And then what if it doesn't? Then they'll buy again. They think that one's going to hold. Do you see what I'm saying? So how do you make money in the market? Trade a system that consistently works. I'm looking for stocks. I rate the gap, and I'm looking to trade them early in the morning. And you've got to have a structure to do it. I'm looking for a big move in the day, early confirmation between 9:30 and 10, precise entries with follow through, and a good target. So I'm looking for one, a minimum. Sometimes I get more than one, but this is what you'd learn from me, and this is how you would make money. And then you can take my trades and duplicate my results. You decide your sizing. But like I said, you've got to understand what to do, because in a tricky market, it helps you. If things are not tricky, fine. But again, what if the market's tricky for the next 5 months? What are you going to do? Understanding what to do really, really helps you. But don't think just because you're losing and you've been trying to do this for years and you've been failing, it doesn't mean you can never do it. You can do it. You just don't have the right system. Your dreams are possible. You just got to be realistic and grounded how you're going to achieve them. And again, I like the idea of trading in the morning and being done. I don't want to trade all day. I don't want to sit at my desk all day. I don't want to do it in the summer. I don't want to do it in the winter. But again, it's one of these things where everybody is busy. Everyone has things to do. If you can make a couple $1,000s in the morning in an hour, that's a good lifestyle. So empower yourself today. If you want to learn how to trade, I teach my class. It's once a month. It's a complete system. It's called the Golden Gap course. It's a full course in how to strategically find, pick, and play stocks that are professional bearish gaps. So the next class is August 22nd and 23rd. It's always on a Saturday and Sunday. Class is online. You can be anywhere in the world and take it. Cost of the class is $6,999. Everyone pays the same if you want to do the 2-day class. You can go to my website as well. I'm doing a special, Central Park special that starts, I'm launching it now through next Friday. If you sign up for the combo, which is $79.99, you will get 2 mentoring sessions free with me, 1-hour mentoring sessions, which we can do after the class. If you have any extra questions, you want to meet with me on the side. You will get 1 year free in the options newsletter, 1 year free in the trading room, and 1 year free of the market report. And you would get 2 classes with this, the Golden Gap and then the Trends course. And this ends on the 7th. Any questions here? I think I'm right at the time. Any other questions? Last minute here.
Melissa, did you get answer those questions by Greg?
Greg asked one question and I did answer. Did he ask another question?
Yeah. After rating, do you pick best one or 2 or 3? In other words, how many opportunities are you able to monitor and trade, get in and get out at a time?
Wait, say that again, slower.
Sorry. After rating, do you pick best 1 or 2 or 3 In other words, how many opportunities are you able to monitor and trade, get in, get out at a time?
Well, if I'm doing day trades, I only focus on one thing at a time because they set up too quickly. Now, if I'm doing options, I will put on several options at a time because I'm not doing options getting out in 5, 10, 15 minutes. So if I put an options trade on, I'm letting that play out for the entire day or holding it overnight. So I will put on multiple options trades. I might put 5 or 6 on, but in day trades, I'm doing usually one at a time. If I stop in the first one, then I might go to my second pick for some reason. But if I do one trade and it works, I'm done for the day. You can go back and look at the stats and see that. The best days I have are days where I just did one trade. So I'm not trading all day. Even if I have 5 picks and I rate them all, it's too much to monitor it right away in the day trades too quickly, too fast. If you can manage that, you can do it. But it's easier to be in a couple options because you're just letting them ride on down. And so I will do one day trade usually at a time. And if I do 2 day trades on a day, it's usually because I took the stop in the first one. You follow me? So that was a good question. Anybody else? You there? Hello?
Yeah, I'm here. I'm sorry.
It's
Yeah,
okay.
Greg just said thanks.
Okay, I don't know what happened that I lost his chat. Listen, have a wonderful, wonderful, wonderful day. And be careful. Think about what I said. We'll watch Apple tonight. We'll watch Amazon tonight. Go to my Stock Swoosh on YouTube. If you're interested in the class, email me at melissa@stockswoosh.com and have a wonderful day.
Thank you, Melissa. As always, an informative presentation packed with practical ideas, and thank you for making such a generous offer available to our audience today. Always great to see you gap trading. Everyone, you'll find Melissa's special offer link waiting for you in the chat. Coming up next, if you're looking for an income strategy that doesn't require staring at charts all day, I think you'll really enjoy this next one. Silas Peters of T2 Markets has spent over 15 years trading equities, futures, currencies, and options while working with institutional trading desks and brokerage firms around the world. Today, he'll introduce the SPX income system and show how traders can potentially generate several weekly income opportunities while spending only minutes each day managing trades. So everyone, please welcome Silas Peters.
Hey, good morning, Anthony. Can you hear me okay?
Yeah, I can hear you. I'm trying to get your slides up.
Okay. Yeah, let me see.
Oh no, it's you. I think you have control. You're good.
I think so.
Yeah.
I'm gonna let me know if that works.
That works.
Okay, good. We ready to rock and roll then?
Yeah, it's all yours.
And we've got 45 minutes, correct?
Yep, that's correct.
Okay, cool. All right. Well, thanks so much to the Traders Corner team for having me on. I appreciate everybody tuning in today. It's been a very interesting week, and I think hey, we've got a lot of fireworks left in it. So that's all exciting. If you're involved in trading around Fed, you're trading earnings, whatever it is you may be doing. But what we're going to talk about is really an income strategy that can be used regardless of what's going on. So everybody's loving the talking heads, having their opinions about the Fed and Warsh and this person can do this and that and predicting earnings. We don't really do any of that. We're focused on one instrument each and every day, show you how we can take advantage of the market volatility. We take advantage of market consolidation and chop. It doesn't really matter. We come in with the plan and execute the same thing each and every day. So welcome to the SPX Income Trading Masterclass. My name is Silas Peters from T2 Markets. And again, just to kind of recap and show you how to build daily income from SPX options. And this is all done without guessing direction, without spending hours at the screen, without needing any prior trading experience. And then by the end of this session, you are literally going to see how traders just like yourselves, whether you're a beginner, burnt out veteran, full-time professionals, are collecting up to 3 to 5 income checks a week using what we call a pulse bar strategy. This is a method that only takes 10 to 15 minutes a day and has proven itself across thousands of trades over a decade of data. So let's get right to it. I'm going to talk a little bit quick and fast just because for the sake of time, we got a lot to go through here. So I want to set some expectations that this isn't some get rich quick nonsense. You're going to discover a real proven strategy to build consistent income using SPX options, the same approach that we use every single day. You'll see how to generate daily, weekly, and monthly income, not from wild bets, but from a methodical system using repeatable trade setups and mechanical rules. And it all works without needing an audience, without selling anything, running ads, and without staring at charts all day. So literally no special skills needed, no dancing on TikTok, no selling, no massive risk, just one repeatable skill that pays. And yes, you can do this. Now, you're probably asking yourself, are you in the right place? If you want to build an online income and need a process you can trust, then you're absolutely in the right place today. And let's talk about some reasons why I think that this could be, or why these are some of the best income sources ever. So we know that trading is a solo sport. That means you don't need to answer to a boss, find clients, chase customers. Once you learn how to do this properly, nobody can take your income away from you. Number two is that you can make money whether the market goes up, down, or sideways. This isn't about predicting the future. It's about collecting income from it. Three is, again, you don't need to build a website, no social media dancing. Master one skill. I'm going to show you how simple that can be. And get this, it is 100% recession proof, mobile ready, works in recessions, booming bull markets, does not matter. You can do it from your mobile phone. Also president proof, left or right, blue, red, green, brown, doesn't matter. The income system works regardless of who's in office. Number four, it only takes 10 to 15 minutes a day. It's all it takes to place your trade, move on with your day. No second guessing, no stress, just results. And then finally, number five is that it's extremely easy to learn. So no more zombie trading, no more chart hopping, no more stacking 27 indicators, just a very clean mechanical approach that works. And if you simply do what I do, what I show you, you'll start getting the same results that we get. It really is that simple. Now, the question is, what should we trade? Now, I've traded everything, stocks, futures, Forex, even books on Amazon. That required a lot of effort. The margins were thin, but only one market gives us the speed, liquidity, and reliability that we want and that we need. It doesn't matter if 1,000 of us are doing the same thing, and it's through SPX options. This is one of our favorites, really the core of the entire income system that I'm going to be walking you through today. In fact, we like being in good company, like that of Uncle Warren, who sold billions in cash secured puts during the 08 crash. And this isn't, some new idea, guys. It's not, it's just rarely executed with the same type of precision that I'm about to share with you. Now, the strategy that you're about to learn really didn't exist a couple of years ago, and that's how timely and how powerful all this is. Now, before we get into the meat and potatoes of all this, guys, quick backstory. Who am I? I'm a founder of T2 Markets, co-founder, partner of Blue Marlin Advisors. I'm an entrepreneur, risk taker, full-time trader, speaker, author, educator. Started my career at the Chicago Board of Trade, but down here is really what's most important, right? I'm a husband, I'm a father to two girls, and I'm a mentor to thousands of students across the globe. And my obsession is to help serious traders get real results. Now, before we dive into the theory, let's look at some stats on SPX. Talk about volume. Now, as the data of this graphic, SPX has seen a huge jump in daily trading activity. That means more opportunity, better fills, faster trades, and the volume continues to explode, which means liquidity or opportunity for you and I. Now, people ask, why SPX instead of SPY? Here's the deal. SPY pays a dividend and settles in shares. SPX doesn't pay a dividend, settles in cash, and expires every single trading day. And we like this. So SPX is what's called a European style option, no assignment risk. It settles in cash, okay? And what that does is it gives us a very unique trading edge that we're going to exploit. It makes it safer for income traders like ourselves. Now, if there's a better, faster, or easier way to generate real income online, frankly, I haven't found it, and I'm sure that we've all looked at some point or another. Now, I want to cover something here before we dive into the strategy. Here's what you should know. You're not going to make $10,000 a second by next week. Yes, there is something for sale at the end. And no, you don't need to buy it to benefit from this training. We're traders, and what I'm about to show you is one of my favorite ways to make money in the markets right now. And frankly, that's not going to be changing anytime soon. Now, there are really three secrets that change everything. One, why traditional trading is broken and how we aim to solve it. Two, why most traders struggle and how the market is rigged against them unless they know what I'm about to show you. And then three, how to build an account that grows while also staying safe. Really the smartest way to balance risk and reward for maximum growth. Now, let's start here. What's the real difference between trading and investing, and which one actually matches your goals? Well, we know investing is slow, passive, and often uncertain. You kind of hold and hope. Well, trading, you take control, but you also take on more risk if you don't have a system. Now, SPX income trading combines the best of both, the control and speed of trading with the safety and consistency of a well-managed investment process. Rules-based, low screen time, low stress, and perfect for those who want steady wealth without waiting years. Now, this is the truth. The market's designed to take your money unless you know how to play the game. And today I'm going to show you why most people lose, and then how we can flip the script and finally start treating trading like a professional. Now, we know stats don't lie. Over 80%, if not more, of retail traders actually lose money. And this is documented reality. Most traders, investors are not failing because they're dumb or ignorant. It's just because they don't have a plan and they're following bad strategies. A lot of this probably sounds familiar. Constantly adding and removing lines and tools and indicators, just trying to see if this works. Maybe you're fumbling entries, exits, targets, taking trades that look good in hindsight, but keep ending in losses. Maybe you bought yet another course that's impossible to replicate. You're thinking, well, maybe this time I'll get it right, but the system never quite delivers. Maybe you're zombie trading, scrolling through chart after chart, hoping the next one is the one. It's exhausting and it doesn't work. Maybe your results are mediocre. Maybe you've wiped out a few accounts, you've YOLO'd a few trades. You're not alone, but it doesn't have to stay this way. Maybe you're frustrated because it's not working for you, except for the occasional lucky win. Nothing feels repeatable, no consistency. Well, the real reason most people lose is because they're winging it, making it up as they go along. And that's not a system, it's a gamble. History proves it. The dot-com bubble, the 08 crisis, the 2020 crash, most traders panicked and lost, but many profited. Why? How? Because they followed the clues and they followed the rules. So all that nonsense is going to stop, right? No more guessing, no more hoping, no more hype. Here's what we're going to do instead. Pick one simple strategy and then master it. Trade it the same way every day like clockwork. Use a rules-based system that's been proven over time, back-tested, repeatable, objective. That's how we can create consistent income without all of the emotional whiplash. Now, SPX income trading is your stress-free path to potential long-term success. No more timing the tops and bottoms. You simply collect the income while everybody else is arguing about direction. And the best part is it works in bull markets, bear markets, sideways chop, doesn't matter. SPX income trading helps you build potential daily gains with minimal effort, removing all of your emotional decision making, not panic selling, chasing green candles. You're following a plan that's already proven to work, and it compounds over time. Small, consistent wins stack up fast, and that's how you can build a real trading account without all of the burnout. I don't want you to just take my word for it. Let me show you the data so you can see it with your own eyes. The system is based on rules. Rules can be back tested. What we're looking at here is over 10 years of data, over 2,000 trades from a single setup, not cherry picked. Every single occurrence of the pattern over a decade traded mechanically, no discretion. That's what we call an SPX income system, like a factory. Same setup, same outcome, same process. It either works or it doesn't. We don't guess. And yes, we trade this on the S&P 500, ticker symbol SPX, using 0 DTE options and a $5 wide credit spread. We call the core setup the tag and turn, a swing trade structure designed to profit when price taps a zone, then reverses, simple, repeatable, and powerful. You don't need to be perfect. You just follow the rules and the results speak for themselves. And what I'm about to show you are setups that appear every single week, and you will be able to spot and, most importantly, have the ability to trade these yourself. SPX, another turn, 92% return, $15 profit per spread, another 90.2%. These are not anomalies. It's the standard. This one, the pattern shows up. You follow the plan, collect the income. Here we are again, 91% return, $40 in the bank. Trades are short, clean, consistent. Same setup, same result. Slower trade, still come out ahead. 15 minutes or less for days of work. Here again, 98.3%, one of the cleanest executions we've seen. We don't expire to win. Sometimes patience is the strategy. Profit captured in phases, all by design. This is what a high probability system looks like when it's doing its job. And our students are not just participating, they're crushing it. You can see Brian smashing 100% winner, Colin, winner here, Kevin, 80% return on capital. It's not luck, it's the system in action. These are real traders, real results, and they're following the system by not spending all day in front of their charts. This is what happens when you stop overcomplicating and start executing with clarity and confidence. And what do they say? Happy wife equals happy life. Well, this is my wife here. She's a funded trader using this exact strategy. So let's get into part two, where we go a little bit deeper and talk about why traditional trading is flawed and then the fix. Let's talk about what's broken with traditional trading and then how to fix it the proper way. Now, most traders are stuck in a flawed model, trying to predict price direction, time the perfect entry, and then micromanage exits, and it's exhausting. Now, here's the truth. Traditional trading is 100% dependent on picking the right direction. You only get paid if you nail the move, which is rare and hard to replicate. Doesn't factor in volatility, market conditions, price behavior, and that's why most traders leave huge gains on the table. Why? Because they're flying blind. Now, here's the fix. We trade with the market, not against it. We use modern tools, new option expirations, and repeatable setups, and we do it without getting emotions involved. And we don't need to be right on direction. We don't need the market to make a huge move. And if it does, we just get paid a little faster. No overcomplicating. So SPX income trading lets us get paid without perfect timing, and that's the edge. It's a game changer once you understand all this. Think about it. If you knew the market was going to move and you could profit without guessing direction, wouldn't you take that trade every time? Well, yeah. I mean, it sounds obvious when you think about it, but you'd be surprised about how many people don't and miss out. What if you could profit without timing a move or picking the right direction? But if you did, you got paid a little quicker. That's exactly what this system is designed to do. Whether SPX goes up, down, or sideways, you get paid. So as long as your setup and risk profile are correct. This is the SPX income system, a simple, optimized process that works with market movement instead of trying to fight it. So how do we actually profit from it? Well, let's walk through the exact mechanics, and I'll show you why this works time and time again. Let's compare this to how most traders think profit works. In traditional trading, you only get paid if you nail the direction and the move is big enough. So if the market makes a huge move, great, you get a big win. But if it barely moves, you get nothing. Or worse, you lose. Here's the problem. That means you've got to be right about direction and timing, and the market has to cooperate with a large enough moves, and that is a lot of ifs. But with income trading, it's completely different. You get paid even if the market moves slowly or not at all. So we basically get paid to wait. Small moves, we win. Sideways chop, we win. Big move in our favor, we win faster. The only time we lose is when the market moves against us too far, too fast, and we're still in the trade at expiration. That's 100% okay. We'll have wins, we'll have losses. It's part of trading. Get this, a perfect entry is not needed. Even then, the loss is predefined. We know exactly what the worst case is before we place the trade. So no surprises, no disasters, no margin calls. Now let's walk through how we profit. This is where SPX income trading flips the script on everything you thought you knew. A trade doesn't need to go big to be profitable. In fact, it doesn't need to go move much at all. We're not relying on speed or direction. We're relying on probability and time decay. We're not using stop losses in the traditional sense. So a trade that goes against us early can turn around and finish in profit by the end of the day. We get a big move in our favor, beautiful. Trade hits 100% of max profit quickly and we're out. Small move, no problem. Still a 100% win. The market just needs to stay above or below our break-even level. A tiny move, one red penny, 1 cent in our favor can deliver a full win. And that's the edge of being at the money with a spread working for you. Even if the trade moves slightly against us, we can still close for a partial win. Anywhere between 0 and 99% of max profit is still on the table. And if the trade doesn't work out, we already know what the loss will be before we place the trade. That's a risk-defined strategy. That means we can't lose more than the cost of the spread. So, for example, with a $5 wide spread and a $2.50 credit, the most we can lose is $2.50. And the worst case only happens if we're completely wrong. And we let the trade go all the way to expiration, fully the money. But most of the time, the market gives us plenty of time to adjust, manage, or simply let probabilities play out in our favor. We're not trading naked options. We're not holding for weeks. We're taking quick, controlled, structured trades and stacking small wins. The real power isn't just the wins, it's the confidence. You'll know exactly what to do, when to enter, when to exit, and most importantly, when to stay out. And that's why traders who follow this system don't panic. They're not glued to the screen. They place the trade, manage the position, and they move on with their day. You don't need to overthink this, guys. The rules are the rules, and when you follow them, the system delivers. So let's zoom out for a second. 30,000-foot view of how this system works. First, we identify a pulse bar. Next, we wait for a clean break of that bar. Then we set up what's called a profit package. Finally, we manage the trade or we let it expire for max profit. That's the entire model, and we do it in less than 15 minutes per day. So congratulations, pat yourself on the back. You've got a profitable online business. So what do we need to run this strategy? Not much. Any charting platform works, but I personally use TradingView, and that's the platform we have pre-built indicators and workspace templates for. But you can technically use any brokerage or firm that has charting. For options execution, most of us use something like Tasty Trade. I use Tasty Trade. Interactive brokers or Thinkorswim also get the job done. So step one is identify a pulse bar in the first 2 hours of the day. You don't need 14 indicators or a NASA terminal. The strategy is built on clean charts and one visual cue that we call the pulse bar. So less clutter and more clarity. So what the heck is a pulse bar? Let's break it down. It's a 30-minute candle that closes in the top or bottom 5% of its range, and that signals strength, bullish or bearish, in a way that's easy to spot and act on. Here's what we look for. Bullish pulse bar closes in the top 5% of the range and higher than it opened. Bearish pulse bar closes in the bottom 5% of the range and lower than it opened. One glance, one condition, that's our setup trigger. So we know the high to low range is 100%. All we're looking for is a close in the top 5%, which is a bullish pulse bar close, or a close in the bottom 5%, which is a bearish pulse bar close. Not very difficult, right? Now, if we're doing it manually, that's fine. Grab the Fibonacci tool on any platform, set it to show 0, 5, 95, and 100% levels. Then you measure the high to low range of the 30-minute bar. If the close lands in the top or bottom 5%, then that's our pulse bar. Now, can we automate a pulse bar? The answer is yes, we can. Because the pulse bars are a mechanical rule, we can have them coded into TradingView. And because it's a rules-based system, automation is easy. My team and I have already coded the tools that detect pulse bars on TradingView. And we don't just stop there. The software filters trades by ATR, time of day, directional swings. So we're only seeing the cleanest, highest probability setups and none of the other noise. And it's all automated. So we built this in a TradingView, browser-based simplicity. In fact, this is a sneak peek glance at what it looks like. You'll see everything, pulse bar labels, projected break zones, calculated in real time. So there's no guesswork and you can focus on the execution. And because it is a mechanical-based program, we can run some back testing and get some data. Although we have a smooth upward sloping equity curve, there are still some lumps and bumps along the way. But when we add some simple automation, I'll show you how to get access to this tool later, but just know automation is not required. Just makes everything 10 times easier, faster, more consistent. But with those automation filters, you can see that we have a much smoother equity curve. And I want you to focus on this, guys. This is only one of 7+ income strategies that we have in our back pocket. You're probably saying, well, if it's so damn good, Silas, why don't you just trade it and keep it yourself? Well, I do trade it. We trade it every single day. That is when I'm at my desk, which is most days. We trade it live with our own money, prop capital in real time. And what you're learning here isn't theory. It's not recycled fluff. These are the exact strategies we use in our own accounts. Live screenshot from Tasty Trade. Live real money account, not a demo. Tasty Trade doesn't offer fake data or paper trading. So this is what actually happened. You'll see several open positions, all placed using the same pulse bar strategy that I've been walking you through. And the edge applies across SPX, futures, even stocks, if you wish to adapt it to those markets. Now, originally, this was developed for a similar strategy for futures and stocks. But when 0 DTE SPX options came along, it really changed everything. Same rules, bigger edge, and more frequent payouts. Now, look, I love trading, but I also love teaching. Helping others master this system and others is part of what drives me. I know what it's like to struggle with crappy information and useless strategies. So now I can help others avoid that pain and speed up their results. But don't just take my word for it. This system works, guys. And not just for me, hundreds of traders around the world using this every single day and week. And Chuck started $800 into his account, turned into $2,700. Now, that's not luck. It's the system executed consistently. We've got Brian following the process. He's not a full-time trader. Someone just following the rules. We've got, trading more structured. You're going to realize that sticking to the plan is more profitable than trading your opinion, okay? And that's really the shift that changes everything. So let's get back on track because now you've seen the edge, you've seen the proof and the pulse bar setup in action. Step one is simple. Wait for a pulse bar in the first 2 hours of the trading day. You already know what that is, a 30-minute candle that closes in the top or bottom 5% of the range. Step two is where the money's made. You place what we call a profit package. That's our at-the-money credit spread. And now that you know the setup, let me show you exactly what a profit package is and how to place one. So a profit package, think of it like a trade with two parts or like a game. Player one sells it in the money. Option player two buys it out of the money, same time, same direction, specifically selling one in the money, buying one out of the money, simple credit spread structure. Here's what it looks like on an option chain. We're selecting two strikes, one slightly in the money, one slightly out of the money. That's where we get our credit from. You'll notice the strikes are just $5 apart. That's our defined risk. ITM means the option is profitable. It's in the money at the moment of entry. OTM means it's not yet profitable. It's out of the money. And by combining both, we build a position that gives us a net credit and cap risk. Don't overthink this. Strategy selector on your platform, choose vertical spread, pick your strikes, done in seconds. Here's an example of a bullish profit package. You sell the higher strike, buy the lower strike, and you collect a premium for placing that spread. Bearish version. Sell the lower strike, buy the higher strike. Same idea. Just flip for a downside setup. The logic is the same. The execution is just mirrored. So which way do we trade? It's simple. If you see a green pulse bar, you're bearish. You place a bull put credit spread. If you see a red pulse bar, you're bearish. You place a bear call credit spread. Now, that's step 2 of the system. You place the profit package. And now you've seen how simple this is, whether you do it manually or automate it with a platform strategy builder. Step 3 is the best part. Once you place the profit package, you walk away. Don't stare at charts. You don't micromanage it. You let the trade do what it was designed to do because the edge is already baked in. Time decay is working in your favor, and you have defined risk up front. So you set the trade, walk away, no babysitting, and no micromanaging. Now, here's what most traders miss. We only lose if the trade finishes in the money at expiration. That means we've got the whole day for the market to turn around, pull back, or just go flat and still come out with a profit. And that's how trading should feel. Stress-free, mechanical, confidence in every position. You follow the rules. You manage the trade if needed and let the system do its thing. No panic, no overthinking, just results. So to recap, step 3, walk away, let the trade do its thing. Not watching charts, not second guessing. The system is doing the heavy lifting. And step 4 is simple, guys. Rinse and repeat. This isn't about chasing perfection. It's about taking the same high quality trade set up day after day like a production line. So step 3, or part 3, or secret 3, is how to build an account that grows while staying safe. Really the smartest way I know to balance risk and reward for maximum growth without taking unnecessary risk, needing some huge account, and without guessing your way through trades. As I keep saying, SPX income trading is one of the most powerful short-term investment strategies out there. Fast, flexible, semi-automated, and lets you build potential wealth without waiting years or watching charts all day. And it's not just working for me, guys. We've got literally hundreds, possibly even thousands of success stories like this. The only real difference is how consistently they show up and how quickly they take action. So I want to walk you through this with numbers because this isn't just about theory. It's about repeatable outcomes. And this is where it gets fun. What I'm going to show you is not a promise, but a math lesson. Think of this as a demonstration of what's possible when you follow the rules consistently and trade just to 10, 15 minutes a day. Let's say you start with $5,000. We'll risk 5% per trade. And we're only trading SPX using risk-defined strategies. For every 3 winners, we assume 1 losing trade, 1 no trade day. That's a realistic rhythm, even if we're only trading in the mornings. So week 1, win, loss, win, no trade. 3 winners, 1 loser, 1 no trade, $500 and 10% ROI. Week 2, similar setup. Week 3, another profitable result. Week 4, still consistent over the month. You're up about $2,300 or 46%. Now, we break it down. You started with $5,000, with about $2,300 in profit. It doesn't end there because once you have consistent profits, we start to compound. You're probably familiar with this famous quote, compound interest. This is where it can get fun. So instead of starting month 2 with $5,000, now you're starting with $7,300, raising your position size of your growing balance. Your risk per trade increases, but so does your profit potential. Now, I'm not going to bore you walking you through every trade by trade scenario, but without doing anything different, month 2 brings in almost $3,400. By month 6, your balance is over $49,000. By month 12, over $480,000 and $150,000 in monthly income if you're compounding aggressively. Now, we recap. We started with $5,000. Now you built $150,000 a month income in 12 months. Well, let's hold our horses, not get carried away. This is a math lesson. Yes, you can build a monthly income starting from $5,000, but is it likely? Not without consistency, patience, and time. What matters is this. A fraction of this, guys, a fraction of this would likely change everything. You agree? Of course. So you say, great math lesson, but does it actually work? Well, you've seen screenshots from the accounts. There's no demo mode, guys. There's no faking fills here. Those are real trades placed in real time. Rules-based, back-tested, forward-tested, sideways tested, and live tested across thousands of trades over years of market cycles. Extremely flexible. Now, SPX is our go-to. You can adapt it to futures, ETFs, stocks, as long as it meets the basic criteria. But for simplicity, SPX is still the most elegant version of this system. And remember, This is just one of 7+ strategies that we have in our back pocket. So imagine the possibilities. Imagine. And again, this is everything that you will be able to see and spot now in real time, whether you trade SPX or some other random instrument, right? Stocks, futures, you can use it because it's a price action based system. More wins, more success stories using the same process that you've seen today. Guys, this is not cherry picked unicorns. These are everyday traders following a mechanical system, stacking results. And now I want to help you get your own success. Now, before we go any further, let's recap what we learned. How to spot pulse bars, how to place profit packages, how to manage trades and stack wins, and how to grow your account safely in just 15 minutes a day. The question is, what are you going to do about it? You've got the strategy, you've got the rules, you've seen how to make it work. So what do you do next? It's time to execute. This isn't a theory session or a watch and wait situation. It's about execution. You keep watching webinars and YouTube videos and tic-tac, nothing changes. You take action, you've got a real shot at building something powerful. Think about it. Where will you be in 6 months, 12 months if you keep doing what you've been doing? Will you have the results you want? Will you have that consistent income machine working for you? Or will you be stuck guessing, over trading, and hoping? Right now, the way I look at it, you've got 3 choices. 1, do nothing, close this down, walk away, stay where you are. 2, try to piece it together, rewatch, take notes. Maybe eventually you get it working. Or 3, let me help you. Install the system, get it working in days instead of months, and start trading with clarity and confidence. Let me help you so you don't have to figure this all out on your own. I've shown you one piece of the puzzle today, but we've got 7+ other income strategies that complement everything you've seen. And if you want support while mastering this, we'd be delighted to help. This is a complete rules-based trading system that lets you potentially generate consistent daily and weekly income using pulse bars, profit packages, and our mechanical entry and exit rules. And the system works, but it works better with guidance and feedback. We pride ourselves on our success rate. And if you're the right fit, we'd love to help you get there. I'll tell you though, it's not for everybody. I'd honestly rather you not join if it's not the right fit for you. And here's what I mean. This is for you if you want structure, a structured rules-based strategy. You don't want to watch charts all day. You want to trade part-time without being glued to your screen and you're ready to follow a process and stop guessing. This is not for you if you're expecting overnight millions, addicted to meme stocks and moonshots, and you don't follow rules and prefer trading based on feelings. If you cannot commit to a simple process, this isn't for you. So let me see, guys. Who is still with me? Who's still with me? All right, awesome. So if you're still here, I think you know this is exactly what you've been looking for. So let's talk about how you can get started today. I'm pleased to introduce what we call SPX Income System. This is our complete self-paced package that walks you through everything designed to take you from zero to confident execution. Now, the first thing you're going to see in our hub is our 5-day boot camp on demand. We just wrapped up a 5-day boot camp last week. No fluff, complete actionable education. For those that want to dig deeper and really want to spend more time in the charts, we've got a complete strategy archive and training suite. We made it about as simple as possible. No complicated installs, tutorials, crazy configuration. We've already built workspace templates for you. All you've got to do is copy and paste. In under 5 seconds, you'll now be able to see and spot our 3 core setups with ease, giving you the setup and entry criteria, our new grading and scoring system, everything you need to know without guessing. And our popular 7DT swing trade template with expert advisor, giving you extra confidence in every single trade that you take. And guys, again, that's only 3 I just showed you of 7+ income strategies. So imagine the possibilities. Real students, real members, real traders crushing it every single week, guys. There's no reason that you cannot be one of these success stories. And our motto is leave no trader behind. This is why we run a live members only Telegram room 24 hours a day, 7 days a week. Our students ask questions, they get answered. We discuss setups, entries, wins, losses, bad jokes from here and there. We're a community, and we're here to actually help each other. And as already mentioned, in addition to the 7+ income strategies, you're also going to get access to all of our live 5-day future boot camps, all future 5-day boot camps that we hold online. But we're not done yet. For everybody who joins today, we're going to include bonus tag and turn alerts, TNT alerts, where you're going to get the exact chart setup. You're going to get the exact entry model. They're going to get the strikes, the premium, the stop, the risk, and follow up. We're trading this a lot along with you live. You're going to be grandfathered into our live Telegram alert service. So with this package, you're going to get the 5-day income bootcamp on demand, all of our training guides in archive, free real indicator workspace templates for TradingView, Telegram room, additional income strategies, all of our guides, case studies, and more. Total value here, guys, over $6,000. We're not going to charge anything close to that today. We are on a mission to create as many successful traders as possible because we believe in our program and we know it works. We believe in helping our students, and we want you to start trading with confidence and start getting real results today. It's not going to cost you $6,000 to join us. Not going to cost you $4,000 to join us, or even $2,000, guys. For those that are serious and ready to stop kicking the tires and get on board with a real proven system, you can get started today for a one-time single payment of $14.97. This is a one-time payment, guys. This is no renewals, no subscriptions, no additional fees. This is lifetime access. And you go to spx.t2markets.com. spx.t2markets.com. You'll get immediate access to the full package and full system. The only reason, or the only wrong choice is really doing nothing. If this resonated with you today, then trust that. Because a year from now, you're going to be looking back at this moment as either the day everything changed or the one you let slip past. And you can start having real success. It's not a coincidence that you're here. You've made it this far because this spoke to you, and now it's your move. So head on over to spx.t2markets.com. Let me see if I can put that into the chat. spx.t2markets.com. I don't know if that went to everybody. And by the way, the homepage is t2markets.com. That's the correct URL. spx.t2markets.com. Do not put the www in front of it. Just spx.t2markets.com. Otherwise, take you to a broken link, guys. So let's build this together, guys. The tools are here. The support is here. The results speak for themselves. You just need to take the first step. Choose your path, and let's start stacking wins together. So get started by spx.t2markets.com. I think I'm out of time. I do have a couple of slides for FAQs, but I know I wanted to get the Traders Corner team back on track. So I guess I'll turn it over back to Anthony. Here's how to get a hold of me, though. I am a live, real human being, so I will often I speak to my students every week. I'll call you. I'll chat with you. If you have questions, we legitimately are here to help you. We want to see you succeed, and that is the reason that why we do this together, guys. So spx.t2markets.com. That's how you can get started with us. Would love to see you inside. And I want to give a shout out. Thanks to the Traders Corner team for having me. Always appreciate these sessions. And have a great weekend and enjoy your summer, guys. Stay safe out there.
Hey, thank you, Silas. Francisco had one question. I don't know if he answered it. Are some of the indicators available for Thinkorswim?
Oh, sorry, just saw the Q&A box. So we only have this built for TradingView at this time. We have and are looking at Thinkorswim. It's not like we don't want to do it. We have so many Thinkorswim users. It's just a matter of technology limitation. So we've got to make sure it works properly and it's doing what it's supposed to do before we can release that on Thinkorswim. So short answer is no, not yet.
Thank you, Silas. We really appreciate it. That was another excellent presentation and a unique approach that I know many of our attendees will appreciate. If you'd like to learn more, Silas's special offer is now available in the chat. That is spx.t2markets.com is the homepage. And that is that the offer as well?
spx.t2markets.com is how you're going to get a hold of the system. My site is t2markets.com.
Okay, that's correct. All right, so click on the link. We have it in there twice, I think. So check him out. That was excellent. Thank you so much for being here today.
All right, thanks, Anthony. You guys have a great day. Talk soon.
Thank you. Next, Dr. Daniel Sinning is a managing partner of Trading Indicators and is internationally recognized for developing innovative indicators, automated trading systems, and professional trading software. Today, he'll review how traders identify hidden liquidity zones and build structured, high-probability trade setups. So everyone, please welcome Dr. Daniel Sinning.
Hey guys, hey Anthony, nice
Hey.
to be here. What a great event once again you guys put together. So thanks for having me. And without further ado, I'm going to get started right away because we have a lot of ground to cover. The markets have been quite wild today. I'm not sure if you noticed that, but let's see which opportunities we would have seen in the market so far, and more importantly, what potentially is coming up as a next opportunity when it comes to day trading today in the markets. Because what I'm going to do today is I'm going to share with you my market edge in day trading, the only two indicators which are always on my chart, no exception. So how this came to a fruition and why this is the way it is, I'm going to explain to you in this brief presentation. So welcome, guys, once again from my side. And Anthony, can you please confirm that you guys can actually see my screen and potentially also me on camera?
Oh,
that
yeah,
my audio is coming across clearly. Perfect.
Yeah, everything's
Great.
looking good. Thank you.
Sweet. Okay, great. So let's go ahead. I'm going to share with you today my market edge for day trading. I use it for day trading every day. I used it today, but just a bit earlier to place a successful trade in the MES. I'm going to probably use it later on today as well. But all this to say, what I'm going to show you today works great for day trading, but also this is why we have put these parentheses here, also for longer term trading as well. So whether you're a day trader or swing trader, I promise you can get something out of this presentation. Now, where does this market edge come from? Let me give you a bit of a history lesson, not lesson, but where do I come from in terms of trading? Because back in the day, when I started trading, I believed very firmly that trading should look something like this. That you would need, especially for day trading, I don't know, a plethora of different screens, like here, 20 different screens with charts open, multiple indicators on each screen, and somehow you would need to make sense of all this information. This was, back in the day, my idea of day trading. So I pursued this idea. So I started to recreate such an environment. I bought all these screens, all these, these setups, these monitors, these indicators. I started to try to make sense of it. But soon I came to the realization, oh boy, this is not for everyone. You probably would agree with me. So perhaps for sure there are some people out there who can make sense out of all of this, like this guy here, Steven, actually a good friend of us. I programmed some of the indicators that he is on the chart right here. That's a different story. So for some people, this will work. It did not work for me for multiple reasons. First off, you probably agree with me. This seems absolutely complex, very complicated, overloadingly complex. So perhaps not for everyone. Also, it's very expensive. Imagine you have to build all this setup together, all these different screens in a dedicated room. It's not that's expensive. And thirdly, if you enjoy traveling, like I do, this is not mobile at all. Imagine, having to move this setup from one hotel to another and recreate it. Impossible. It doesn't work. So I had to give up on this idea. But you know what? I completely transformed the way I trade. And now the way I am trading looks something like this. Just one chart, just two indicators, and oftentimes just one laptop. Would you agree with me that this setup is much, much simpler, much more mobile, and also much less expensive? Probably everyone in the room here today will agree with me on this. And guess what? I'm still trading exactly the same way. So if I switch over to my trading view right here, Where are we? You can see the very same indicators applied directly to the price chart. And guess what? One trade I just took a couple of minutes ago, right before this webinar, was this one here. A long trade in MES, the micro E-mini futures, when price approached this key support level down here within a strong uptrend. That's all it took today to find this setup. Of course, I exited it much too early. Prices went much higher afterwards, but nonetheless, it was a winning trade. And this is how I trade right now. This is what's giving me my market edge right now every single day when it comes to day trading, but also for longer term trading. And today, I'm going to share you how this whole system works, and most importantly, how you can do the exact same thing on your own end as well. Sounds good? Let's get into it. A quick introduction. Where do I come from? My name is Daniel Sinek. Anthony had mentioned it before, and I'm one of the founders of tradingindicators.com, a platform where we host and publish our flagship indicators. Now, we've been in the indicators business for many, many years, so more than 10 years. We've built thousands of indicators for clients all over the world. But the best ones, the flagship indicators, these are the ones that we reserve for ourselves, and these are the ones which we are publishing on our homepage, tradingindicators.com. So if you want to check it out, go to our page. We have a brand new homepage. We just launched it a couple of weeks ago. I'm very proud of it. Check it out, what we do have to offer. Okay, enough about me. Let's get into today's topic. But I do need to remind you that trading does contain risk and therefore is not suited for every investor. If you trade, make sure to only use risk capital, which is money that you actually can afford to lose. When it comes to backtest performance or hypothetical performance, keep in mind that this is not necessarily indicative of future performance, and any trade ideas and strategies discussed in this webinar should not be construed as trade advice. These are for educational purposes only. Okay, so with this out of the way, let's get into it. So one revelation that I had about 5 or 6 years ago was the following. I noticed, and of course many had noticed this before, but it came to me about 5 to 6 years ago, that every single chart, it doesn't matter what it is, has so-called landmarks. And these landmarks, it will sound abstract right now, but we're going to have some examples in a second. These landmarks can give you structure on your chart, and it will make it possible, these will make it possible to predict to some degree of certainty what price may do in the future. And I also realized without these landmarks, these kind of predictions of what may happen in the future is very difficult. Because without any guidance, charts can be absolutely unpredictable. As you can see it here, an uptrend shortly reverses into a downtrend, only then to reverse once again into an uptrend. And to make matters worse, things can be absolutely chaotic on these small time frames. And when we talk about day trading, typically we are talking about the small time frame, about the 5-minute time frame, the 1-minute time frame, perhaps the 50-minute time frame. You can see it here: down, up, down, up, down, down, up. Almost no discernible pattern on your chart. But here's my first takeaway, and we're going to take advantage of this in just a bit. Things tend to become clearer and more structured once we zoom out, once we go to the higher time frame. This indeed is the same symbol and the same time frame, but just look from different angles, from different time frames. Here the 5-minute chart, here the 4-hour chart. Would you agree with me that the 4-hour chart looks much more structured than this 5-minute chart? Just keep this in mind. It will become important in just a bit. Things tend to become a bit more structured, a bit more clear once we zoom out, once we go to higher time frames. Even for day trading, this will become relevant. Okay, now we noticed that every chart, I mentioned this before, has so-called landmarks. If we are able to spot these landmarks, these areas of price, we will be able to estimate how price will react to them in the future. This is very important because we don't want to do this retroactively of what has happened in the past. We want to estimate of what may happen in the future. Because let's face it, trading, day trading, or any form of trading is all about forecasting of what may happen in the future, where price and when price will be in the future. This is what we want to do. So it was very important to us to identify these landmarks which have these forward-looking properties, which actually have relevance moving into the future. Because if we are able to find these levels of price, we can estimate how price will react to them and find interesting setups in the process. Let me give you an example of how this can work. It's an oversimplification, but this will give you the idea. So let's assume for 2 minutes, it'll be fast, and I'm going to get to the live market in a second. Let's assume, and these landmarks are often called liquidity zones, but the name is not so important. Let's assume we have this chart here. And let's also assume we were able to identify the support level, this red line down here, and this resistance level, this blue line up here. So how can these two levels, these two lines, guide us as to what may happen in the future? So the first takeaway, oftentimes, if price is trapped in between these two levels oftentimes act as magnets. They will attract price, meaning price oftentimes will not stay in this middle part for too long. Instead, price will go either to the upside or the downside. You can see it here. Price in this case went to the downside. It's hitting this support level from the top. It's coming from the top down to this red level. So what could be our prediction next? What price may do next? Well, support is named support for a reason. Price may bounce off the support level towards higher price levels. Support may prevent price from breaking it. It's supporting price. It's finding a bottom, and instead price may bounce off towards higher price levels. We can predict this. You can see here price is approaching this level, and then it bounced off this level towards higher price levels. And once again, we are in the middle, in between support and resistance. Okay, we already know what can happen next. Once we're in the middle, these two levels will act as magnets once again. So in this case, price goes all the way back to the top side now, towards this resistance level. It's approaching resistance from the bottom. And what do you think may happen next here? Well, once again, price may bounce off this level towards lower price levels. Resistance may prevent price from breaking it, and instead price may bounce off this level towards lower price levels. You can see it here. Exactly this is what happened. Price bounced off this level again. And once again, we're back in the middle. And it's rinse and repeat. So once again, back in the middle, these levels act as magnets. They will attract price. In this case, price once again went down to the support level. Price once again bounced off the support level, and then nothing lasts forever. Price broke all the way through this resistance level up here. But that's an interesting case as well. Because what happens when price actually breaks a level? When resistance, for example, is broken, what happens to that resistance level? Well, it will change its role. It will change its function. And resistance, in this case, will become support. All right, so things have changed now. And guess what happens next? We broke above this level here. Subsequently, price then retraced and corrected itself down to this blue line here. And what's the role of this blue line right now? It will act as support. Why? Because resistance, former resistance in this case, has been broken. Its role swapped and changed. And now resistance is acting as support. And once again, our prediction could be, okay, it will prevent price from going further from breaking this level, and price may bounce off this level towards higher price levels. Then once again, price went up, came back to this level once again. It's now acting as support. And once again, our prediction could have been, okay, we are bouncing off once again off this level. And then, we're too far from these levels for them to become relevant. This is the idea of having guidance on your chart, of having these key levels on your chart. But you may ask now, all right, Daniel, that sounds all very beautiful, but this will fail if you are not able to find these levels correctly. And I would completely agree with you. We need to be able to identify correctly where these levels are. Because if these levels are wrong, this whole system will break down. Well, so how can we define these levels? How can we spot these zones? We call these liquidity zones. Whether it's support or resistance, we just simply call them liquidity zones. But the name is not so important. Well, how can we spot them? Well, we are trading indicators. We spent probably about a year developing a chart indicator which can identify these levels directly on your price chart. And this indicator is called Liquidity IQ, an indicator designed to do an instant technical analysis of your price chart. It will draw these key levels, resistance and support, onto your chart as soon as the indicator is applied. So without further ado, let's see how this indicator works on your chart. So I'm going to flip over to TradingView. And by the way, if you don't trade on TradingView, we also have this indicator available for other platforms, but let's use TradingView in this case. Okay, so this is, one second, I'm going to start with this one indicator first. We're going to add a second indicator to it in just a bit, but let's just see what happened here. And this will become familiar. In fact, let me just do one more thing. Just give me one quick second. I'm going to change one parameter here. There we go. I'm going to switch on mentor mode. You'll see in a second why. Crazy day in the markets today. Yeah, but to some degree predictable. What did we see here? In fact, let me just do one more thing. just because I simplified a little bit for my own trading because I already know what these levels mean. But let me just quickly go to 1 second to this one. Okay, perfect. Okay, so what happened here? This is MES. We are in an uptrend. We broke. You can see it here. Well, initially we bounced off this green line here. And by the way, this green line here is a resistance level. We came up to it this morning at 6 a.m. Eastern time. We bounced initially off this level. Eventually, this level was broken, this resistance level, and price went further up. But now the magic happens. Look what happened subsequently. We came up, we retraced down to this level again, almost to the T. And this level is not drawn after the fact. We knew about this level all the way back here, back at midnight yesterday. We knew about this level. This is when the indicator detected this key level on your chart. We broke above it here, then we came back down to the T, almost to the cent exactly, down to this level. It doesn't have to be always like this. Bounced up again, and then once again here, by the way, this is the 1 minute chart. It's a super small time frame. Yeah. Once again, we came back to this level, to the vicinity. It's not always an exact science. This is also important to note. I'll explain to you how you can use this kind of vagueness as well. Came down to this is the trade I took this morning. Entered long here. We bounced off this level once again. This is a 1 minute chart that was very close to it. And then I took profit here just because this webinar was starting. I wanted to close out my trades. And of course, now prices are much, much higher afterwards. What a bullish day today, by the way. What a recovery from yesterday. Okay. Anyways, these setups are completely tradable. And I trade these all the time with my on my day trading account, but also on my swing trading account, because these techniques, which we can see here on the 1 minute chart, they work just as well on the like higher time frames as well. Example here. Let me start with which did I look? Let me start with Amazon. Amazon on the daily time. Oops, 1 second. If I have to type it correctly. Amazon on the daily time frame. Now check the setup. Beautiful. Once again, you'll see it in a second. For all swing traders and options traders out there, look what happened here. We are bullish. I'll explain the colors here in a second. Price came down from the top down to this support zone. This is our indicator here. And what happened next? We bounced up this level towards higher price levels. These are tradable, even on the higher time frames. Look what happened beforehand. Price came all the way up to resistance here, resistance zone. What happened here? We bounced up this level towards lower price level, like magic sometimes. NVIDIA, another prominent example of how beautiful these levels can work. So NVIDIA here, also here, the indicator is loading, give it a second. Also here, let me disable this one here for 1 second. Look what happened. Price came all the way down to where? To this support level. What happened next? Price bounced to this level already a little bit today. And I expect NVIDIA to continue this bounce at least where? Up until this resistance level up here, around 210. These are tradable from a swing trading point of view, or from options trading point of view. Maybe sell some puts here. Maybe buy a call options if it's affordable. Yeah, something you can consider. So these techniques that we need to know where these key levels are. This will work on the lower time frame and the higher time frame. And simply by knowing these levels, you can already make some very interesting and accurate predictions of what may happen in the market next. But it doesn't stop there. Let me go back to my slides for just 1 second. You'll see. We're going to push it one step further. All right, so back to my slides here. You already know what this indicator now does, liquidity IQ. And by the way, sorry, I did say one more thing. One more thing. By the way, guys, even though we are here on the 1 minute time frame, for example, on this very small time frame, the levels that the indicator calculates, these come from multiple higher time frames. Remember when I said in the beginning, once we zoom out, once we consult the higher time frames, things tend to become more stable and accurate. That's exactly the principle this indicator does. It will analyze the 5 minute time frame, the 50-minute time frame, the hourly time frame to come up with these key levels to make them more accurate and more robust. I forgot to mention this. All right, well, let me go back to my slides because now I want to show you my market edge. The setup I'm trading day in and day out on the small time frames and the larger time frames. So how does this market edge look like? So the bullish case is called the bullish power bounce. That's how I call it. But once again, the name is not so important. So what is the setup? You already know a little bit of it. You already know that, hey, price is coming down to these red lines here. These are support levels. And what may happen at support? Well, price may bounce off from it. That's precondition number one. Price comes from the top down to a red line to a key support level. Ingredient number one. We're going to push it one step further. Ingredient number two is we see, it's a bit hard to see here, this little shaded box. You see this one here or this one here, this little shaded box around it. This is a special event which occurs sometimes when price approaches a key support level. This event is called a liquidity capture event. A bar or a candle which comes close to a key level, it cannot fully break it, and this candle has above average volume. And oftentimes a sign that, hey, something is up. Perhaps other traders are also interested in this level. And in our view, this will increase the chance of having a bounce off this level rather than a break of the level. So that's ingredient number two. We want to see this liquidity capture event. And guess what? Our indicator will flag exactly this event for you. I'm going to show you in a second how. And thirdly, you probably have heard before, the trend is your friend. Ideally, we always want to trade with the overarching trend, with the predominant trend and not against it. So in this case, for the bullish power bounce, where we're expecting a bounce to the upside, to the bullish side, we want the trend also to be bullish. The long-term trend should also be bullish. And there's another indicator which will help us with this. So three things need to come together. Price comes down to support, we see this liquidity capture event, and the overarching trend is bullish. This is the trifecta. It doesn't happen very often, but we can scan set alerts for this. So we also have the bearish case. It's very similar. I'm going to be quick here. Price comes all the way up to resistance from the bottom. You can see it here. Price came up from the bottom towards this green line here, this resistance level. That's ingredient number one. Ingredient number two is we see this shaded box here, this liquidity capture event on the candle, which comes close to this level. Once again, this is a candle which has above average volume, oftentimes elevating the probabilities of seeing a bounce rather than a break. And thirdly, we also in this case want the overarching trend to confirm the future price direction, which is the bearish case here. So we want the overarching trend to be bearish as well. These three things are coming together, and if they come together, we have the bearish power bounce. And all this takes to find these setups. In fact, two indicators, and I trade this every single day, no question about it. So what these indicators are, I'm going to show you in a second, but this is how I trade these every single time on the very small time frames, but also on the larger time frames and across all symbols. It doesn't have to be in the future space. It can be in the FX space, in the stock space. It doesn't really matter. So here an example. Micro natural gas on the 5-minute time frame. Price came down to this key support level. We had a liquidity capture event. We bounced off nicely, winning trade. Micro silver on the 1-minute time frame. Look at this one here. Price came all the way down to this red line here. That's support. We get this shaded area. The overarching trend is bullish. A nice winning trade afterwards. Micro Ethereum, even cryptos, no problem. Once again, we see here price comes down to key support with a liquidity capture. We bounced off quite nicely afterwards. Wheat futures, you can see this works on every single asset class. It doesn't really matter what it is. Also here, we came down to key support. We saw a bit of a bounce, and oftentimes trade management is also very important because if you see, hey, things are tending to fall apart a little bit, book your profits early. You can see it here. I went in here, I booked my profits all the way right here. Just a little scalp, so to say. Took something off the market just in case the market will reverse on me, which is what happened here afterwards. Corn futures, same thing. Long trade here. Once again, I booked my profit shortly after. You can see how easy it is to trade with this setup once you have the proper tools. And all it takes really to trade this power bounce setup is two indicators. One you already know, it's our liquidity IQ indicator, which can find these key levels for us on the chart, but also these liquidity capture events. I'm going to show you in a second how these look like. And the second one is MA Rush, or a trend indicator, which will identify for you what is the predominant trend. Are we rather bullish right now, or are we bearish? This is all it takes. So let me show you how this looks in the price charts. I'm going to go back to trading view real quick. There we go. And in fact, I do have a trade open, or an order open, I should say, right now on a very exotic symbol. It's down here on ZO. Not sure if you guys have heard about this symbol before. Let me just quickly go to the 5-minute time frame here. On ZO for a setup, which I spotted. Let's see how this one looked like. Okay, what do we see here? It's a crazy symbol. Let me actually go to maybe the 50-minute timer just to see it a bit clearer. What do we see here? Okay, So I have my limit order already in here. This is a futures contract on oat futures. It's a bit illiquid, so something I wouldn't recommend starting off with. But if I like the setup, I trade it no matter what. What do we see here? Well, let's break this one down. Let's start first with the trend direction. What is the overarching trend? What do you think it is? Now, someone that doesn't need didn't have a PhD in finance to figure this one out. You can simply look at the price direction, but we also have an indicator for this. Look at this one here. What does this indicator tell us here? What's the overarching trend? Always starting from up here. It's bearish. Yeah, we're bearish right now. All right. You can see it here. Bearish since that point here last Thursday, 12 p.m. Nice bearish move afterwards. Before this, we were bullish. Look at this move afterwards. Before this was bearish. And these don't repaint, by the way. And we have some traders in our trading room who exclusively trade with these signals. They go long when the indicator says, hey, we're bullish. They stay in the trade and they reverse the position when we go bearish and vice versa. This continues. That's possible too. But it's not the way I trade, but it's a way to trade as well. Okay, so we are bearish. Okay, so this means we are looking for short setups. And look what we see here in my order here, sell limit. And I want to go short, aligned with the trend. But why do I want to go short here? Okay, what do we see here? And I'm asking you, do you recognize the setup here? What's potentially coming together here? This is a classic case of, let me go back here, a classic case of, where do we have it? Of a bearish power bound setup. Price approaches resistance with this liquidity capture event, and the trend is bearish. We already know the trend is bearish by means of this indicator here. Bearish. We're currently bearish. We're coming up to resistance here. It didn't get filled yet. I'm waiting for price to come up a bit further. And what do we see here? Liquidity capture event. So this little shaded box here. Let me actually enable something called mentor mode in our indicator. It's this one here. By default, I have it switched off because it clutters the chart a little bit. But once it's switched on, look what this mentor mode will tell you. Here, it will annotate your chart. Exactly everything you need to know. You can see here a liquidity capture event recently on this candle. We're coming up to a resistance zone, which spans from 334 to 335 in this particular contract. And I can see also down here is our support zone. Yeah. So if I were to get filled in this trade, I'm not in it, I'm waiting for this to get filled, my profit target would be right below here, right above the support zone. Because by knowing where these levels are, you can not only time your entry, but you can also find your exits as well, both for your stop loss, but also for your profit target. In this case, I picked my profit target down here at this level because it's right above support, and support acting as support may drive prices further up again. My stop is all the way up here, right above this resistance level, because if we break above it, I think there's going to be a bit of a follow through to the upside. I want to be out of this trade. This is how you can structure your trade. It's almost a set and forget. You set your entry, your target, and your stop loss, and then you can move on with your life. Then either it will work out or it will not, but at least you've done everything in your power to find an interesting trade setup where every box is checked. Bearish trend, we're coming up to resistance, and we've had a liquidity capture event at a recent bar. This is how I like to trade. This is my market edge. And this works on every single asset class. It doesn't matter what it is. It could be a futures contract. It could be a longer term stock chart. It could be a crypto chart, an FX chart. It really does not matter what it is. Okay. So with this, let me, and by the way, I forgot one more thing. One important thing to mention is I don't check charts all the time. I don't, stare at charts all the time. I like to simplify my life. We all have busy lives. You have busy lives. I have a busy life. I have a business to run in addition. I can't stare at the chart all the time. But what do I do instead? And you can see it a little bit here already on the right-hand side. I ask TradingView or whatever trading platform you're using to notify me when something of interest is happening. And how do you think I got this power bound set up on ZO? Look at this one here. This is the 15-minute time from here. I go back to my alerts. Look what it's saying here. Power bound setup on ZO, oat futures. This is exactly the setup here. This is why I placed this trade, this order. It didn't get filled. I'm being patient. I don't want to chase this move. I could just move it down to get filled at market. I'd rather have the market come to me first. I'll get a bit of a better entry price. And sometimes I miss out on this trade, but that's okay. So this is how I got notified. And in fact, let me go back one more time to my slides just to bring this all together. Because remember, Remember how I used to start trading. I used to start trading like this. That was my initial idea. And I'm asking you now, does this form of trading look anything like this? And I believe you would agree with me that the answer is no, it does not. This seems awfully complex. It will work for some people, but for most people, this is too complicated, too expensive, and in my case, also not mobile at all. I like to travel the world. I like to trade from different places. Well, based here in Montreal, in Canada, but I'm often in Germany, where I'm from. I live in Brazil in the winter times, oftentimes. So I like to move around. I cannot bring this setup with me. I want to have my setup just to be installed on my laptop. It fits right there. Sometimes I bring a second screen just to have a bit more real estate if I want to do other things at the same time. But oftentimes this is sufficient. And you can do this from anywhere. Look at this is my Starbucks cup here. I'm looking at palm trees. This is how I like to trade. Just one screen, one chart, and all it takes is two powerful indicators. And you probably agree with me that these two indicators has completely transformed the way I trade from being super complex to something relatively simple, which will still give you a market edge. This probably also will give you a market edge if you can master it, but also these two indicators will give you a market edge. Will every trade be a winner? Of course not. But over time, and we've seen this time and time again, if you execute the same setup, if you're disciplined, if you use proper risk management, you can find a market edge in your trading this way. Okay, now, but let me explain to you how I actually trade. What's my trading routine? Well, as I mentioned to you, I don't stare at charts all day long. That would be too tedious for me. I do something different. In fact, I set up my alerts in TradingView, whatever your trading platform is. I do this once. I set all my alerts that I want to see. Then eventually I will get notified either in my browser or perhaps on my cell phone via push notifications. I get notified. And then once I get notified, I will open up my chart. And if I like the setup, I always double check with my eyes. If I like the setup, then I execute the trade. And typically in a way which is set and forget, just like the trade here, where I know where my entry is, I know where my exit is, and I know where my target is. That's it. At times it's a bit more complicated when I want to scale into a position, and we cover this in our trading sessions. But this is typically how I trade. It's as easy as this. All right. Now we're gonna go to some charts later on. Once again, maybe even we get a fill on this symbol. We'll see. But let me explain to you. You can see all my alerts coming in here. Yeah, all these different alerts: resistance, liquidity capture, power bounce, and so forth. All these events I find noteworthy. I want to be notified when these happen. And when these happens, I open up my chart, and if I like what I see, I execute the trade. Okay, so let me go back one more time to my slides because I want to share with you, first of all, how you guys can get hold of these two indicators, because we've also put together a very special offer for everyone in the room here today as a big thank you to listen to me speak, for taking time out of your lives. So first off, you have seen these two indicators for the TradingView platform. I love TradingView. I execute most of my trades from TradingView. But if TradingView is not your platform, we also offer these indicators for NinjaTrader, for Modif Wave, and for MT4 and MT5. So if you're on any of these platforms, you could use these indicators. We also have them for TOS, but the offer I'm showing you will not be available for TOS. Because what is this special offer? Normally, this indicator alone, our liquidity IQ indicator, is offered. You can see it on our homepage for $197 a month. But today, you will get this indicator and also MA Rush at a much better deal. So what does this deal look like? So you will get our liquidity IQ indicator and 6 bonuses. And bonus number 1 is our MA Rush indicator. It's our trend indicator showing us, are we currently bearish or bullish? Remember, that's our ingredient number 3 of our power balance setup. You're going to get this indicator as a bonus. You will be invited also to our next live trading workshop next week Thursday on August 6th at 10 a.m., where we will use these two indicators to live trade the futures market. You can follow along. How I execute trade, how I look for setups, how I set up my alerts, and so forth. You will be invited to this live trading workshop with real money, by the way, no demo account. We'll use our own money to trade the market. You will also be invited to our weekly sessions. We call this the members-only trading session, which happen every Tuesday at 12 p.m. Eastern time. And by the way, all these webinars, these are recorded. So if you miss one, no problem. You can watch the recording afterwards. No problem. And you also get an ebook on our indicators and 2 video guides. All these will be included in this offer. But best of all, as a big thank you, we also decided to slash down the subscription price to only $47 a month from $197. Now, this is all that you need to pay to get started. But since this is such a big discount, we have to restrict the number of orders. So for the first 5 orders, we will give you this deal. We can get these 2 indicators for just $47 a month for the first 5 orders. And I promise you, if you follow our setup, our training, and use these indicators properly, these indicators will pay for themselves. Yeah, just look here real quick. This was a trade I took here this morning. You can see it here for $84. Yeah, a quick ES trade on the 1 minute time frame. I was in this trade perhaps for 5 minutes. These indicators will pay for themselves. And all you need to do, and I believe the link is already in the chat. Yeah, it is. It is. Let me just see if that works. All you need to do is to go to trading indicators. There we have it. tradingindicators.com/edge. That's the link here. And Anthony has put this link already in the chat box. So tradingindicators.com/edge to take advantage of this very exclusive offer reserved for the first 5 orders that come in. So don't wait too long if you want to give these indicators a try. All right, so real quick, what's included? We're going to get our liquidity IQ indicator, the one that draws these key levels onto your chart, and the one that finds these liquidity capture events on your chart. Ingredient number 1 and ingredient number 2 for the power bounce setup. In the package as well is our MA rush indicator, the one that shows you the predominant trend direction. I mentioned to you, we have some users who only trade after these labels here. These labels are always alternating, bearish, bullish, and so forth. And the way some people trade, some or users trade, the market is simply following these labels. They go short, and they see a bearish label, and they go long when they see a bullish label. That's the way to trade as well. It's not really a day trade in my view, maybe a bit more longer term, but it works as well. Now it's possible. You will get this indicator. Thirdly, you'll be invited to our next live trading workshop next Thursday at August 6th at 10 a.m. We will use our live market account to trade the futures open, the cash open, using these 2 indicators. And you will also be invited to our weekly trading session every Tuesday at 12 p.m. And I forgot to mention this, you will also have access to our private Discord channel. All this is available at tradingindicators.com/edge. Now, if you have a bit more time, we have 10 more minutes. Let's check out some charts. So I'm going to go here back to trading view real quick. There we go. And let's check out some chart. Let's see, what do we see? Did we get a fill here on this oats futures trade? Now things are just hovering right here at our entry price. I'll be patient. I'll wait. Okay, perfect. All right. Let's see, what else do we have? I'm going to go to some of the charts which might be of interest right now. Let's check out MNQ on the 5-minute time frame. So MNQ, of course, is the Nasdaq, the micro Nasdaq futures, a very popular contract. Many users are exclusively trading this particular contract. Let's see what we could have seen here. Okay, so let's just see what has happened in the market here. All right, I'm going to also enable this indicator here. 1 second, and let's see. All right, this is the 5-minute time frame. Look at this. I just want to show you how powerful this can be. I have to go a bit further back. Let me just see, because we've been so bearish as of late. Just move this around. Let's go show you one setup here. How beautiful this was. Actually, a few of them. Look at this. Bearish trend. That's our predominant trend. Starting from last Thursday, July 23rd. Okay, we'll just switch to bullish, by the way. That's interesting. So we have a change in trend right now on the 5-minute time frame on Nasdaq. Not surprising, we have a huge move up today, but now the momentum has changed, but only now. Up until that point, we were bearish. But let's see which setups we could have found here. I'm going to talk about some other ones as well. And there's some beautiful setups here. Bearish trend, that means we only want to look for the short direction. Long direction is not something that we want to trade right now. Look what happened here. When was that? That was this week on Sunday. We came up to this resistance level here, this green line. What do you see here? Liquidity capture. And you will already know now, these are the 3 ingredients for a power bounce setup. Look at this nice follow through here. Close to the support level here, this is when you want to get out. Same thing here, once again, up to resistance, a bunch of liquidity capture setup, and what a nice move downwards afterwards. Later on, look at this one here, a beaut. Price came all the way up to this resistance level here, this blue line. Liquidity capture and a huge drop off. Okay, this is how I trade the market. I wait for these events to happen. And by the way, there's another trade, which I also like to trade sometimes, which is the zone break trade. So always in line with the trend. The trend is bearish here. So I'm only looking for shorts. But look what happened here. Price is coming down to the support level here. This red level, that's support. And I asked you now, would you go long here? Because it's coming down to support. And the answer should be no, I don't go long here because I would go against the predominant trend. I'm only looking for shorts. So in this case, you can see it here. This level was broken subsequently. So a good thing we didn't go long. You see this zone break label here, this little arrow here. And what can you do then? Well, you go short. Yeah, you short the breakout here in line with the trend. So now support is broken. We went short here. Probably booked our profits here. Price came subsequently up back to the support level. But since support was broken at this point, it will change to resistance, potentially preventing price from going further up, and price may bounce off this level towards lower price level. Exactly what happened here. Yeah, so you can also trade the breakouts. It's not our power bound setup, but that's also a possible trade, which will become apparent to you once you know where these levels are. Okay, so this is how I trade. Okay, Anthony, are there any questions which I can answer so far as we're nearing the end of this presentation? Yeah. Are there any questions?
Yeah, I think there was. Oh, I think you already answered it. Are you able to use this for Thinkorswim? Are any indicators available
Yeah,
for Thinkorswim?
We have the indicators for Thinkorswim, but this special offer, where we offer it for $47 a month, unfortunately, is not available for Thinkorswim. And the reason is not the indicator doesn't work on TOS. It does work great on TOS. We have many users on TOS, but TOS doesn't have any kind of access management, which will allow us to offer it as a subscription product. So if you are interested for Thinkorswim, send me a note shortly afterwards, because we have a lifetime license also available for these two indicators. And for TOS, unfortunately, because of the lack of access management, we can only offer the lifetime license. Okay, so that's yeah, unfortunately, that's a shortcoming of Thinkorswim. There's no access management, therefore subscriptions are typically not possible on TOS. All right, so just as a reminder, guys, if you are interested in taking advantage of our Market Edge super package, which I trade every single day, I'm probably going to execute a few more trades later on this afternoon, take advantage of the volatility in the market, which is always a good thing. Simply go to tradingindicators.com/edge, where you can get this package for only $47. It's a monthly subscription. You can cancel at any time. You're not bound to staying within that subscription for a year or so. No, you can take it 1 month at a time for only $47 a month. And best of all, I forgot to mention this, you will be grandfathered in to this deal. As long as you stay subscribed, you will only pay $47. Of course, once you quit, it will go up to $197. But as long as you stay subscribed, it will only be $47 a month. All right. So with this, I believe I'm coming to the end of my presentation. So look at my old futures trade here. Didn't get the fill yet. Was hopeful perhaps we're going to get it in this trade session here. Didn't get it yet, but nonetheless, I think I might get the fill a bit later this afternoon. This could be an interesting short trade to be executed. All right. Okay, Anthony, I'm going to pass the torch back to you. If there are any questions, I'm happy to answer them. If not, yeah, please take it away. Just one last thing. I mentioned our brand new homepage, which is tradingindicators.com. It's going to show it to you real quick.
Dr. Sinning,
yes.
I think one of our next presenters is having a little bit of trouble.
Okay.
So you could go longer if there's anything else you want to.
Yeah,
if you got another 15 or whatever. I'm not sure how long it's going to take. If you want, you don't have to. If
sure,
you're busy.
Yeah, I'll be happy. I'm not. Well, of course I'm busy, but I'm happy to talk a bit more. Maybe expand a little bit more.
Yeah, you could extend. Yeah.
On perhaps even find some live trades, some other live trades. Okay. Another symbol I took a look at earlier was MCL on the 5-minute time frame. So MCL, of course, is crude oil. So I'm going to go here to the 5-minute time frame. And by the way, this is another thing I wanted to mention. Okay, that's actually an interesting point. So here we are. Let's go to MCL, micro crude oil. This one here, you can see it here, micro crude oil. It's loading on the 5-minute time frame on your chart. And you can see the beautiful, oh, look at this beautiful bounce set up here. Oh my goodness. Bullish trend came, I would not go short here because we're bullish. Even though this would have worked out nicely, I wouldn't have done it. Bullish trend, I'm only looking for longs. Price is bullish. We come all the way down. Guess where? To this red level here. Let me enable mentor mode just for a second. There we go. You'll see in just a second, mentor mode will be enabled. It's recalculating. There we go. So we're coming down to the support level, this red line here. And what did we see at this candle here? A liquidity capture event. And if you're wondering, how can you spot this then? Is your eyesight so good? Well, I guess I'm just used to the chart. It is a little shaded area here. This is a little reddish box here around. That's the liquidity capture event. I've trained my eyes to just see it very easily. But if initially, as a first-time user, you can also enable these labels here for you, which will point out these events with these labels directly on your chart. So what happened here? Bullish trend. We're coming down to support and a liquidity capture event. Which setup is that? Yeah, what's it called? This is only 5-minute time frame here. It's happened at 9:30 or 9:20 this morning. Well, if you go back to my charts here, my slides here, it is, one second. Oh, there's so many examples. It's this one here, the bullish power bounce. The exact setup I'm trading every time. Price comes down to support. We have a liquidity capture event and the trend is bullish. Rinse and repeat. These are very easy to spot once you train your eye. We can see it here. Bullish trend, we saw this earlier. Price comes down to support and we have a liquidity capture event. All three things are coming together. These are tradable. And by the way, guys, these are setups with a great reward to risk ratio. We can put your stop loss right below this level. This way I want to get out. If price breaks the level, the setup is no longer valid. Yeah? Typically, if you execute this trade, you have very little risk on your hands because you can put your stop loss very closely nearby. Okay, let's have a look at gold. Gold on the 50-minute time frame. Let me go here to the 50-minute. Did we get our fill here? Not yet. I'm hoping for my fill here, my old trade. MCL, micro gold futures. What do we see here at the indicators load? All right. So, another beaut. Look at this, guys. I just have to go back here. I just saw this one here. What was the trend? Let's do this together. I'm going to ask you the question. I'm going to put a little box here. 1 second so you guys can see it. There we go. What is this setup here? You should be able to identify this now on your own. What is that setup called? It's called the bearish power bounce. Why? Because all three ingredients also here come together. And you should be able to recite these three ingredients right now. What are these three ingredients? Price for the short power bounce comes up to a resistance level. This bluish line, that's resistance. You can see it here, resistance zone. We have this liquidity capture event on the candle which comes close to it, which is a candle which comes close to a key level and has abnormally high volume, has above average volume. And the overarching trend is what? It's bearish. These three things come together, you will short the market there. You enter here around this level, stop loss right above, and you take a profit target near the support level down here. Let's move on.
Sitting.
Yes.
I think that is a great way to end it right there. I think you just gave us a lot of information. That looks like a blow off top trade.
It did, yeah.
Yeah.
Perfect. Is the other speaker ready? Is that what you wanted to say?
Yeah, that's what I was trying to say.
I'm glad to fill the time. So just one quick reminder, if you want to take advantage of this offer, the link is in the chat, tradingindicators.com/edge to get these two indicators for only $47. I promise you, if you follow our instructions and our training, they will pay for themselves. With this, guys, have a great conference. And Anthony, please take it away. Bye-bye, guys.
Thank you, Dr. Sinning. Thanks for that extended topic about gold. I think there's something there for people. Excellent presentation, and thank you for offering today's attendees the opportunity to continue learning from you. The link is in the chat, so check it out. Seems like a great offer. Coming up, our next speaker specializes in identifying one of the most profitable opportunities in investing, major market tops and bottoms. Dr. Jeffrey Scott is founder of Sweeter Trade, a physician, entrepreneur, and market educator who has spent more than 3 decades developing prop tools for identifying significant turning points in the market. Today, he'll explain where some of the biggest money is made at market tops and bottoms. So everyone, please welcome Dr. Jeffrey Scott. Dr. Scott's still trying to set up his presentation, I think. We had some IT troubles.
Can you hear me okay?
We could hear you though. Yeah.
And you see my screen?
We could see you and we could see your desktop. Now we see your presentation.
Okay, so we're okay. We're going to be just fine.
Yeah.
Swap that view.
There
Yeah,
you go.
I
That
would have.
looks good.
All right. I think we're good. So thank you. I'll clean that up. Thanks for everybody. Sorry I'm running a few minutes late. As you'll hear in my presentation, I work full time, not trading, and so I try and do these from home. I've done the for this group before, but they changed some of the internet firewall blocking. I'm in healthcare, and probably the most protected data, even beyond financial data, is personal health information. And so we've got firewalls and blockers like you wouldn't believe. So what I'm going to talk about is my favorite, which is bottoms. We can talk about tops too. But if you're watching the markets today, I'm sure you're asking yourself the question, is this possibly a bottom? Are we done going down? And I'm going to show you by the time I finish what I think my answer is, and it's probably a no, but I'll show you what I'm going to need to see for it to be a bottom. I'll give you some background of why I like bottoms, and we'll go from there. So again, Jeffrey Scott's my name, and my email address, if you have any questions, is marketmripro@gmail.com. I do these sessions for educational purposes only. Anything I talk about that I might be thinking of doing or doing, this is education. It's not investment advice. And the intent of this video and this presentation is just to show you how to use the tools. Trading involves risk. You are solely responsible for any investment decisions you make, and trading stocks and options should be considered risky, and always consult with your advisors. I do have a platform. I'm going to be using it I'm going to be jumping between PowerPoint and the platform. Basically, I've been trading for 30 years. I've learned from a lot of smart people, and I found that I was using 5 different programs every night. And one of my followers was actually looking at early exit from Intel when they were going through some restructuring, and he basically, with me, built a platform, and it's been in the market for a couple of years. Like I said, I've worked full time in healthcare, and I am not a marketer. I'm not out there pumping my product all the time, so a lot of people haven't heard of it. But I'll show you some of the things that we do in the product today. If you have any interest, just drop me a line, and I'll see what I can do for you. But more importantly, I'll show you other areas that you can see the product in action. One of my partners in the product, his name is John Person. Where I'm a physician who loves trading, John is a trader. John has done everything from authoring multiple great books on trading. He's one of the few people that I know that have their own indicators as part of the stock Thinkorswim package with their name on it. John Person PPS indicator, market catcher. He owned a futures brokerage. He manages money. Brilliant, brilliant person. And he had a package of tools on a different platform that we were concerned about the lifespan of that platform, which is partly why we partnered on the current platform. And we have a live meeting coming up November 5th through 7th in Palm Beach Gardens. Myself, I'm an amateur. Compared to John, I'm an amateur. I've been trading a long time. I've learned a lot. I don't look like that anymore because that was done probably 30 years ago when I started posting on YouTube. But I love teaching and I love mentoring people. And every night I put a video up on YouTube, and I tell you what I think. And if you just look at some of the recent titles that I've done, this is old, but I could put up a more current picture of some of those titles. And let's see if it's here. Things like Beware Institutional Distribution, Stealth Distribution, Markets Breakdown Yesterday, Markets on Edge, CHOP, Data Center Backlash. I try and give a sense, not of what I'm not telling you what to do, but what I see going on in the market and how I'm going to address it. And I use my tools. I think the mailing list just shows you that I'm more interested in trading and helping people than probably I have a group and they're great uh, because you give a top-down trader without that. And link your Google profile, that group, and when I you get it, and guess what? I don't even know anything else about you. And if you want to leave, you go back in and you unlink. So it's a great mailing list because you control who's there. Why would you join it? Every night I send out an email of what I think's going on, with a link to both an AI video, which is fascinating, and my personal opinion of the market. I do mentoring, and unless I'm paying for something, i.e. a hotel room, I do it for free. Every once a month, I'll do a 3-hour session. A couple times a month, I'll do something at night. I love teaching people. I've had the benefit of learning from really smart people, and I like giving back. In medicine, we call it see one, do one, teach one. And I love the teaching part. I'm not kidding about being in healthcare. I'm a medical oncologist. That's the chemotherapy guy, cancer doc. I actually upset my mom and quit practicing. I've been in the market since the early 90s. I quit practicing in 2001, and I'm in my 5th healthcare startup. I've exited a bunch to Cencora, which used to be AmerisourceBergen, sold one to Cardinal Health, and I've been involved in a couple of others. And I have 3,000 employees, so I can't be sitting by my screen with charts on all day long, or everybody who works for me is going to think that they can do the same thing. And I live down here in lovely Palm Beach, Florida. My office is overlooking the intercoastal and boats. And because we didn't want only the bosses to have the view, my inner walls are glass. So I basically work in a fishbowl, and everybody can walk by and see exactly what I'm doing. So I had to develop a style of trading that fits. I only trade after hours, or I only put my orders in. And again, I've been teaching people for a long time because it's something that I really like. And what really changed me was meeting somebody who had a great perspective and view of the markets, and he was a great teacher. His name was Ian Woodward. And a lot of what I talk about is rooted in CanSlim. William O'Neill, recently deceased, is the proponent of CanSlim and its approach to trading stocks. And Ian learned from O'Neill, but in his own way, I think he made CanSlim better. And what I loved about Ian is his approach to teaching was, I'm not a guru. I'll teach you to become your own guru, sort of see one, do one, teach one, like we do in healthcare. And I've worked with multiple different trainers, and I own every software program you can come up with. And what I do is an amalgamation of all the things I learned over that period of time. And I want to do it in a short period. I want to do it in 30 to 45 minutes a night, because that is me current. And I went to Michigan, and you can tell where I want my granddaughter to go, watching a football game there. But that's what's important in life to me. I love the trading and I love the teaching. Now, what I learned from Ian and the approach I take to the market is top down. And I trade stocks, stock options. I will trade ETFs, options on ETFs. When I don't when I'm in between jobs, i.e. non-compete, non-solicit time, I will trade futures because it's faster. But for what I do, I need a slow approach. So it's top down. I swing to position. I use daily and weekly charts for the most part. The only time you'll see anything intraday on my platforms will be if I'm watching futures at night. I'm just curious, more for entertainment purposes. I don't do much with them. I have a lot of indicators and scans, but to me, everything is about the structure, the price, the volume, the pattern. But those indicators and scans can make my life easier by helping me find the right stocks to look at. I live for one trade. I call that my A trade. It's a stock in a long-term uptrend that pulls back to support, and then I want to buy it on momentum off support. And then I use rules-based position sizing and stop management. And I like seasonality, although I liked it a lot more 10 years ago. I think so many people follow seasonality, perhaps some of the edges are gone. One thing I found, and I'll show you an example of it, a recent example, is my performance is greatest at market bottoms. I make the most money at the bottom, and frankly, I give back the most at tops. So now I look for tops and I go mostly to cash before it happens. And I look for bottoms so that I can put that cash to work when it's going to be hyper active for me. So I mentioned the YouTube videos. April 7th, 2025, I put this video out. And I basically titled it "A Bottom is In." And then before I did the presentation, I said, boy, that's arrogant. What if I'm wrong? I put in, who knows if it is the bottom. And that's actually true. It was pretty obvious to me, and I'm going to show you why, that the market was going to bounce. But I didn't want to sound like I knew for sure. And so I published that night. And that's what I love about the YouTube videos. A lot of people ask me to show them what I picked and do I make money trading? And most of us don't share with you our brokerage statements. So you don't really know if what I tell you is true or not. But you can go back and watch the videos of what happened on top down at the bottom. This is a real account, and just the background. I have a fair amount of money. I've been very fortunate in life. I worked real hard to get there. And I would have people comment that if I have an 8 or 9 digit portfolio and they see that as my model account, it does not make sense to them because they can't relate. And you know what? They're right. That's the wrong thing for me to do. So last year, and I announced it prospective, I said, look, I'm going to put $150,000 into a account. I'm going to put all the rest of my money in professional money. And I did that for a reason. We're about to exit this business, and I want to focus on this business that I'm in. And let's just watch what happens. And a lot of people will tell me 150K is not a small account, and I get that. Now, funny thing happened. That was in January of 2025. By the middle or end of February, I think that account had dropped to 88,000. Why? Because the tariff tantrum, and like I said, I lose most money at the top, so I make most of my money at the bottom. And so I took some pain, I took some heat on the tariffs. And then I made that market call. The next day's video said I'm loading up on Robinhood, Palantir, and then additional stocks. Well, what that little portfolio did between April 8th, which is the day after I did the video, and I gave 6 months to pretty much when the market topped, October 8th, 25, that account was up. It's hard to see for you, I apologize, 465%. Now, you might think that's impossible. Those numbers don't happen. They happen. Go look. I could show you the same thing in March, April 2009. Gosh, 2020 COVID was probably one of my better years ever. Who would have thought that in February of that year? And so I have learned to take advantage of market bottoms. This year we had a shallow bottom early in the year after the beginning of the war. But I kept putting out my videos at bottoms don't occur at tops, and so some of the traditional things that I'm going to look for to call a bottom aren't going to be there if you haven't fallen. And we really, until this last couple of days, had not had that deep of a pullback. We're always within a couple percent of all-time highs. So top-down investing, the market drives half of performance. So I will spend on my 30-minute video every night, I'll spend 20 minutes on market. Why? Because you're probably making a lot of money today, and you probably didn't make a lot of money yesterday if you're a swing to position trader. And what's the difference between yesterday and today? The market. Now, of course, yesterday I looked at my account at around 3 o'clock or 2:30, right after War spoke. They came out, I started speaking, and I was up a lot. And then I came back after my meeting and I wasn't up a lot anymore. So things can certainly change, but it's the market that drives performance. And then it's the industry group, and then it's stock picking. So most people who I know most of my friends, they want to focus on stock picking. And what I try and teach them is no, focus on the market. So let the market determine your stance. Look for your favorite setups in the top industries. And then I like everybody else, I can't help myself. I still want the shiny object. So after I do my top-down analysis, I'll look and see if there's anything that's not in a leading group that looks interesting. I call that bottoms up. And as the markets change, you got to have different tools to understand the market. And then I'm going to flip to the program in just a minute, but I wanted to show you this. I was part of a group. This was Ian's people. I think at the time it was all middle-aged men. And we would meet in the library at Palos Verdes Estates, California. And I lived in California, I lived in Georgia, and I was in practice. So I'd only get to go a little bit to those meetings. And it was before we had Zoom. So it wasn't broadcast. And there'd be a bunch of really smart people in the room. And every month they would make stock picks. And then they had somebody who would record what was picked. And then retrospectively, there was a look back. And that look back identified what type of a market were we in. Right now, what kind of a market are we in? Well, at the minimum right now, I feel like we're in a mixed week. Whether it's really a mixed strong, who knows? But if I come back in 2 years and somebody asks me what was the market like in July of 26, I'll have a much better picture. So retrospective, it's easy. But when we categorized the picks by strong market, mixed strong, mixed weak, and weak market, we found that good stock pickers in a strong market could double their money in 1 month. And the same stock pickers in a bad market lose a lot of money. And that's true. And is this 106% possible? Well, how do you think I got that return in 25? It's possible. Off the bottom, things move in a strong market. But the other message here is reversion to the mean, that if you get a big move, take some profits, and that's part of my trading plan. If my stock moves a lot right off the bat, I put some money in the bank. I like to buy toys. I need money for that, not pieces of paper. And the other move thing was that if you're in a really bad market, things will get worse. So if we go into a recession and you've never lived, not if, when we go into a recession, if you have not ever lived through a bear market, it is a horrible time to be long equities in a bear market in a recession, and seeing drops of 50, 60, 70% in your portfolio can happen, and in the indexes. So I'm not going to have to explain to you what a top is or what a bottom is. For those that are part of the top-down trader group, or those that sign up, and signing up is free, Free. I'm going to put my full slide deck, and I'm not going to go through the full deck tonight, but I'll have that deck there so you can get the full presentation. But I spent a lot of time, looking at what is a top and what's a bottom. But I want to focus on some things, some key points that I think that are out there, and I want to focus on some indicators and signals that you've probably never been exposed to. The cyclical versus the secular piece. It's very important. Right now, we are in a secular bull market, and we've been in a bull market probably since 2009. At some point, that's going to end. If you're in a secular bull market, you should expect the pullbacks, the bear markets, to be short and shallow. If you're in a cyclical bull market or bear market, things happen very quickly. You don't get long durations of moves, so you get lesser moves. If you're in a secular bear, those bear markets, that recession that occurs with the secular bear, you can see massive destruction of your portfolio. So this is actually an important slide. So this is my platform, and I'm going to jump into it because I think it's always better to demo on a chart. And let's see if I, all right, so I'm opening it up. Now, if you're confused about naming, why do I call it Market MRI Pro on my name, but I use Sweeter Trade as the product. I launched a product called Market MRI Pro, and then I tried to convince John Person, who's one of my friends who I mentioned earlier, to join me in the product. I'm just going to open up a couple windows and they're loading. And once he joined, we wanted to rebrand it. So Sweeter Trade is the current name of the product. That Market MRI Pro product still exists, and there's a number of people that are on that have not, likely will not change. Takes a second, like anything else, for the data to come in. But let's start on this chart here. This is my timing briefing. And what I'm going to do is let's open up the queue, and I want to talk a little bit about what I'm looking at, and I want to turn off a couple of things that will be distractions. So everything I show you in this product come with the product, including education. So if you were to look at just the cues here, in fact, if you were to look at the cues where I'm sort of circling, and you had to ask yourself, is this market going up or going down? And obviously we have automated trend lines. There's a trend line, you've got a double top formation in here. But what I wanted to do was I wanted to create a timing model that was not going to repaint once the bar was closed, that would keep me in the market during good times and get me out in bad times. And this is the model. The model includes a trending indicator that's proprietary up here. That's called the bongo. And I have horrible names. I apologize. Blame it on Ian. May you rest in peace. It's something that Ian had myself and 4 others develop for him. And so this is it's not a fast indicator, but it is a good trending tool. And I combine that with a 30-period weighted moving average. And the reason why I have the 2 signals is so they filter each other out. And then down here on the bottom, and of course, let me see if I can move that away. Perfect. I don't know if you could see it, but it was bothering me. I have what my signal is. And I want to be able to come in very quickly, and I want to go to the weekly chart, which is this one here. And I want to look at that weekly chart, and I want to ask, what is the dominant trend in the cues? Well, I look down here and it's green. That's all I got to look at. And that tells me that we are still in a bullish, what's the word I want to use, environment from a weekly and higher time frame. And that determines my stance. So I am not short this market. I shorted a couple of individual things, and I protected a number of my positions. But even with all the craziness that we've had, I am not short this market. However, I use the daily, and this is the first of the way I look at the market. I look at the daily tool to help me understand conviction. And if I look at the daily tool, and the daily tool shows me that I'm in a sell signal, it tells me that this is not a strong market. This is a mixed market at best. I don't want to short when my longer term signals are telling me be long, be long, be long, but I also don't want to be buying and getting chopped up. And that was the environment. And pretty much until right here, we were in a choppy environment. And then we broke down. Now the question is going to be, how far are we going to go? How are we going to know it's a reversal? And what signals am I going to look at here that are going to influence my decision making? So now I'm going to add 2 things and talk to you a little bit about them. And these are some of the best things that William O'Neill and O'Neill Company, formerly the owners of IBD, he wrote a great book on buying stocks, how to make money in stocks. I opened up two things, and let me show you the definitions. One of them is called distribution day. And let's see if I can get you to that one without making us all dizzy. So O'Neill, his framework's called Cancelim, has a thing called distribution days and follow-through days. So a distribution day is when a major index closes lower on higher volume than the day before. And those are important because in an uptrend, as the market starts to accumulate these distribution days, it gives you a signal that the market's not healthy. And they've got great training through IBD, and they actually have sell rules that are actually tied to the number of distribution days. Now, every time I see a new high, I forget about the past distribution days. So it's been pretty clear that ever since we topped here back in June, that we've had distribution days almost every other day. That tells me that this market is very sick. And another reason to be very, very careful. If I go back to last year, and I've been having a challenge with this date function, let's see if I can make it work. So I can pick any day. So let's just pick April 7th. Problem is, it's not going to stick for long. I can go back and look at what happened last year when we had that big market correction. And it was the same thing. We started, in this one, we actually double topped. And you could see the accumulation of these distribution days, which is sort of doesn't make sense to say accumulation and distribution. Yet when we were in a big bull run, as you could see here, we had only the distribution days like we had more recently on pullbacks. So I think accumulation days or distribution days, we'll talk about accumulation in a few minutes. I think that these can be very helpful to me. So I'm tracking distribution days. Another thing I'm looking at is called the Hindenburg omen. Now, a lot of people will think that the Hindenburg omen is and it's a type of breadth indicator, but will think that a Hindenburg omen is a old wives' tale. And I beg to differ. And don't tell me I don't have those slides because I've got them I've got two decks up. I want to make sure I got the right deck. Oh, actually, all right, I killed it. No worries. It'll be up in a second. Because I think this is, to me, another very important signal. The Hindenburg omen. This, I was told by so many people that this is an old wives' tale. I'm looking for an edge, and I want to put together a number of different things. I want to be able to look at a chart and know if I need to be raising cash so I don't get a big drawdown. That's what I'm doing. So the Hindenburg omen was created by a guy named Jim Mika back in '95. And if you think about the Hindenburg, the dirigible, the stories about how the thing blew up, caught on fire, all these people died. So it's a bad thing, all right? So Hindenburg is not a good name. 5 things have to happen for a Hindenburg omen signal to fire. The NYSE 52 weeks highs have to exceed 2.2%. The NYSE new lows have to exceed the same percent. The new highs can't be more than twice the number of new lows. The NYSE index is in an uptrend, and the McClellan oscillator is negative. Now, what does that even mean? It means that you got a lot of new highs and a lot of new lows. You got overall the index keeps going higher, but the McClellan oscillator says that breadth is deteriorating. Doesn't that sound like the market we've been in? Indexes have held up while breadth is deteriorating. So I asked, how good is this signal? Why do people throw it out with the bathwater? You have to have 2 signals within 30 to 36 trading days for this to be confirmed. A non-confirmed Hindenburg omen does not have any value. And once you see it, it tells you that, to me, the market's at high risk of rolling over for the next 30 days. Now, you tell me if this is an old wives' tale. Here's historical record going back to the '87 crash. Each of these markets had a firing of the Hindenburg omen. Black Friday fired before Black Friday. You had the signal on September 23rd. Black Monday was on October 19th, 34% drop. The LT Capital Management, Russia issues in 98, signal fired in October, and the S&P dropped 19%. .com, 78% on the NASDAQ, 49% on the S&P. Signals on 9/11, all right, you had the signals going into 9/11. One of the three extreme post-omen declines, big decline. We can remember 9/11. And so on and so forth. It seems that every time we get this omen, we get a sell-off. Now, in August of 2010, we got a bunch of signals. But before the market could fall, the Fed signaled QE2 and rescued the market. That is the only false positive on this list. China, the 2021, 22 bear, the COVID crisis. The Hindenburg was firing in January. What did they know about a Chinese virus? It, to me, is an interesting signal. And if you look at statistics, and if you look at a big decline, no, you only get 1 out of 4 is going to be a big decline, more than 15%. But 3 out of 4 have at least a 5% decline. So if you consider, I only worry about big declines of over 15%, yeah, 75% are false positives. I'm more concerned with the others. And the fact that I have a tool that has, if it's positive, there's a 74 to 77% chance that the market's going to drop 5%. Why would I hold on to my holdings? Why wouldn't I want to raise cash? Now, the reason why you might not want to act is this thing right here. These are short-term market corrections, usually. And 80% of the time, even when it drops, it recovers within a year. And the average S&P return on all of these 2 months after the signal is -6%. To me, that's almost a correction. So I use this as a warning and not a sell. And let me go back into the product and show you a little bit of what I'm talking about. So let us try to think the best way to do this. I'm going to jump into this window here, which is my market breadth analysis. And this one is designed, the product will update during the day, but it doesn't update the futures because I don't pay for future real-time feed, and nor the breadth indicators that I need for the Hindenburg and others only update after hours because you have to wait for all the AD lines and advanced decliners and breadth and other things. So if I go back to that April 7th, and you can see I got the distribution days here. I want something, again, that is easy to see and doesn't repaint. And as we're going into a market top into February of 25, before the tariff tantrums, and you come down to this window here, these 3 upside down triangles are Hindenburg omen. And what do they have to be confirmed? Oh, gotta fix that bug tonight. I meant to do it last night and I got too busy. When I see those 3 things falling, I get nervous. And I need to go to April 25. And so when I saw these 3 Hindenburg omens, I started talking to my YouTubes. I said, alone, this isn't enough, but it's enough for me to pay more attention to my timing model. And it's time for me to start wondering about how am I going to deal with a small return, a small pullback rather. I have a number of other signals that will fire. This one here is called the Phoenix. And when this fires in a market that hasn't broken down severely, it shows exuberance to the downside. I have called the Eureka that fires at the bottoms, which is a upside exuberance. Now, when you get an upside exuberance after a sell-off, like we did here, it's very meaningful to the market's going to go higher. So I will do a free event soon where I'll go through the different signals I use for tops and bottoms. But to me, it's putting together a constellation of signals that tells me what the market's going to do. So let me just focus, because I'm going to run out of time, on April 7th or April of last year. So let me go back into the PowerPoint, go into this one, and give me 1 second to find it. I got the top. All right, this is the slide I want to show you. So I sat there on, that's not what I wanted. All right, I sat there on April 7th doing my video. And let me just tell you what I'm looking at here and put it all together. On top are my two, is the trending indicator. The top blue is the daily, the bottom is the weekly. It looks like one indicator, but you can see here there's two. So if I go back here, I could see I'm in a weekly and a daily downtrend. Okay. This here is called the high jump oscillator. And it's a way for me to measure extension. And I was at minus 100, which means these are extended to the downside greater than any other day in the last 200 bars. So I knew I was very extended to the downside. I had my new high, new lows indicator showing very negative. My AD lines had gone very negative, and my up down volume was negative. But the music occurs on this thing here. Right here is that Phoenix, that exuberant selling that occurred as the market started to sell off. The bingo, again, I told you funny names, is an indicator that's the baby out with the bathwater. A Phoenix exuberant selling at the bottom said, oh my gosh, this told me the market bottomed. I didn't even wait. Then I had my Eureka, which is exuberant buying coming in, which you want at the bottom. I'm all in. You can't see it here very well, but you can see it here. This is called the defibrillator. What do you do when somebody dies? You shock their chest. Well, when the defibrillator fires, it is the best sell-off signal recovery I've ever seen. It fired on the bottom. A wide thrust, well published, occurred days later. And then the William O'Neill follow-through day occurred back around here. So I looked for a constellation of signals that told me the market bottomed. So I didn't wait for recovery of the 200. I didn't wait for the recovery of the 50. And then the other thing, just to show you a picture, and then I'll shut up, and I apologize for the briefness and my trouble getting on. Ian taught me a tool, and he looked at percent B, which is how high you are between the Bollinger Bands. 0.5, you're in the middle. 0.1, you're at the bottom. 0.9, you're at the top. And that we know that on a given day, the vast majority of stocks are going to be within their Bollinger Bands. And but on a given day, probably 10% of the stocks are either above or below. I think my internet's blocking this thing as well, figures. On April 7th, the day that I made that call, 80% of the stocks in the NYSE were below their Bollinger Bands. And this tool, which is, I don't know, bad internet, is not running right now, basically showed me why the market bottomed. So just to put it all together, and again, I apologize, like there's at least an hour and a half of material that I put together, and I tried shrinking it down, and then we had the delay to start. My whole thing is I want an edge. I want to have the ability to understand what the market is doing. I want to know, am I looking long or looking short? I want to know what my conviction is, so weekly signal, daily signal. I want to understand the little fine tuning, looking at those Eurekas and the bingos and the bangos and the bongos, which I teach people, the Hindenburgs, and then those buckets. And then I want to be able to understand how much of my cash to deploy. And then the rest of the program, I don't know what, is all about hunting stocks and looking at a top-down approach in different ways to find the leading stocks of the market. To me, it's all about the market. And that's why I focused on that today. Again, I apologize for my technical difficulties. I'm using phone internet inside a metal building, so God only knows how far the delays are. Watch my YouTube videos, reach out to me if you have questions. I'm more about helping people learn how to trade and teaching them the things that I've learned from small people like Ian Woodward. And if there's anything I can do, try to do something like this, just feel free to reach out to me at marketmripro@gmail.com. Thanks for letting me speak. Next time I'm not coming into the office when I do a call for you because I'm not used to the internet being blocked, but I'm sure that's what happened. Thanks for giving me the opportunity.
Thank you, Dr. Scott. That went really well, and thanks for sharing. We got very little delays, and thanks for sharing those indicators. That was really something.
Thank you.
Outstanding presentation. Everyone remember, you'll find Dr. Scott's, well, we have his homepage here. Dr. Scott, if you can put your email in the chat as well.
Yep.
And
right, this is the email right here, marketmripro@gmail.com.
All right. Thank you for being here.
Thank you.
And we look forward to seeing you again in the future.
Thanks so much.
Thank you so much.
Take
And
care.
yeah, thank you for 5 decades of professional trading experience.
Yeah. That means I'm old.
That means your experience. You've been around for a long time. You got a proven record. Thank you. Next up, Stephen Primo. He is the founder of Specialist Trading and a former stock exchange specialist with nearly 50 years of professional trading experience. So again, we appreciate the guys who've been around for a long time. Today, he'll teach 3 exit strategies that can dramatically improve virtually any trading methodology. So everyone, please welcome Stephen Primo.
Hi, thanks very much. I just want to make sure, Anthony, can you see the screen okay?
We could see your screen, and Dr. Scott's still up, so I got to take care of that. Okay, we're good. Yeah.
Okay, we're good. Okay, thank you, and thanks to everyone for joining us today. Today, I want to talk to you about 3 exit strategies that I truly believe will change the way you trade. One of the most important things about trading is not where you get in or what strategy or method you're trading or even what market or time frame. It's really how you get out, because it really matters a lot whether you'll have a successful trade or not. So let me just share with you really quickly as I move on. Let me just see if I can get to the next screen here, or I should say to the next window. Excuse me, I'm trying to, Anthony, I'm trying to go forward on my presentation on PowerPoint.
Okay.
I seem to be scrolling. It's not working. I don't see like an arrow that tells me to move on to the next page. There is one here. I'm looking for it. I'm just kind of stuck there on the first page. I'm scrolling, but nothing's happening.
Is there a button for you to go left or right?
Yeah, that's what I'm looking for. I don't seem to find it. Usually it has something right here. I'm looking. Let me just see controls, or tools. Don't seem to find anything.
Yeah, try to right click.
Yeah, okay. I'm right clicking and nothing seems to be going there. Let me hit the view here.
Yeah, maybe in view.
Okay.
I haven't worked with PowerPoint in the new system yet.
Yeah, I'm really sorry, everyone. I have a great presentation for you, but I can't seem to actually continue on to the next page here. See the window close. Yeah, usually there's a little window or a little arrow that says you can move forward. I'm not really familiar with this platform as well. Someone knows.
Even if you move slowly, nothing pops up.
Yeah, let me try it on my actual. I'll try it on my keyboard here to see for the next slide. No, and nothing is changing. Nothing is moving. Let's see here. Yeah, unfortunately, I can't go forward on this. If you can find something that allows me to do that, we can move on. But unfortunately, I'm kind of stuck here. I'd love to share with you everyone what these methods are. Let me just see.
Yeah, I'm trying to Google it myself. So
Yeah, I mean, while you're fine looking for that, let me just share a little bit more information. But with the people, these are 3 exit strategies that actually you can start using as early as today. In fact, you'd be able to just be able to apply them right now, even while we're still trading. So that's one of the best things about this, is that you can just apply these to any market, to any time frame, and in any direction. So it makes absolutely no difference what market you're trading.
can you try
Yeah,
space bar and
space
arrow
bar,
keys?
space bar, and then what?
Space bar and arrow keys.
Okay. Well, that's give me a go-to assistant. No, unfortunately, it's not doing anything there. Yeah, I'm still kind of stuck on this. I apologize.
That's okay. I'm gonna keep looking for you.
Yeah, I'm still looking. But anyway, as I was saying, well, we're looking for something to, or if anyone happens to know with this platform how to go forward, we can be able to use these 3 methods with any market, any time frame. So many times you'll see methods or techniques where they only apply to one market or to one direction. That's the beauty of these 3 exit strategies. You can apply them to any market, any direction. So if you're an intraday trader, it makes absolutely no difference. You trade crypto, makes no difference. If you trade monthly bar charts of stocks, makes absolutely no difference. You'll be able to apply all of these, okay? Let me just see, I'm looking here for one more thing on my actual chart here. I'm just searching for everything on my keyboard to see if something moves. But unfortunately, I don't find anything here. Boy, I'm looking for the next page up, page down. Let's see if this works. Nope.
Yeah, make sure that you click within your slide too for this on the screen as well, I think. So make sure you click your mouse inside of that area of where go-to meeting is working, and then press those buttons as well. You're probably already doing that, but
yeah,
just as a reminder.
No, unfortunately, let me just, should I hit share
Yeah, try
again?
that. Just try again.
Is this,
yeah, that's a good idea.
okay. Okay, so let's see. So share, let's see. Okay, that seems a little bit different. How's this?
We could see it good. Yeah.
Okay, now let's look. Unfortunately, I don't see an arrow or anything giving me a chance to move forward. And once again, I apologize. There's usually a little arrow or something at the screen where you can go right and left. I'm holding down. Wow. Well, this is the adventure of live webinars.
Yeah.
Have you ever find anything else yet?
I'm not seeing anything different right now.
Yeah. Yeah, I'm trying everything. My mouse, I'm trying the keyboard. I'm holding down the keyboard as we speak.
What about press N, the letter N?
Letter N? Okay.
Yeah.
Nope. Wow. There must be something here with the interface actually, because I gave a presentation just a little while ago using the same platform, but it worked perfectly because there's arrows, little arrows telling you to go right or go left.
Do you want to try logging in, logging back, or log out and log back?
Yeah, I'll try that. I'll come right back and I'll be, hopefully it'll work. Okay, be right back.
Okay, yeah, don't worry. All right, Mr. Primo will be back shortly. He's just having some trouble with the slides right now. probably not his fault. It's probably just the software.
Okay, can you hear me, Anthony? I'm back in.
Yeah, we could hear you. I'm gonna make you a presenter.
Okay, maybe it was something, I know you had issues with the previous. Now, when I see the select, it says select entire screen or whatever, or I'm going to, I guess, click that on. That's my only option.
Okay, we see. Yeah, we see. Yeah, there you go.
Okay. All right, there we go. That was it.
All
I
right.
think that fixed it.
Yeah.
I just had to go back in and try from the start. Okay.
All right.
I apologize, everyone, for taking all that time. Once again, we're having technical difficulties. This must be something with the full moon, but I'll take it from here. And I promise that this happens to be a great presentation. I'm glad that you stuck around because you're going to learn 3 strategies that I truly believe will change the way you trade. So let's start out by looking at this chart, an FANG. Okay, get used to this chart because we're gonna look at it a lot during today's presentation to show you how easily all 3 methods can transfer over onto this chart. Now, let's say you had a buy signal right here, okay? And so as what happens with so many traders, especially new traders, they'll start in and they'll have a great trade. And they figured everything out, where to get in, where to place their stop, how to follow the market, but they don't know where to get out, especially when you have a nice profit like you have now. And what makes things worse is when you talk to someone or you watch someone on TV and they say, hey, you got to hold on. This thing has just begun to take off. You're going to leave a lot of money on the table if you exit now. So you hold out, and lo and behold, this happens. And the next month, you've not only lost your profit, but you're now in the loss column. Well, with one of the methods I'll teach you today, you actually would have exited right here at or near the very top with a 25-point gain. So this is what we're going to be talking about today, 3 exit strategies that will change the way you trade. So welcome once again. My name is Stephen Primo, President and Founder of Specialist Trading. Thank you so much for sticking around for us. Sorry for those technical difficulties, but I have a great presentation for you today. Just to give you a little bit of background about myself, I've been trading now for 5 decades. I started my career on the floor of the Pacific Stock Exchange. I was on the trading floor for a total of 16 years, and 9 of those years, I was a specialist. That's where we get the name Specialist Trading. Specialist doesn't mean you're any more special than anyone else. There aren't a lot of specialists around anymore with the advent of electronic trading, but in the old days, a specialist specialized in making a market in roughly about 50 or 60 stocks. So in the old days, if you wanted to buy or sell a certain stock, you had to deal with the trader who specialized in making a market. So I made markets in stocks like IBM, US Air Waste Management. I made markets during the crash of '87 and the bull market that followed. And in the mid 90s, I left the floor to manage money and also to teach. And that's what we're doing now with Specialist Trading. You'll see our attention to detail in teaching you, especially these 3 educational exit strategies, because we are first and foremost an educational company. Now, before we begin, please take a moment to view our disclaimer. I'm going to share with you a lot of performance results today using these 3 exit methods, but please remember that we can in no way guarantee that any of the results I'm about to share with you will be repeated in the future. And as I stated just before, since we are first and foremost an educational company, all examples are strictly for educational purposes only. Now, just real quickly, if you'd like to get more information and more education on a daily basis, feel free to follow us on X, formerly known as Twitter. There's our handle right there, at SPCLSTTRADG. Every day I post between 4 and 6 different snapshots of signals our strategies have generated, also little bits of financial wisdom. So there's lots of great free education on a daily basis. Please feel free to follow us on X. Now, I'd like to start out today by something that my mentors taught me, because when I first started, even though I was on the trading floor and had access to high-speed computers at the time, which by today's standards were very slow, but we had access to information about what was going on with companies and different events, I still struggled tremendously. And here's what my mentors taught me, and this is what today's theme is. Having an exit strategy can avoid unnecessary pain. When you think about the real terrible times you've had with trading, it usually has to deal with your exit plan, how you exited, not how you got in or not what market you were trading, but how you got out. And most traders really don't have a valid exit plan in place. So I'm going to give you 3 today. Hopefully you'll be able to avoid that unnecessary pain. Now, before we begin, there are only 2 types of exits, 2 types of categories. I know a lot of you think, well, wait a minute, you're giving us 3. Yes, but they're only involved in 2 different categories. Now, these categories are, number 1, a fixed exit. A fixed exit means that you know, oftentimes, even before you get into the trade, where your exit is going to be. So even before you've entered, oftentimes, you'll know that I'm getting out here. And usually you place a fixed exit with a limit order. Okay, you just have it say maybe a good risk reward ratio, 2 or 3 times what you're risking. But you know where that exit is in advance and you just stick with it. It's fixed. Now that's one type of exit. The other type is what we call a dynamic exit. Now a dynamic exit is just the opposite of a fixed. You don't know where you're getting out. And oftentimes you don't know where this exit is even prior to entering into the trade. Why? Because it's based off the market movement, the ebbs and flow of the market. Now, one of the advantages of having a dynamic exit is that you will be able to stay in these trades longer if you have a really nice winner. But the disadvantage is you don't know where you're getting out in the beginning. You're kind of just at, a leaf at the mercy of the wind. You're waiting for the market to tell you. One of the advantages of a fixed exit is that you know where you're getting out and you have that security of knowing, well, if I have a profit, I'm making so much. Now, what most of our students say is, well, Steve, what is the best one to use? There is no best one because everyone's different. Everyone likes to trade different style. When I first started trading, I used to like to use dynamic. Now I'm more of a fixed exit user, but it makes no difference. What only makes a difference is if you are trading out of sync with your persona. So you have to do a little soul searching and ask yourself, which type of exit category makes me feel more comfortable? Am I more comfortable with a fixed exit, knowing in advance where I'm getting out? Or am I more comfortable with a dynamic? And once you find out, then use that style or that category. That's the most important thing because one is not more important than the other. Okay, so let's start out. Let's share with you exit strategy number 1. We call this the previous high, previous low method. Now, who is this strategy for? Well, it's for traders who want a fixed exit. So if you've decided that you're a fixed exit type of trader, this would be a good method for you. So let's look at the chart, okay? Once again, get used to this chart. We only use this older chart for educational purposes because we want to transfer all of the exit strategies onto the same chart. So we're looking at this chart. We see that the market went up rather well. And let's say you're a candlestick trader. All right, and what do we have here? We have a bearish engulfing pattern. So that's a very negative pattern. You say to yourself, well, I'm going to sell because according to this candlestick pattern, we should be going lower. But where do you get out? All right, remember, we're trying to avoid unnecessary pain where we have possibly a nice profit and then we hold on too long and then it turns against us. So with exit strategy number 1, previous high, previous low, if we're going short, let's say we buy the puts or even shorted the stock, whatever we do, we want to look for where the most previous low was, and that would be right here, okay? So the concept behind this method is that price will gravitate towards that previous low. This previous low will act as a magnet, pulling price down towards it. Now, it doesn't mean that it will go exactly where that low was. Sometimes it will, but sometimes it'll come just before it. Sometimes it'll touch it. Sometimes it'll go past it. But for all intents and purposes, price will most likely gravitate towards this area right here. So let's say you use the exact same price as the previous low for your exit plan. And guess what? In about a week, you have a nice little gain right here and you covered your short or you sold your put, whatever you had. And look what happened. Price started to bounce back up. This is the way price works. It always wants to gravitate towards the previous high or the previous low. So we can use that as an exit plan. Now, let's say we have another signal here, and this time it's a buy. And so you want to use the same exit strategy, the fixed exit. So now, since we're long, we look for the most recent high, and that would be right here. This is the previous high. Once again, price is going to gravitate. If you have a strategy that is, pretty well documented, that it has some nice consistency, well, most likely it will gravitate towards that previous high. Now, if your strategy doesn't have a lot of consistency, it's not going to be pulled towards that area because the strategy is not valid. But if it is valid, most likely it's going to go in that direction. It's going to act like a magnet, pulling it to that direction. And you can either place your exit a little bit below, right exactly on it, or maybe a little bit above it, because this is not telling you that it's, in stone, saying in granite or in stone that it has to stop exactly at the previous high price. It's just saying it's going in that direction. So you place it right where this previous high was, and let's track the trade. We see that it's starting to go higher. It's going towards her. And yes, in a couple of days, you have a nice profit and you exit it. Now, this is a problem that most of our students, especially new students, face, is that they'll use this and say, hey, gosh, this is great, Steve. And then all of a sudden, they see that it goes higher and it continues to go in the right direction. Remember, we did not state that it's going to stop there. It's just being pulled in that direction. It's acting as a magnet, pulling it towards that. So you can decide to either maybe sell a portion of your position here and then let the rest ride, or whatever you want to do. But looking back in hindsight, had you not sold, you would have been kicking yourself for not using strategy number one. So let's review exit number one, the fixed exit. If you're long, you want to exit at the most recent short-term high, anywhere below or above that, or even on that exact number. And if you're short, you want to cover your short or exit at the most recent short-term low. It's that simple, okay? That was exit strategy number one. Let's move on to exit strategy number two now. And we're going to call this the 5-period simple moving average plan, all right? So what does this mean? And who is this strategy for? Well, it's for traders now who want a dynamic exit. So we're using the exact opposite category now. Remember, a fixed exit, as we just saw, tells us in advance where we're getting out. We know exactly where we're getting out, and we just kind of sit and wait. Whereas a dynamic exit doesn't really give us any clues until the trade begins to unfold, and then we get a clear-cut idea, but it's not fixed or set in stone. We still have no idea. Why? Because it's based on market behavior. We are letting the market tell us where to get out. When we use a fixed exit, we are deciding where we're exiting. But when we use a dynamic exit, the market is deciding where we are exiting. Okay, so let's go back to our old friend FANG, and let's use that buy signal. Once you are long or are deciding to get long, what you want to do is on the chart, and remember, it makes no difference if we're looking at a 5-minute chart, a weekly chart, if we're looking at crypto or currency pairs. This can be applied to any market, any time frame. You want to apply the 5-period simple moving average, as we see here. And here's the way it works. As long as price, since we're long, closes above the 5-period moving average, we will stay in the trade. Now, it can oscillate above and below. It can open below. It can trade intraday below. But as long as it closes above, we will remain in the trade. That's how simple this is. So let's watch the trade unfold and see how we would have actually traded this, okay? So as the trade unfolds, we see we are starting to go in the right direction. We are still closing every day above the 5-period moving average. And now we have a nice profit. In fact, we have a better profit than we would have if we used the fixed exit, which would have gotten us out right here. And it continues to go higher, even though we had a down day. It continues to stay above the 5-period moving average. Now here is where most students make the mistake. They say, well, Steve, I sold it because it traded and touched the 5-period simple moving average. And that's where I say, well, listen, you didn't follow the rules correctly. It's okay if it touches. It just cannot close below there. And as you see, we opened roughly right on the moving average, traded below it intrabar, but where did we close? We closed above. So this is still an active long position. We haven't done anything yet. We're still in the trade. And as we watch the trade unfold, we see that we continue to close above, and we would have kicked ourselves for exiting right there 3 days ago because it still has not closed below. Even though we have down days, it has not closed below. Now, remember, you are always free to exit whenever you'd like. Even if you say to yourself, well, I'm using the 5-period simple moving average exit plan, but you know what? I've got a great profit. I want to get out. Sure, you're always free to do that. There's no rule saying, no, you if you're using this, once you're using this, you cannot alter. That's fine. You could have sold whenever you wanted to. But remember, if you're going to sell, base it either off the rules of this method or just off your own discretion, but not where you're implementing the rules incorrectly. Now, right here, we closed right on the 5-period moving average. Is that an exit plan? No, it's not, because we have to close below it. So we're still in this trade, but then look what happened. Now we closed below, okay? We definitely closed below. So we have two choices here. We have an aggressive decision we can make, or a more conservative way to trade this. Now, here is exit A. If we want to get out and we say, all right, I want to take my profit. I've got a nice gain. I've been in this for about 3 weeks. I want to take my money and run. You just simply exit on the close once we close below the 5-period simple moving average. That's method A. If you want to be a little bit more conservative, what you would do is draw a line just below the low of the first bar that closes below. And this would be exit strategy B. And what this says is, well, we're not going to exit yet, but if we trade below the low of the bar that closed below the 5-period simple moving, then I'll exit. So at least I know I have a locked-in profit from here to here, okay? Because sometimes you'll exit using plan A, and it'll continue to go higher. And you'll say to yourself, well, why did I get out? So if you want to be a little bit more conservative, what you'll do is use method B, okay? All right, so let's say we used method A and we got out. Okay, so we're out of the trade. Let's see if it would have been better to use method B or method A. Well, look what happened on the next bar. We gapped down, and with method B, we would have been exiting on the opening, since we had most likely a sell stop there. And we still made a profit. It would have been better than the dynamic exit strategy number 1, but that's okay. We still got out with a nice gain, okay? And looking back in hindsight, what if you had held on, like most traders do, and said, well, I'm going to wait. It's going to come back. In fact, maybe I'll buy some more. So remember, we're trying to alleviate unnecessary pain. So you had two choices there, using method A, which is more aggressive, or method B, which is a little bit more conservative, but at least got you out as well. So let's review exit strategy number 2, which is a dynamic exit, meaning that we are waiting for the market to tell us how and when we exit this, okay? Let's review exit plan A. If you were long, or if you even have the calls, it doesn't matter what contract or what you're trading, just as long as you're long the trade, you will exit at the market on the first price bar that closes below the 5-period simple moving average. That's it. So if you had options, you'll just get out of them. Regardless of what the price is, you'll just get out, because we're basing everything off of market behavior. Now, if we're short, or if we have puts, makes no difference. You will exit at the market on the first price bar that closes above the 5-period simple moving average. Because even though we didn't show you an example, let's say you have a nice profit is going lower. Should say the market is going lower and lower. You have the puts, or you shorted the stock. And all of a sudden you have one up day where you close above the 5-period simple moving average. Well, if you're using plan A, you'll exit on the close of that first close above the 5-period simple moving average. Now, this is the more aggressive plan. Let's use the more conservative way, which is exit B. If you're long, this is a little wordy, but looking back at that example, that chart example, and I believe this is being recorded, you can go back and watch this as often as you like, but you will exit when the price trades below the first price bar to close below the 5-period simple moving average. So when you have a bar closing below the 5-period, kind of draw a little line there, okay? And if we trade below there, remember, it doesn't have to close, but if we trade below there, well then, or I should say, I'm sorry, we close below there. It doesn't have to just trade, but it has to close below there. Then we will exit, okay? And with the shorts, you'll exit when price trades above the first bar to close above the 5-period simple moving average. It's really simple. As I said, it's a little wordy, but go back and look at this video and it'll make a lot more sense. So this was dynamic exit number 2, right? Now let's move on to what I feel is our most popular way of exiting. And I would venture to say that most of our students of specialist trading around the world use exit strategy number 3, and I'll share it with you today. And that's what we call range extensions. Okay. So who is this exit strategy for? Well, it's for traders who want multiple fixed exits. Now, this gives them the ability to increase their risk reward ratio. So this really is kind of a hybrid fixed exit method. And the advantage of this is that it gives you different choices. It just doesn't give you one plan of attack or two, the way exit strategy number 2 did, but it gives you multiple ways to exit. And you can decide for yourself out of all these different opportunities where you want to exit. Let me show you how to construct this particular exit strategy. Let's go back to our old friend, FANG. All right, so we have a buy signal here. Now before, with exit strategy number 1, we wanted to exit here at a fixed exit. With exit strategy number 2, we placed a 5-period simple moving average and we just tracked it with that. But with this, what we want to do is a little math first. We want to first identify our setup bar. Now, a lot of traders don't know what a setup bar is. A setup bar, regardless of what strategy, it can be based off technical indicators, it can be based off fundamental news, it can be based off the full moon. It makes no difference. But when all the requirements come into play, the bar where that happens, that's called your setup bar or your signal bar, okay? Now, usually when you have a platform like we have ours here, this is the PTS Primo charting platform I designed and developed with Pro Trader Strategies. When you have a signal, it will automatically generate and automatically display a green arrow for a buy signal and a red arrow for a sell signal. So that's your setup or your signal bar, usually above or below the arrows, okay? So this is our setup bar right here. What you want to do is measure from top to bottom. And I don't mean from open to close if you're looking at candles the way we are here, but I mean from extreme high to extreme low. So in other words, from the top of the wick to the bottom of the wick. And you measure the point range. Okay, let's say, for example, this is 5 points, just off the top of my head to make things simple. Okay, so this would equal 100%. That's 5 points. So what you want to do is once you know the point, you simply add that amount, that point amount, to the top of the setup bar or the signal bar. And that will give you the 200% exit level. Now, wherever that level is, 5 point higher, you now add another 5 points starting at this level, and that will give you the 300. Wherever that level is, wherever that number is, let's say it's at 150, you add another one, and that will give you the 400%. And finally, you do it one more time, and this gives you the 500% exit level. So you should have a total of 4 different exit range extension exits. All right. So how do we use this? What's the plan here? What's the concept behind these range extensions? Well, if you're the type of trader that likes to get in and out quickly, if you've got maybe a day trading background, which I have myself, then you most likely are going to use the 200% exit, meaning that you'll get in and out quickly. You don't want to tie up your money a lot, or maybe you're intraday trading and you maybe like to trade a lot. Maybe you have a lot of signals going on, or maybe you have a lot of positions and you don't want to tie up your money and you just want to get in and out quickly. You will most likely use the 200% exit level. Now, the thing about this is that the 200% exit level isn't a very high risk reward ratio, meaning that you're most likely going to make the same amount you're risking. And most traders will say, well, that's not very good because you'll be over time, you're just trading water. But if you trade a method that has a high level of consistency, that has a high win ratio, has more winners than losses, well, then most likely it's okay to use this level, okay? So that's what the 200% exit range is for. Let's say you're more of a swing trader and you'd like to make at least 2 or 3 times more what you risk. Well, then you would apply either 300 or 400% range, okay? So you could use those levels if you're more of a swing trader and you think you're going to get a nice move and you'd like to get a better risk reward ratio. Now, let's say you want to squeeze out as much profit as possible and you've studied the stock or the future or the currency pair and you think you are going to have a big move. Most likely then you would use the final range extension level, which would be right here. Now, here's what we tell all of our students in the beginning, while you're using this, experiment with them, paper trade, to see which level best meets your needs. Okay. But if you're going to be using the last final level, which is 500%, we recommend that you exit your position entirely. In other words, don't continue to hold on or think that, well, gosh, if it worked at 500, what about 600 or 700 or 800? Because most likely we've seen over time, even though this is not a statistical revelation, since we're not a statistical company, we're just an educational company. But over time, we've seen face value that most likely it will stop price trend and will change right around that 500% level. And so you don't want to be sitting there thinking, gosh, why didn't I exit? Because now I've lost half my profit. I wish I would have exited, excuse me, at the 500% level. So we recommend to all of our students, especially new students, if you're going to be using this final range extension, to exit your position entirely. Now, there are a number of ways in which to apply this, okay? Sure, you can say, well, I'll get out of everything right here, or everything out of everything right here. What you could do is break up your position. Let's say you have a couple of hundred shares. Well, maybe you want to sell 50 shares here, 50 here, 50 here, and 50 here. Or what a lot of our students still like to do is use these as benchmarks. So in other words, let's say price went up to 200. If their stop was somewhere down here, then they would move their stop to break even. So if it did turn around, well, they didn't exit, but at least they didn't lose anything. And they just exit with a break-even trade. Now, if price goes up to the 300% level, well, then they would move their stop up to 200. If price goes up to the 400% level, then they would move their stop up to 300. And then ultimately, if price gets up to 500, you're out of the trade entirely. You see, there are a number of ways to use this. You can, do it all at one level and exit everything entirely on one trade, or you can use different multiple levels to exit a portion of your position, or you can use it to track the trade. It's entirely up to you, but this is our goal as an educator and as an educational company. We want to provide you with this information so that you can decide what feels the best for you. Some of our students are like me. They say, you know what, I get out at the 200% and that's fine. I'm okay. Others say, no, I always use a 500% because for the market I trade in the time frame, it works more often than not. So I like to use that. There's no right or wrong answer. Once again, what's right or wrong is when you buy a strategy and it tells you you have to exit here, you have to enter here, you have to place your stop here. That basically is taking you out of the game. And what you're saying is, well, I don't know what to do, so I'll let this decide for me. And you should never get to that point in trading. That's why, in my opinion, why most traders fail. Myself included, my first year, that's the way I used to trade, based off what some system was telling me what to do. And I couldn't make a dime because it wasn't consistent. It wasn't until my mentors taught me that I had to be a part of the process that I started to become a consistent trader. And that is what has sustained me now, I think, for roughly 5 decades. Okay, so let's say you're in this trade and you say, well, I've done my research, Steve, and I really think this is going to have a big move. Well, then most likely you'd want to exit at the 500% level. And remember, you want to get out of your trade entirely. So you place a limit to exit, 100, 200, maybe 1,000 shares, whatever you have, and you want to be out entirely right here. Well, let's see what happened. Well, a little over 2 weeks, you got out at or near the top for a nice 25-point gain. Not a little bad trade, right? And then look what happened right after that. This is why we really recommend, we don't suggest, but we require for our students, especially our beginners, to exit your position entirely at the 4th and final range extension, because we've seen over time that that's most likely where the trend is about to change, okay? Okay, so let's review exit strategy number 3. This is a fixed exit. Now, if you're long, what you want to do is measure the range of the setup bar. Remember, if you're not familiar with that terminology, a setup bar is where all the requirements come into play, where all the rules have been met, and you decide you either have a buy or a sell signal. In this case, a buy signal. That's the setup bar, or commonly referred to as the signal bar. Usually, if you have a platform, this is the bar that is above the green arrow. Okay, so you want to measure the range from top to bottom and then add it to the bar's high, and continue to add it 4 more times. These are the range extension exit levels, and you can decide for yourself how and where to exit. Now, if you're short or if you bought the puts, Well, you want to do the exact opposite. You want to measure the range of the setup or the signal bar. This will be the bar that is below the red down arrow, okay? And what you want to do is measure that range, say it's 10 points, and then subtract 10 points from that signal bar's low, and continue to do that about 4 more times. And these are the range extension exit levels, okay? As I stated, these are the most popular and most used amongst our students because they give them the opportunity to pick and choose which exit levels they want, and therefore they can change and increase their odds for a more risk-reward ratio trade. So there you have it. 3 exit strategies that I truly believe will change the way you trade. My only suggestion now that you know the rules, is to paper trade with them first to see which one feels most comfortable. You can apply different ones at the same time. I wouldn't suggest using all 3 because you'll just overcomplicate things. But some of our students use 1 or 2 different methods in different trades because they're different environments or different type of volatility. So it's up to you. I would stick in the beginning with just 1 and then move over to maybe using 1 more when you feel a little bit more comfortable. But please paper trade them first. Remember, the way to become a consistent trader is not by blindly following what someone else says or does. It's by being provided with this information and then you yourself deciding how you want to trade it. In my 5 decades of trading, this is the only way I have found that traders become consistent. Now, a lot of traders, especially beginning students we have, say, Steve, this is great, but you know what? My strategy is terrible. I don't even have winning trades that would be able to apply any of these methods. It's just terrible. So I don't even have a strategy to trade. Well, here's the good news today. For all the people attending today's Investor Summit, we have a great special offer at a very, very low discounted price for all of you today. We're going to offer you what we call our Secrets of a Stock Exchange Specialist training sessions. This is 3 hours of trading techniques plus a full-fledged trading strategy. Now, when I say full-fledged trading strategy, I mean it comes with all the rules for entry, all the different variables for entry, all the different exit variables, and all the different stop placement variables, as well as ways in which to manage the trade. Many more high probability trading edges. I also talk about in the 3-hour video which indicators not to use. I go into detail what the difference is between a system versus a strategy. I tell you what I feel is the #1 chart pattern that you should be looking to identify in any strategy or any method that you're trading. You should be able to find this chart pattern within that strategy. I also tell you how to be on the right side of the markets. I give you different ways in which to automatically know that you're in sync with the overall trend. And remember, everything I present in this 3 hours can be applied to any market in any time frame. Okay, I see so many classes or so many offers with different educators, and they say, well, this is great, but remember, this will only work on Apple stock, or this will only work for crypto. Everything we teach and trade, just about 99% of it, can be applied to any market in any time frame. Okay, and this all comes along with educational correspondence. At any time, you can contact me if you have any questions. Here's the best thing about our Secrets of a Stock Exchange Specialist video seminar. We will give you the complete rules. And when I say complete, I mean complete rules to strategy #1. Okay, let me give you a little bit more info about strategy #1. This is a pullback method that's designed to buy at lower levels and to sell at higher ones. If you're not familiar with pullback strategies, what pullback methods look to do is they want to define the overall trend, and then they look to buy on those or sell on those counter trends. So if the overall trend is up, it's kind of a stair-step approach. They look to buy in that little stair-step downward sell-off where everyone thinks the trend has changed and look to see that all the requirements have been met and then generate a buy signal. If it's a sell signal, you're in an overall downtrend, and those little bounces, those little rallies are actually selling opportunities, and you want to look to sell on those bounces where everyone thinks we've bottomed out. Okay, a good case in point is you want to look at the market today, especially the NASDAQ. We've been in a very, very strong downward market trend the last couple of weeks. Okay, today we're having a nice bounce. So is that something you should look forward and say, hey, well, this is a buying opportunity. I want to go buy and pick the bottom here because we've bottomed out. Or perhaps is this just a pullback telling you that we're still in an overall downtrend and this little bounce today or the next couple of days is actually going to be a selling opportunity? Well, if you had strategy #1, you'd be able to find out which one it was. Let me show you some older examples here of strategy number one in play. Looking at an older chart in PLTR, all right, obviously we are in a nice upward trend, okay? But then this happens, as with so many stocks. All of a sudden you break that upward uptrend, and maybe that guy in that chat room or guy on TV says, we're now in a downtrend, so it's probably a good time to sell your position or to go short or just to avoid this stock altogether because we're now most likely headed lower. But with strategy number one, it would have, by looking at all the requirements, known that we were not in a downtrend or the beginning of a downtrend. This was actually a pullback, meaning that this was just a sell-off in an overall uptrend. And it was actually a buying opportunity and not a selling opportunity. And strategy number one generated 3 buy signals right at or near the very low of this sell-off. And look what happened in the following weeks. It shot up 35 points. Now, what if you had listened to that guy in the chat room or on TV and gotten out of your position in PLTR because he says, hey, most likely it's going lower, we've broken the uptrend? You would have been kicking yourself or hitting yourself in the head saying, why did I exit? I just left 35 points on the table here, okay? Well, that's the beauty of strategy number one. Let's look at another example in a completely different market. This is a daily chart of the Australian dollar, okay? Now, obviously, we're in a downtrend, but then what do we have here? Well, we broke that downward trend line and looks like we're going higher. In fact, we have a bullish engulfing pattern right here, extremely bullish sign here if you're a candlestick trader. So most likely we've bottomed out, right? Time to go long, right? Well, not according to strategy number one, because this is not the beginning of an uptrend. It's not time to go long. This was actually a pullback. The overall downtrend is still in play. So this is not a buying opportunity. This is a selling opportunity. And strategy number one generated a sell signal right there at the very close of that high bar. And look what the Australian dollar did in the following days. Went down 460 pips, or close to $5,000 per unit, close to that potentially you could have captured, okay? Another example in currency pairs, a different time frame though, here's a 4-hour chart of the Canadian dollar. This is a classic high-level consolidation. Little flag here, looks like we're getting ready to bust up to the upside, but then look what happens. It broke that support there, so guess what? Are we in a downtrend? Nope. This is a pullback. Excuse me. This is a buying opportunity where everyone thinks, well, the consolidation is over, we're going lower. No, you want to be buying. And strategy number one, even though we teach you the rules on our platform, it automatically generated these 3 buy signals at or near the low before the Canadian dollar went up 300 pips or close to $3,000 per unit. Potentially you could have captured roughly in just 1 week, okay? So it makes no difference which direction, which market. Here's one last example. This is IIPR, I believe. Hard for me to have my glasses on, but we are clearly in a downward trend here. We gapped down, but look what happened. We started to firm up. And maybe that guy in the trading room says, hey, this is in a solid uptrend now. In fact, this was the buying opportunity. This was the pullback. Now we're starting to go higher, okay? Is that the right call? Nope, because we're not in an uptrend. We are still in a downtrend according to the rules of strategy number one. And this is actually a pullback, meaning that we're looking at a selling opportunity. So even though it looks like we're going higher, and someone may have said, we're going to come up and fill in this gap here and maybe make new highs. Nope, you want to be looking for a selling opportunity. And strategy number one generated 2 sell signals right here. And look what happened in the following days. The stock fell out of bed 35 points. Now, obviously some news or some event happened for it to gap down from roughly 95 all the way down to 73. But it's funny how strategy number one was telling you to get out almost a couple of weeks in advance, because it knew that that bounce was not an uptrend. It was just simply a selling opportunity. This is why I say, if you had strategy number one, you would know whether this bounce today, at least it was before I started this presentation, the market was bouncing. For all I know, it's maybe down today. But when I left, it had a nice upward move today. Is that a buying opportunity, or is it just simply a selling opportunity? If you have strategy number one, you'll be able to know. And here's the good news. A year from today, you will have wished you became a member of this course. Why? Because the full rules to strategy number one are included in our 3 hours Secret of a Stock Exchange Specialist course. So Remember, more high probability trading edges. I tell you which indicators to use, but more importantly, which ones not to use. I talk about the number one chart pattern that you should be able to identify, regardless of what method or what market you trade, how to be on the right side of the markets, most especially the complete rules to strategy number one. Remember, everything I teach in this 3-hour course can be applied to any market and any time frame. This course is so jam-packed full of information, techniques, tidbits, and strategies, indicators that I've accumulated in 5 decades of trading. It's so much, there's so much information for you on the Pro Trader Strategies website. It's usually advertised for close to $1,000. But here's what we're going to do. Because of our association with Investor Summit, we're going to drop the price down tremendously, but for a short and limited time only. You'll be able to pick this up for $37. Okay, $37 from $9.97 down to $37. But please remember, this is for a limited time only. I believe it's probably only until 4 hours, and then it goes back up to 1,000. Remember, you're going to get 5 decades of things that I've accumulated that's taken me that long to accumulate for just $37, probably for less than you can go out to lunch this afternoon, not even by yourself. I mean, with someone else, but most likely by yourself. I went out to lunch with someone the other day. It was like $75. So think of it. For $37, you'll get 5 decades worth of information that's taken me that long to accumulate, and it's yours. But this is for a limited time only, most likely for just for the next 24 hours. So here's how to take advantage of this. Contact my sister site, Pro Trader Strategies. They're in charge of all the discounts and all the tech support. There's their email address, but I would highly recommend giving them a call at the phone number you see right there, area code 310-598-6677. They have trading consultants manning the phones right now. They'd be more than happy to sign you up over the phone or answer any question that you may have. Now, that link you see at the bottom there below the phone number is the link that will take you to the info page for this offer. It's not a live link, though. I don't know if they're going to be posting that on the GoToWebinar page there, but if you want to, you can copy and paste that onto any browser. But I would probably suggest the best thing to do would be just to give Pro Trader Strategies a call. Like I said, there's absolutely no obligation. They would be more than happy to answer any question or to take your order over the phone at 310-598-6677. Well, believe it or not, we are at the end of today's presentation. I made it even with that snafu at the beginning. We still have a couple of minutes left. So if there are any questions, I'll be more than happy to answer them at this point. I don't know if Anthony, if you want to read them to me or.
Yeah, I don't see any questions. And yeah, I think we're at time as well. And
Okay.
I put the offer in the chat box, so make sure you check it out. And
Great. If I could just say one thing, because
Sure.
I get this question a lot in other webinars I've done. Someone says, well, you know, I'm not this type of a trader. I've never traded this way before. I'm usually, you look at the news or something. Don't worry. Every one of my students, regardless if you've been trading for 30 years or 30 minutes, everyone gets my private email address. It doesn't go to an intern. It doesn't go to an assistant or to a salesperson. It comes directly to me. So if you have any question concerning something on the 3-hour course, you can ask me at any time. I'll check your work of a trade you happen to be in. And so you're once you're a student of mine, you're a student of mine for life. So you can always reach me during market hours or even on the weekends. Okay. I just wanted to put that out there.
Well, thank you, Mr. Primo. We appreciate it. And I also appreciated watching your seminar today too. So thanks for being here.
Thank you so much. Thanks everybody for attending.
Thank you. Fantastic presentation, and thank you for sharing decades of experience with us today. That is very valuable to us. Everyone, Stephen's special offer is available in the chat, and be sure to take advantage of it. Coming up next is one of the industry's leading experts on multiple time frame analysis. Greg Capra is founder of Master Trader and one of the industry's most respected technical educators. Today, he'll explain how professional traders use multiple time frame analysis to identify higher probability opportunities with avoiding low quality trades. So everyone, please welcome Greg Capra.
All right, thank you.
Thank you.
All right, let's get started. We've got a short amount of time, and you're going to learn a tremendous amount here. We're going to put together a whole plan here that you can start using immediately. As always, if you have questions, put them out there. Don't be shy. I welcome them. Happy to share. There's always questions if you think about what to ask, and I'm sure there are. And if you don't think of them now and you want to email me, greg@mastertrader.com. So one of the questions that often comes up but never ask, why do so many lose? Why are there so many losers? You've probably heard the statistics. You might be wondering, why am I even going to try when the stats are so far against me? Well, I've been doing this for a very long time. And I think to a certain extent, I know just by my own experiences that the stats have improved tremendously. It only happens through education and money management, which we'll talk a little bit about. Without the money management, you have no chance. But so let's go through this platform. Get used to this. Let me see, is it what we have here? I'm not used to the platform. But laser pointer, start drawing. There we go. All right, pretty cool. So what is the problem? Why are traders losing? Well, it isn't because of a lack of indicators, that's for sure. So I've got this little picture here, and this is where most of us start out with many different indicators to choose from. Which ones do we put on? We have lots of questions starting out. That's normal, right? How do we do this? We're going to be risking our money. We want to do it the right way. We're searching for the right way. And so this chart over here has got a little cloud thing on it and moving averages and another indicator and another indicator and another indicator. And we all try to put that all together. And before you know it, we got a whole bunch of stacked indicators. Well, they're usually losing because they're making decisions from the wrong time frame. How could there be a wrong time frame? You might ask. Well, look, you have to choose a time frame to trade from, but how do you choose? Well, it depends on what your goal. Are you a swing trader? Are you a day trader? Are you an investor? The good thing is that the method that we use is applicable to any time frame. How you have to choose how to put it together, and I'm going to show you that. Now, mixing time frames that don't match your goal, in other words, you're a swing trader and you're looking at a 2-minute chart because you came to a webinar where that particular trader was a day trading scalper. It's in the wrong ballpark. You're always going to be in conflict with that. And you might say, yeah, but Greg, I saw a sell setup that worked great. And I'm long XYZ as a swing trade. Yes, that happens every day. And you have to ignore that 2-minute time frame. It's not in your trading plan. It should not be in your trading plan. And if you're a day trader, what are you looking at a weekly chart for or a monthly chart? Most are trying to find the holy grail, so to speak, and find the perfect setup, and they look at too much. It's just not necessary. Taking trades with a larger picture and entry are not aligned, basically what I said. So today you're going to learn how to align that larger picture and the time frame that you're going to be using. That is our goal. Next, the left side is the typical route that most started. I mean, I'm there, no different. As long as I've been doing this, I can tell you this was me. And at different moments in time, I thought I figured it out. It's all coming together. I figured the right settings, what was overbought or oversold. Indicators, I wrote my own indicators, and then all of a sudden it just fell apart again. New indicators, new settings, never really understood why. I mean, I understood the basics. I mean, if it was oversold, that means it shot them out and go up. Sometimes it did, and sometimes it didn't. Confusion. Well, this is what it led to. Master Trader Technical Strategies. And you put this together to form a trading plan. Right? What's the trend? Is it up, down, or sideways? We need to clarify that so it's black and white. Price patterns are great. Probably all learned about different candlestick patterns, dark cloud covers, and morning stars, and so on and so forth, and maybe the statistics that are shown. Well, without putting this together with this and multiple time frames, which we're going to talk about, the location, risk management, unless you have a complete plan, the odds are just against you. So we need to create this thought process. That's how I like to call it, a structured thought process, because as the type of traders that we are, we're not system traders where we turn it on and red light, green light, and essentially the system could place the trades. Whether it's right or wrong, you probably have some statistics. We think about what we're doing, and I'm going to show you exactly how to think. And then as we put this together, there's going to be clarity. Now, there are going to be times where we look at certain charts and you're like, doesn't make any sense to me. It happens because there's too much uncertainty. The daily charts of, say, the S&P 500 have been like that for several months now. And so this is where the discipline and the purpose comes in as to, that's not what I'm looking for, so I don't trade. So indicators, how do I use indicators? I use them in a scanning software where I tell that, say, for example, a trend indicator, trend strength indicator, and I'll tell it, I want that particular indicator to be at a certain level. So that type of scanning is great because it puts me in the ballpark of the type of setups that I'm looking for. It's in an uptrend or it's in a downtrend. The trend is strong. Maybe it's retraced toward a moving average. I'm looking for entry points. We're putting this all together. Ultimately, about me zeroing down from thousands of instruments to look at to a handful of few to apply my strategy. Switch back. All right. A little bit about myself. I've been doing this for a very long time. Started out, as you can read there, back in the 1980s. Knew absolutely nothing. Knew enough to get into trouble, so to speak, lose some money, figure out I didn't know what I was doing, start searching for how to do this. 1994, started a service. There was no internet. We sent out fax letters. Eventually, there was a hotline. We had training offices, did seminars around the country. We had offices, the internet, which was a wonderful thing, still is. Eventually, there was no need for those offices. So went away from that. Pictures, that's me in 1999. Pristine day trader, trading, and technology. We called it the T3 concept, T3. That was the first day trading expo in 1999. Back at that time, all of these brokerage firms that are vying for your account were saying, stay away from those day traders. You lose all your money. Now, all they want you to do is day trade so that you can generate commissions. I've written several books. You can check them out. And I've taught a lot of people over the years, as you can imagine. And at the beginning, it was market makers. They were professionals, I thought. They are professionals, specialists, market makers, money managers. I remember, you might have know of the book Trading for a Living with Alexander Elver, going there in his group and sitting there with market makers and specialists and thinking, wow, these people know a lot. They knew very little. They rely on order flow. Today, you still hear about order flow. And nothing has really changed. I mean, there's AI now. You can ask it questions. It won't teach you how to trade. But it is a useful tool. We'll talk a little more about that. So how do we put this all together? As I said, it's a thought process. And so we break it down. And you've got price patterns. I like to say price is king. Ultimately, you can take everything off your chart except for the price patterns, because as a visual trader, we need to see those pictures, price patterns, bar by bar analysis. This is a concept I came up with many years ago. It revolves around individual candles have meaning. By themselves, they're not a strategy. They're not anything that you could place a trade on, an individual candle. But once you've put together the method that I'm going to explain to you, individual candles can either confirm or be in conflict with your strategy in that moment. And it can keep you in a trade where you thought it couldn't go further, or it can tell you it's time to get out. What you thought was a viable trade isn't working. Trend, of course, is it up, down, or sideways? Support and resistance, multiple time frames, and we put this all together. And then there's the market environment. What's the broader market doing? There's ways of measuring that. There's relative strength and weakness. There's market internals. By the way, our market internals at the end of last week got closer to a buy signal. There was more downside yesterday. There's a reversal today. We'll see if we can hold on to that. But we measure sentiment and breadth to see how that's coming together with historical reference points as to when the markets have reached extremes on the upside or downside. And then there's intermarket analysis, which has been tremendous lately, all revolving around inflation, the price of oil, what's happening in Iran, oil going up, oil going down, interest rates moving up or down. And the markets have been very focused on that. Is the Fed going to raise interest rates? Some said that they weren't. Some thought that they did. When he didn't, the market rallied, and then all of a sudden it was like, well, nothing really changed. The market collapsed yesterday, and today they're up again. So the volatility and the ranges have been extreme lately. Trade execution and money management is a major, major part of being successful in this business. And every course, everything I teach in our green room, our live trading room, or in any of our advisory letters, everything comes with a stop loss and money management. And all of that is tied to trading psychology. You cannot have the right trader's mindset if you're scared to death of losing all of your money. So money management and how to manage that trade is key. And I'm going to teach you how to do that. And I said, just having these individually are not a strategy. We have to put this all together to create a strategy. So how do we do that? Well, I already mentioned there are price patterns, which are pictures that tell us what's happening in the moment. Prices are moving up, they're moving down, they go back and forth. We look at trends. Moving averages can be helpful with the trend. So I'm going to explain a little bit about that to you. I don't want to get ahead of ourselves, but is it making higher highs and higher lows? If it is, it's trending up. It's black and white. But we see plenty of traders that the trend is up. It's up in multiple time frames and they're losing money because they're entering at the wrong time. So again, we have to put this all together, and we're going to do that. The location, price patterns, put it together with the trend, put it together with a location, and now we're putting together high probability setups. And I said, one concept, not a strategy, and these patterns become powerful when we get alignment of all of these together. Let's get to it. Let's build some more of that thought process. I said, swing trading and day trading. What is the difference? What's the difference between the two? The only difference is the time frame that we're using. So for longs, we have to build a bias. A higher time frame is in an uptrend, pulling back to support, or a continuation pattern. Without getting into too much detail, what is a continuation pattern? Well, let's just say it is what it says it is. It's a continuation of an existing trend. There's a picture for that, where prices try to move lower and immediately reverse, and they continue to go up. You look for a bullish lower time frame that's aligned with the higher, and you look to buy near entry points. One of the biggest pieces of advice that I could tell you to being successful as you start to put this all together, if you would just buy near support within an uptrend, the odds would be overwhelmingly in your favor. You would not be chasing. And if you sold near resistance, price resistance, not a trend line, not a Fibonacci line, not some Elliott wave count near price resistance. If you did most of your trades either near price resistance or a continuation pattern within the trend, you would put the odds overwhelmingly in your favor. And then where are you going to put a stop loss? Where you believe it should not go. How do you know where it should not go? It's based on the price pattern as to where prices made a reversal. And you then will learn over time, especially through the course or being in the green room with me or the advisory letter, how we raise stops. One of the ways is when looking at when ranges expand. If prices are going up and the range expands, that means there are more traders that want to get long that stock, more that participated, and you want to start raising your stop based on that. And you just reverse it when prices are in a downtrend. And many that start out think, I just can't get this idea of shorting. Certain software packages, if you right click on the axis, the right axis, you can turn the chart upside down. And that might bring clarity, just a point of interest that you might want to try something like that. Because that's all we're doing is just turning the chart upside down or just looking at the same information in the opposite direction. So why does this work? So I've been teaching this with adjustments to the market environment. Different market environments require different strategies and changing things, but it works primarily because traders in multiple time frames have the same bias. This is the essence of multiple time frame analysis. And I'll tell you something else. There is a big part of the educational industry that uses the words proprietary. Let me tell you something. You can approach the market in different ways, but the main thing that makes the technical analysis work is because you have traders in multiple time frames that are operating with the same bias. The majority think long. The majority buy near support. The majority on a daily chart of the S&P 500 will look to buy near the 50-day moving average. It's about a self-fulfilling prophecy. It's about doing what the majority will do at a particular location. They will buy at support in an uptrend and they will sell at resistance in a downtrend. The multiple time frames is the key to putting that together. And so master traders enter positions in the proper location with the confirming pattern. Simple. What's the trend? Where's support and resistance? All you need to do, look to the left, see where there's some congestion or a swing. Apply a price pattern, look at multiple time frames. Now, this part here, I won't say it's secondary, but it's extremely helpful, whether you're a day trader or a swing trader. Meaning, semiconductor stocks. Is one in an uptrend and one in a sideways trend? The one in an uptrend is showing relative strength. It's likely to continue to move up. Market internals. We look at breadth, we look at sentiment. It hasn't been quite as useful as it was in the past because it doesn't activate or trigger as often the New York NYSE tick indicator for intraday traders. Into market analysis. I mentioned oil, interest rates. What are they doing? The currencies. That helps guide us from an intermediate term point of view. Of course, risk management. And all of this works across all tradable instruments. Why? Because it's all of us that are trading. And you know what? Either if it's an algorithm, it's based on basic support, resistance, and what other people are thinking and what they're doing. So it doesn't matter whether you're trading futures. There are advantages to trading futures. Some will trade Forex because it's a 24-hour market. It works for if you're overseas based on your time frame, but it's all based on the same information regardless. And options, we don't trade options. We don't even really need Greeks. They can be, some of it is helpful, but we use charts to trade options. Buying call options in a liquid instrument near an area of support With this in alignment, puts the odds in your favor. Bottoming pattern, chopping back and forth, making a low. Credit spreads. We keep it simple. We align the concepts for higher probability opportunities. Everything, it's all simple. I'm not going to tell you it's all easy. It's about putting this all together in a proper format. The foundation, whether you're a swing trader or a day trader, what is the higher time frame? It's in an uptrend. Buy pullbacks towards support. As prices pull back into the area of a prior low, I know that there are going to be buyers down here. I know it. Now I'm looking for a pattern that supports that bias. That gives me an entry point. Now, this could form in a lot of different ways. It could be a wide range green bar. It could be a red bar down and then green back up. It could be what I call a bottoming tail bar. The combinations could be endless. But if you take this down to the most basic, buyers are at demand, support. This is where they're going to act. And if the higher time frame is in an uptrend, the odds are in my favor. It's likely to go up. Vice versa in a downtrend. It's moving down, lower time frame. So this looks different than that. That's how the markets are on any given day or any market environment. As a day trader, you're going to have more data. So as prices come up to an area of resistance, I know there's going to be sellers. Sometimes it takes 3 tries before it goes down. But once you have the bias and you decide to place a trade, and you could have placed it here, here's going to be greater odds of it working out than here, because this is the first reversal as this time frame is coming up against that time frame going down. This is the transition where the uptrend in the smaller time frame is transitioning to be in agreement with the higher time frame. And then we're looking for it to reversal back down again, which would bring in the conversation of money management. Meaning, if I enter here, I have to pick a stop with the proper money management. How much am I willing to risk? How far away is my stop going to be? And then we get into the conversation of share sizing, because there's no assurances, 100% assurances that it's going to work out ultimately. So let's talk about this from a swing trader's point of view. Monthly time frame, the one on the right, I say, what is the long-term structure? When you look at that chart, it must create a thought at what's going on. Those little E's, by the way, are the software marks when it reported earnings, whatever it is. So as you see this starting to go up, and it pulls back, and it's going up, and it starts pulling back, and it breaking down. Similarly, what the S&P 500 did yesterday. It looked something like this on the daily chart, not exactly. And then it broke down under these lows, something similar like this. Now it popped up today. The point is, it was going sideways for several months, and it broke down. It's got room to go lower. That's the daily time frame. But let's stick to this weekly time frame. What is your primary swing trading bias? Easy, Greg. These 2 time frames are going down. I'm looking to sell it short at the appropriate time. So on the daily time, is there an actionable setup at this right location? Well, what is the right location? As I told you, we're looking to be sellers near resistance. So this would be the best location. Prices broke down. We're looking to match the pictures. It broke down under support, and it rallied up into where I know the sellers are going to show up. That's where they were before. Moving averages can be visual aids or can act as self-fulfilling prophecies. It's like this is a 50-day moving average on a daily chart. Up in this area right here is this area right there. So as prices come up toward an area of resistance on a weekly time frame, there's nothing wrong with a trader saying, I'm going to focus on this area right here to see if it reverses back down in alignment with my bias. And then we get a pattern, a gap, reversal, little consolidation. So we've got an entry here and we've got an entry here. As I said, all traders are working together. What does that mean? Think about what that means. That means that in all three time frames, everybody except for a counter trend trader is thinking the stock is going to go lower, or this currency pair is going to go lower. This contract of whatever, oil, wheat, corn, it doesn't matter. It's going lower. So I believe it's going to continue to go lower, and I'm looking to enter the position at the appropriate time. But if you're a day trader, all you have to do is switch time frames. That's it. Daily time frame. What's the long-term structure? Oh, Greg, it's going up. I've got three moving averages on here, a 20, a 50, and a 200. I'll say how they relate. They relate to different time frames. That's why I'm using these moving averages. They're not anything proprietary. They're simple moving averages, and it relates to, I'm just looking at the daily. This relates to the weekly, and this relates to the monthly time frames. And this tells me it's in an uptrend in all those three time frames. So as a day trader, my longer time frame is the 65-minute, and I see it's going up. As it pulls back, as this pulls back toward areas of support or consolidation, I see things are shaping up. So as a day trader, I'll use the 5-minute. Sometimes I'll use the 2-minute, depends on how active the markets are, especially like here where prices are moving very, very rapidly. I'll use a 2-minute. That's in the green trading room. But ultimately, here is where your best opportunity is. The 5 minutes in an uptrend, and I'll show you the calculations for these. It's really simple. I'll use the 60 on a 5-minute because it's equal to the 20 on the 15-minute, and this is equal to what's happening on the 65-minute. So here, as prices pull back within an uptrend, where there was this is a continuation pattern, by the way, right, where it tries to go down and come back up again. This is where buyers begin to show up again. Now, if we missed the move down here because it was moving so fast, which is possible, this gives us another opportunity. It's in an uptrend, multiple time frames, pulling back to a support area, little bottoming tail bar rejection, another one. You buy it here, manage it, see where it's going at that time. Over here, it's not in alignment. So uptrend, this is turning to a downtrend. I'm just leaving this alone. Not trading at that point. Again, all traders are working together with the same bias. All right. So when I look at one time frame, so as a swing trader, and I'm looking at my 20, my 50, and my 200, and I see it's trending up, multiple time frames aligned trending up, I'm looking for pullbacks. I'm looking for breakouts. I'm looking for no follow through to situations where maybe the stock tries to go down, or it pulls back to the 50 or pulls back to the 20, and so on. On the 5-minute time frame, as I said, I'm looking at the three moving averages, and I'm looking for situations where prices are above the moving averages and they're rising. Little breakout in the morning, pullbacks. In the afternoon, it's rolled back over. This is not what I'm interested in. I'm looking to put the odds overwhelmingly in my favor by combining multiple time frames that are in alignment. Day trading, swing trading, two different professions, could be two different focals, what I'm looking for? We can swing trade right now with the markets having gone sideways for several months. It wasn't the greatest environment for swing trading. We were still finding opportunities, but there were much more opportunities as they started to rise earlier in the year before they started going sideways. So market environments change. We have to adjust with it. And this gives you, how do we come up with that? Pretty simple. 5 daily bars times 10 gives me a 50 MA. So I know what's going on in the weekly time frame. Monthly 10 MA and 220 bars times 10. And so I know what's going on in the daily, the weekly, and the monthly. And on the 5-minute, this is how we do the calculation. And it's going up on the 5, the 15, and the 60 or 65-minute. And many will ask, why the 65-minute? It just breaks up the bars into equal increments, where the 60-minute, depending on the platform, the first or last bar will be a half hour. So again, no magic with a 65-minute. It's just each bar is equal in time. This is how I like to think about technical analysis. Again, keeping it simple. They're pictures of what others believe. That's what's being displayed on your chart. It's not about piercing patterns and morning and dark cloud covers and all of that nonsense. It's about a picture of what other people believe that was created with money. They tell me how other traders have acted. And we've already talked about, okay, well, put that in alignment with a trend and a location, and now I've really got something going there. So those candles, they tell me the expectations on an ongoing basis. Bar by bar shows me whether the buyers and sellers or who's in control at a certain location. I want to see buyers taking control in an area of support in an uptrend. Sounds pretty simple. The location tells me where they're going to act. The price patterns, as I said, that's the language. Master Trader Technical Strategies tells you how to read them. So here's a few examples of what we're looking at. On the left side, prices pull back. We see pullbacks every day. They pull back every day. And so as prices were pulling back there, momentum began to slow. How do we read slowing momentum? Well, the ranges begin to contract. The candle bodies begin to contract as momentum slows. No indicators necessary. That candle on the lower, on the right side there, this one, this was a larger red candle. Think about what happened there. Remember, this is a picture of other people's beliefs. This was a large red candle. As this was moving down, traders are selling. We know that. They're red candles. And all of a sudden, the range expanded from high to low. They got spooked. And there was more selling. And then buyers were lurking below and they drove it back up again. This pattern in an uptrend is a buy setup. Plain and simple. The one on the right, it's a different arrangement of candles. There's a retest. It was just a retest. So there was the bottoming tail bar. This one, you can see the difference from the close to the open. It gapped down and it reversed back up again. Bar by bar analysis tells me what's happening and where is it happening in the location and the trend. This tells me when to act. It's simple but powerful. At times, sometimes the bars or the patterns get bigger. Maybe it was in a downtrend for a longer period of time and it made a large bottom. So as I put together different candles, I could have a name for this. I could call it a downside shakeout. Some might call it a head and shoulders bottom. Some might have some new fancy name. But if you apply candles the way I'm explaining it to you, it doesn't matter what you call it. It's bottoming. It's going to go up. It's signaling it's going to go up. A wide range bar. Got a bottom. Now, where shouldn't it go? If I believe this is going to go up, and I say that to you with conviction, it's going to go up. Well, do I have a crystal ball that's infallible? No. But I know where to put a stop loss. I know where to share size it accordingly. But I believe it's going to go up. And if it continues to go up, I'll put together these bars that'll continue to tell me what's happening on a continuous basis. For example, if I was to take this bar and put it over here next to the green bar, you say, well, Greg, you said it was going to go up. Yeah, so did it break support yet? No. Well, then hang on. Some other time frames may be in misalignment, meaning a very short time frame could be extended so the next bar is down. I don't know the next bar that's going to happen. But if I get a red bar and it's followed by a green bar, and if we could take these two bars right here and drag them over here and put it here, I would say I'm even more sure now that it's going to go up if I could take these two bars and put it here. Do you see how putting bar by bar analysis together can help you confirm what's happening? This pattern gives me a belief about what I believe is going to happen. Bar by bar analysis tells me what's happening in the moment. Confirming could be in conflict. There are going to be times where I just have to sit through what's happening because lots of times there's just noise, just noise. Reiterating, support. What is support? It's where prices have gone sideways for a while. The way I've created this, it was in a downtrend. Yes, it tried to stabilize. It broke down. I love this pattern. These little, I call them shakeouts, where it breaks below the lows and it immediately rips right back up again. It tells me that there are buyers, demand stepped in, and as it starts going sideways, we have our trend following methods to monitor what's happening on a continuous basis. Here it says supply steps in. Sellers. Well, it didn't mean it's going to go down like that until I see it actually break down. Now, if a higher time frame was in an uptrend and it's coming up into this area, I showed you a chart before that looked like this with candlesticks, as that sellers begin to take control, and then eventually it starts to break to the downside. Our goal here is to find repeatable instances to trade. So let's look at a few examples. This is a 5-minute chart, as you can see on the lower right. The moving averages are pointing down. And we just looked at this pattern. What I'm showing you right here on this 5-minute chart is the same thing that happened here. Patterns, pattern recognition is just recurring pictures that happen over and over again. I'm looking for pictures. It doesn't sound very fancy, but that's what we're doing here. We're looking for pictures. So bottoming pattern, it went down, it came back up, it's consolidating. I think it might be able to try and break out above these highs and go up. It's a counter trend trade. I'm putting it in perspective of it being a counter trend trade. If this is in an area of price support to the left, well, that increases the probability that this counter trend setup could start moving up again. I know the 15-minute is trending down. I know the 65-minute is trending down. So I'm either going to stand aside or I'm going to decide to do a scalper counter trend trade. All right. Here we have a daily time frame. You can see the lower right, daily time frame. What you see happening, right, charts are moving. It was trending down. It explodes to the upside. Look at the big white candle at the bottom, a big reversal candle. So as this is going sideways, thinking, what am I going to do here? I'm thinking, well, if it pulls back to this area, I'm a buyer. Well, bar by bar analysis is telling me it's not going to pull back, Greg. It's not pulling back. So do I want to buy a breakout? I certainly could. I could. Share sizing it is going to be key. Now over here where I've got the green arrow, this is a great setup. There's probably a name for this candlestick pattern. I don't care what it is. But this was going sideways after an explosive move up and all the moving averages are pointing out. That's a buy setup. Now, what about here? Do we want to trade that, or do we want to pass on this one? Well, it's below the 20, it's below the 50, it's in conflict. I'm not so sure, but it came down the way it did, relatively fast and hard. This is not a great setup there. I'm not sure what it's going to do. It might push up. It's not on support. As I look to the left over here, there's nothing there. And this shows you that a 50-day moving average can come into play as a reference point on a daily chart, because more and more individuals are looking at it. But I don't have any pattern here that is decisive to tell me what to do. So that's one that I would pass on. It says the trend has been broken. It's 3 days at a rising 50 MA. It could be a watch. Think about what the next candle could be that might begin to convince me that this could go up or down. Remember, you choose. Based on what I said, you have some ideas as to what could tell you it might go up. A big range expansion, gap down reversal, or maybe it tries to go up in a big red candle down, but the trends are in conflict with each other. So either way, it's kind of a coin toss in a situation like that. This is a great setup over there. Everything was in alignment. All right, here's another example. This was when I did a chart of the week on. This was months ago, and you can see it was Casey's General Stores. Why? The weekly chart was in an uptrend. It was pulling back to an area price support at a rising 20 MA. By the way, the calculation that I showed you for moving averages, 20 MA is equal to the 100 MA on the daily time frame. You do the calculation, you'll see exactly lines up with the 100-day moving average. So when I look at this, I know where the 100-day moving average is. It's also maybe a little less widely followed, but it's followed. Well, prices pulled back into an area price support. It begins to stabilize here. I do not have a high probability candle pattern right here yet, but it makes me put it on the watch list. I'm interested in this because the higher time frame is in an uptrend and it's pulling back to support. I'm interested in this for that reason, but I don't have a confirming pattern yet. What would confirm this pattern? A bottoming tail bar, right? A gap down reversal. You pick a bullish candle, especially one with a wider range, and put it here, and that's exactly what we're looking for. As I said, it's a thought process. This actually reported earnings. At this time, you can see this on this chart. It shows the earnings date, 6/9/26. It actually gapped up significantly on the earnings, but that doesn't help us, of course, because couldn't participate. Another chart, larger time frame, was at resistance. This is coming up into resistance. It gapped down. What happened? The moving averages were coming together, was consolidating. The 200 was pointing up. That's the red line. The others were in conflict with each other. Anyway, it gaps down. Big wide range bar. It comes up into a resistance area. And say trade or pass. I'm waiting. And one of the things required with our method is that it trades below a prior bar's low for shorts and above a prior bar's high for longs. So as it comes over here, there are event bars. I'll call them event bars that just jump out at you and just say, you know what, this is it. And this is an event bar because it took out these highs and it's a wide range bar. Call it a range expansion bar. This combination of candles in this location with those moving averages tell me it's likely to be what I would call a no-brainer trade. It's going to work. Now, work to what degree? Well, I believe it'll come down here. Bar by bar analysis will tell me what it's doing on an ongoing basis. And as this comes down, this is a daily chart, it gaps down and reverses, it's still in trade above a prior bar's high. And so as it continues, we just continue to monitor what's happening and we manage the trade. And in our swing trading letter, you can see how we manage these in real time with text messages, and then the trading tracking sheet is exactly, you'll see in real time, an alert comes through and says, bring the stop above that prior day's high. Just exactly like that. Intraday example, as you can see, 65-minute is in a downtrend. We look at support resistance. Now, after 2 o'clock, why after 2 o'clock? People come back from lunch, right? They go, the doldrums during the, say like 12 to 2, give or take, is the doldrums. And often right around 2:15, this is a trade setup that I look for, where the pink line is the 60. That's the 20 MA on the 15-minute chart. They come together, they pinch together right at around 2:15. What's happening here? It moves down. Like the blue line is the opening price, the red line is the closing price. It went down and it tries all day to go up to fill the gap, and it can't do that. Traders just got tired of looking for the gap fill, of looking for it to go up after the gap down reversal. At some point, they're going to sell. At around 2:15 is going to be the area where they're going to do that. And this is a picture of how it happens. And it could happen on any given day in any particular stock or index. Again, we're looking for repeatable events to trade. Review as to what we're doing. Okay? Objective analysis is not based on indicator-based methodology, not at all. Price structure, multiple time frame alignment, the proper location, uptrend multiple timeframes, pulling back the support. That's the proper location. Price pattern develops in that area. Risk management, share sightings accordingly. Discipline means waiting for your setup to occur. Just because I can show you high probability setups, it doesn't mean you're going to get them every single day, especially as a day trader. And then as a swing trader, it may take a few weeks for things to set up. It depends on the market environment. So that, as it says, confidence comes from knowing what to look for, that structure, not changing indicators. We're looking for price patterns, pivots, which are swings, discipline and money management. This keeps you in the game. It keeps you in good trades, and it saves your money when trades just don't work sometimes. Right? You always have to have a stop loss. And as I said, I call this a belief system, that you've got a bias, you know your location, you know the pattern you're looking for, you execute the plan, you manage it, you repeat. Wash, repeat, over and over again. I like to call what we do is we create self-reliant trading. Traders, the self-reliant mindset. And so we've got a little man there, or a lady, could be, with their brain going, like an AI. Your brain is AI, I'm telling you. If you tell it what to think, now you could tell AI what to think, but how do you know what to tell it to think? They already have these AI systems that are trading. Algorithms have been around for years. They're just getting more sophisticated. But you have an AI system in your head. You got to learn how to use the technical analysis, create the thought process, your plan, and objective decision making. This gives you a little focal as to money management, really simple, 100K account, break it up into what you'll lose in any day, break it up into a number of trades. You got 4 trades a day. If it doesn't work, you stop trading. You got to stay in the game. This just gives you some guidelines. You could knock this down. You know what? I've told traders today in the chat room, once you find something, a method, maybe you're not so sure, am I looking at it the right way? That's why we have coaching sessions monthly. Just trade 5 shares, trade 3 shares, whatever it is. Make it meaningless. Press the button, but keep a trading journal and find out what's working and what's not working. That we talk about this in the trading room, and I write blog posts about this all the time. So do you want to learn more? about this. So I've got a great course. I've got a couple of great courses here. How the stock market works. I explain this top-down approach, how it's structured, how we pick how it trades for the swing trading letter, what's the broader market doing, what a sector's doing, the stocks within the sectors, market internals, how to utilize the basics of our approach, how to utilize it for options. And then this course I created last year. I was asked about it for forever. It seemed like these two courses alone are probably about 15 hours of education. But it goes far beyond candlesticks. It's talking money management, intraday trading, swing trading, putting together multiple timeframes in tremendous detail. 3 months of the advisory swing and options trader. I go into great detail as to sector analysis within there and market internals. You get on Master Trader resources, the coaching sessions, text messaging, and we're always available for email support. It's $490. Believe me, it'll be the best money that you will spend to get in this game with a true education. This is not a one-trick pony type of thing where it's one strategy. You can, again, apply this if you trade Forex, no matter what you trade futures, you trade Apple Computer, whether you're a day trader or swing trader, this puts it all together for you in a structured environment. If you go to mastertrader.com, MT Corner, and at the checkout, just click the button there to add the advisory swing and options trader for free for 3 months. And I think you'll love it. If you have questions, please email me, greg@mastertrader.com. You could take a trial to our green room. That's $7. You want to come in there and see what we're doing on a real-time basis. But with this offer, you can get started with the advisory letter. You can see the past letters. I do an extensive long letter over the weekend about the broader markets and sectors and opportunities there, and of course the trades. So with that being said, I think my time is up.
Yeah. Thank you, Greg. Your offer is in the chat box, so be sure to check it out and click on it. Also, you could email Greg at greg@mastertrader.com. That's also in the chat box. So thank you so much for being here today. We really appreciate it.
Thank you for inviting me. Have the best.
Thank you. Excellent insights as always. If you'd like to continue learning from Greg, his special offer is now available in the chat. Next, we'll learn how to identify tomorrow's leading stocks before they become obvious to everyone else. Our next presenter is Wally Olopade, founder and chief technical strategist of Right Side Trading. For more than 15 years, Wally has helped investors identify high probability opportunities using quantitative research, technical analysis, and institutional market behavior. Today, he'll show you how to stop chasing hot stocks and begin identifying predictable opportunities before the crowd catches on. Everyone, please welcome Wally.
Hey, can you guys hear me?
Yes, thank you so much.
Hey, all right. Well, welcome everybody. And again, thank you guys for inviting me over here. It's been a while since I've done one of these, so it's kind of exciting to be here. Got a lot of stuff that I like to share, but just like the introduction said, my goal here is to show you how to identify setups before they actually take place. And nothing better than to be on the right side of the market, which is why we call ourselves right side trading. All right. But very quickly, let me just do this. Our risk disclosure statement, please understand, we're not licensed financial advisors, so please understand that. What I'm sharing is for educational purposes and showing you how I approach the market. So hopefully it's able to help you too as well. A little bit about myself. I am the founder of Right Side Trading. I am a market expert in timing tops and bottoms. I have been doing that consistently since 2016. Notable calls has been the drop before COVID happened. I called that, said something was going to happen before COVID actually took place. I called the bottom of COVID in March of 2020 as well. The bear market that we had in 2022, called that. When it ended in October 2022, I called that too as well. Done it multiple times over and over and over. That's kind of like what I do. So people who know me know that I'm really good at seeing that. And I really just base it off of technical analysis, which is what I do. I do technical analysis and quantitative analysis. My goal is to anticipate price movements before it takes place. I use patterns, I use indicators, I use candlesticks to help me with that. And I am definitely sharing that with you guys. But again, the goal is to always try to see if we can find stocks ahead of time. And so today we're actually going to be doing that. And hopefully you guys will be able to help me through this process. What we're going to do today is I'm going to show you the software that we built that is making the job so much easier. And let's see if we can build stocks that we can anticipate for the month of August. Fair enough. Okay. Let me see. Okay, so I see the question box here. If you have any questions and if there's any stocks you want to add to this, let us know. So how do we identify these setups ahead of time? Seasonality is one of the big thing, and it's really what it comes down to. This is Apple. And so one of the things we're looking at right now is that we know that Apple has a pattern. Again, we're looking for patterns. Apple has a pattern of going up in the month of August, from August 5th to September 2nd. And so there's two things that we have to try to figure out here. One is understanding when those moves take place, but two, making sure we jump in not too far ahead of schedule and not too late in the process. Okay. And that's kind of like what we did. I'm gonna show you another one right here, which is Royal Caribbean. Same thing. It's actually supposed to start heading up as early as tomorrow, which actually already has started kicking up to the upside. So August 31st to, July 31st to August 28th is what we expected to do. But again, the key is to try to figure out, okay, what if it doesn't happen this time around? How do we make sure that we don't jump in and it actually is not going our way? And so for that reason, let me introduce you to our software. Okay, so this is our software. It's called the Right Side software. And basically, a number of things that happens here. First and foremost is the basic chart itself that shows you what to expect. If you have a red background like we see right here, this just lets us know that the sentiment is bearish. The market sentiment or that stock sentiment is bearish. If it's a green, then we expect it to be bullish. The important thing is this right here that says today's directive. This gives us an idea of what we should be doing. So as of right now, the directive is saying just wait and hold because there's a lot of volatility taking place. You will see that back on July 20th, it was telling us it was time to short the market, right? And then, obviously we'll see what it does today. A lot of this data is end of day data. But again, that's because we're predominantly swing traders. One of the other things too is understanding where the market is. Are we at the top or the bottom? That's what this does for us here with this gauge. So each stock has its own gauge and it lets us know whether we're at the top or the bottom. The sentiment right here tells us that it is bearish by the color and so on and so forth. But what's interesting is going to the seasonality tab and kind of seeing what to expect. So we predominantly like to look at what happens on the 5-year time frame or the 5-year historical pattern just to see what's going on. And as we can see right here, it shows that, hey, you know what, from somewhere around here now, we expect things to kind of drop a little bit. So it's no surprise that the market has been dropping like we've been seeing. Obviously, today was a good day. But again, as you can see right here, it shows that, sometime by next week, we should start seeing things go higher. So the question would be whether or not it's already kicking off already because of the big move to the upside that we had today. But at the end of the day, the idea is that we're expecting things to drop. And that's what you can see that the market did indeed drop, right? And so then now the expectation is we're going to get a rally very soon. And that's what we should be anticipating. Does that make sense? So that's that right there. But the cool thing about this is we also have what we call our seasonality stock builder, where I can show a list of stocks for each month and we can start building. And that's what I'm going to have you guys help me out with today. If you choose to participate, we can start anticipating and start building a list of stocks that we can anticipate are probably going to start doing well and then see how that goes. The cool thing is once we know a stock is getting ready to move during a certain period of time, then the only simple thing we have to do here, and I'll show you when we get into this, is we just look for today's directive and see whether or not it is telling us it's time to buy or not. So that's really cool about it. And then once the trade is over, it would also let us know that too. All this is based on, again, quantitative analysis. It's based on technical analysis and indicators as well. So it's combining all that together, taking away the emotions out of it, and just decided, hey, based on what's going on, is this stock moving? Is it not moving? If it's supposed to be moving around this period of time, are there signs that the stock is actually beginning to move? Are there confirmation that the stock is beginning to move? Those are the kind of things that we want to find out. All right. So if I go to the month of August, right now I have 9 stocks in there. And you know what I'm going to do? I'm actually going to clear it all out. I'm going to clear out all these stocks right here so we can do this together. All right. I'll clear all this out. So again, the whole purpose of today is how do we start anticipating stocks that are going to move rather than just reacting to them. So right now, the month of August, we have nothing in there. As we can see here, nothing at all. So we're going to try to start building this. So the first thing we do is we go to our scan tab down here, and we can start scanning for stocks that are going to move. So I'm going to close this for a second. All right. I'm going to hide that right so just so we can see this chart right here and run the scan. Now with the scan, we can pick the various options here. So actually, you know what? Let me just do this. Let me start from scratch. I'm going to refresh this page so we can just start from scratch. So we don't even have the old list there. So we go back here to our seasonality tab, click on the scanner, come down here, and I'm going to pick a watch list. So I like to pick what I consider to be the major indexes, which is the S&P 500, all that stuff, which same thing down here. So we'll select all major indexes. Okay. And then we're going to scroll down. And what I also like to do is select all the major sectors. And so we're going to pick that. And just off of that alone, we'll run the scan. Okay. So we click the scan. It'll take about a few minutes, maybe a couple of minutes to run, depending on your internet speed. I am using my hotspot because I'm at a hotel right now, and the hotel was not doing a good job with their internet Wi-Fi. I'm actually over here at Fort Leonard Wood in Missouri, speaking to the soldiers over here. It's something that I do uh, to kind of help out and help those who are transitioning out of the military, talking to them and all that kind of stuff. Anyways, so we got about less than 25 seconds left for this to populate. So give it a few more seconds. It's going to populate. What it's doing is going through all these stocks that are listed on there and trying to figure out which ones have good seasonality and good patterns that we can pay attention to. 3 seconds left, 2 and 1. All right. And by all means, if there's any particular stock that has the only thing is if it's a brand new stock that doesn't have a history, it will be hard to find those type of stocks. Does that make sense? Let me see. I see some things. Okay. Oh, okay, cool. Okay, so now what we're going to do here is we're going to try to look and see, okay, is there any stocks on these lists that we might be interested in? Now, first thing I'm going to do is I'm going to sort this based on which stocks tend to rally right about now. Okay, so that's what we're going to do here. So for that, I'm going to click on this rally range. If I am looking for stocks that tend to drop around this period of time, I'll click on the down range right here. Does that make sense? And then that changes that. Okay. So for now, we're going to click on the ones that says rally range. So far, so good. All right. So is there any stock on this list that we in particular want to pay attention to? Now, what I typically do is I'll look at that as, okay, is there any stocks that I know of that I like that I want to add to my list? Does that make sense? Usually I try to stay with stocks that are very well known or the ones that I know. Like, so for instance, let's say I say T-Mobile right here. I can click on T-Mobile, right? Procter and Gamble is another big one right here. And please feel free to pick anyone that you want. I can add it to that list right there. Let's see here. Royal Caribbean. I'll pick Royal Caribbean because we all know Progressive Insurance, that one right there. C.H. Robinson would be another one. Aflac and Humana. Okay, so those are some stocks that I'm going to add to that list. Right now I have the rows 25 per page, but let's see if we can open that up to, let's say, 100 per page. And then I'll just go through that first page and see what we can find here. Okay. Let's see here. What else do we have that might stand out? And again, if you see any that stands out to you, let me know. Ambarella, I will probably pick that one. Public Storage, I'll pick that one. CBOE, let's pick that. Let's see, Cincinnati Financials, Altria. All right, let's scroll down a little bit more. Give me 1 second here. Let's see. Camden Properties. That's a real estate company. Let's see. I'll pick Chatter Communications, Waste Management, Quest Diagnostic. These are companies that we have. Boot Barn, Crocs. Well, I don't really like Crocs, but it's a popular company, so I'll just put that on there for now. Let's keep on going. Motorola will be another one. Let's see. Trying to see. Occidental Petroleum will be another one. Scroll down a little bit more. Enphase Energy might be another one. PayPal would be a good one to add into that. All right. Dow might be another one to add into that. Let's see. Adobe, ADP. I'm going to SolarEdge. Let's see. All right. So I think we have a good chunk right now. Okay. Let's see. Let me just go all the way down. Let's see. Let's go make this fast. So I'll just kind of scroll through. ConocoPhillips. Put that in there. That one. Hasbro. Match.com. Starbucks. Chipotle. And if there's anything else, let's see. All right. So we'll go with that. So now I'm going to scroll all the way back up to the top. And right now we've selected 33. Now we selected 33. All I have to do now is just click on here, add these three. And because all these are based on rally dates, click on that. And then what it's going to do is it's going to add it to our list. It says added 33 stocks to the monthly list. So now if I go up here and I go show my list here, now the month of August, we have 17 on here. And that just means that some of the other ones we saw were beyond August. Okay. So maybe some of these, let's see here. Let's see. Okay. So you see how some of them go into September and stuff like that. So it's probably why it's not including some of those on that list, but that's fine. We'll have that in there. Okay. So now we have these stocks that are now in this list and saying, hey, these are stocks that tend to go up in the month of August. Now, here's the coolest thing about this all. Okay. Remember I said that today's directive is what's going to help us see which ones are ready to go up and which ones are not. And we wait until that happens. So very simple. I can click on this tab that says signal. And when I click on this, it will give me all the stocks in the month of August that has the ability. It will let me know what the today's directive is. So if I click on that right now, I can very quickly see which ones are setting up to go higher right now. They have seasonality coming up and they are setting up to go higher right now. So I can see here, ADP tends to rally between August 3rd and August 31st. So let's click on ADP. All right. So we see over here, this right here, we're looking at this green bar lets us know this is a very good time that ADP tends to go higher. And then after that, it starts going down based on this red bar. The next time it does a good job of going higher is in November. And then again, somewhere in January, it goes down. But for right now, considering the fact that August 3rd, which literally is next week, this is a stock that seems to be getting ready to start heading higher. Is what this is showing us. All right. And so even though it's August 3rd, which is literally next week, the move probably is already beginning. And that's why we have this buy signal, as you can see here. And to make it easy, the description says time to buy, buy stocks to go long. And if you short in this stock, it's time to exit those shorts. But notice what it also says, only buy if the last candle is green. So last candle is green. And what this is now telling us is that, it's not a lot. It's only about 3.8% move is what we can expect. So, would that be something that excites me? Maybe not, but again, it's a situation where we're beginning to anticipate stocks that are going to move higher. Okay. One of the cool things too is we can come down here, and if we look at what this harp line is, this is telling us that, hey, ADP can go all the way up as high as $271. So depending on where the price is right now, chances are it can go up to $271. The other thing too is for those who love candlesticks and how candlesticks communicate what's going on, this does that for you too as well. The candlestick analysis is telling us that ADP is making a U-turn from a previous downtrend, and it is gearing up to go bullish. Earlier, it showed some aggressive bullish sentiment and a strong rally that can surpass the previous swing high is to be expected. Taken all together, a U-turn from the downtrend is underway and a bullish rally is to be expected. Pretty cool, huh? To kind of have that type of information and know that this is a stock that is gearing up to start heading higher. All right. And so that's what we do now. And so all we have to do at this point is just make sure that, hey, as long as each day it tells us to stay in and buy and all that kind of stuff, we have an idea of what to expect. Does that make sense? All right. So again, we can pick any stock. And the cool thing is we come back each and every day and just click on this signal right here to show us which ones are ready. So right now, if boot is supposed to also go up, so they say boot is also supposed to go up around this time frame, same time frame as ADP. Match.com is supposed to go up around this same time frame. Chipotle is supposed to go up around the same time frame, and boot is also ready to go up around the same time frame. So does Crocs, so is Occidental Petroleum. The question is, well, why buy ADP, Match, and Chipotle, but not Boot, Crocs, and Oxy Petroleum? Well, it's because right now, Boot is not telling us to buy. So if I click on Boot and we go to the chart of Boot, we can see here that it is supposed to start heading higher, right? This is the time that it goes up, and it goes up pretty decent, 17% on average. Okay, cool. However, the problem is right now, it is not telling us to buy. Does that make sense? So we can see this. It said, nope, nope, nope. Exit your short positions. Don't buy yet. And that's because of what we see right here. Now, prior to that, it was saying, hey, this thing is getting ready to go up. But as of yesterday, it told us not. Now, if the day changes and this stock is ready to go back up again, no problem. We will see that and see what we can do. Okay. But the cool thing is let us know, hey, something is not right. And it's probably because of what happened yesterday with the big old news that happened, that caused the market to drop big. All right, cool. Maybe in this case, it's like, all right, let's see and wait and see what happens. But if this market is ready to go back up and boot is ready to go back up, we'll get another buy signal by the end of the day, which tells us, hey, jump back in tomorrow. So the cool thing though is, hey, here's a stock that tends to do what? Tends to do well going into the future. So we're anticipating this to begin happening very soon. Fair enough. And this is how we go about looking at which stocks to get into, which ones not to get into. Let's look at Match.com and see what Match.com is showing us. All right. So again, Match.com is supposed to be going up. It's giving us a buy signal right now. So we know it's time to buy. I can go over here to the chart and it's saying, hey, this is time to buy. Now, again, it pulled back pretty much perhaps because of what's going on with the market yesterday. Now that the market is bouncing back again today. So we'll probably see. But, even with yesterday, I was saying, hey, it's time to still go in and buy. All right. We can scroll down here to see what the candlesticks is telling us. Yep. Also making a U-turn from his bearish downtrend. Shows some aggressive sentiment to the upside. Before that, it printed a bottoming pattern. So that's a pretty good thing to know. And price is not expected to go any lower. Sentiment shifted to bullish and a rally just as expected. This is pretty cool to know that, hey, we don't have to worry about this stock going any lower since it just told us that it printed a bottoming pattern. All right. Again, we don't control the market, but it's good to know, hey, wait a second, there's a bottoming pattern on this. And if there's a bottoming pattern, then chances are it's supposed to go higher. Does that make sense? And so the idea now is to just watch and see what happens. And again, we take this day by day, trying to see where this is going to take us. That's the pretty cool thing about this. We can look at this. This stock has the potential to move up about 6%. We have up until, around September for this to take place. Make sense? Let's go to Crocs or Occidental Petroleum. Actually, let's go to that one. So we come over here and again, it's supposed to go higher, as you can see here. Based on the chart, it seems like it dips a little bit before it starts going higher. So let's not take our eyes off of this, but this stock seems like it has the potential to start heading higher. If we go over here to the price chart, we'll notice that the sentiment is still bearish. Okay. Sentiment is bearish. We haven't got our signal to start buying as of yesterday. So again, we'll wait till the end of the day. If today it gives us a different information where it lets us know that, yep, it is ready to start heading higher, then we'll know that at least this is a stock that is potentially getting ready to go higher. But we at least know, hey, here's a stock that when it's ready to start heading higher, it could move about 7% in the next month. All right, 7% in the next month. And so understanding this, whether you use options or you don't use options, whether you use leverage instruments or you don't use leverage instruments, the key here is here's a stock that has the potential to move up 7.8% in a month. How nice would that be to be able to know that, hey, here's stocks that tend to move this much? Is it guaranteed? No, it's not guaranteed, but chances are once we start seeing that buy signal, even if we don't capture the whole 7.8%, maybe we'll at least capture a good portion of that, 3, 4, 5% for the month on the stock. This is just the stock, no leverage, no nothing. Does that make sense? And then see where that takes us. But yes, but anyway, so this is what we do, and then we just kind of wait, and each day just come back. You already have your list. The cool thing about this is once you have this list, you don't have to even update it anymore. I mean, you can add to it, you can take away from it if you want. That's totally fine. But the cool thing is you don't have to, simply because uh, these are stocks that if they do this year, then chances are they'll do it again next year, August, right? And so you can start building your list. And I tell people, build as much as you want. Build 50 stocks in here per each month. Build 100 stocks if you want to build 100, because the more you have, the better your opportunities are each and every day. Does that make sense? At the very least, each and every week. And just as much as we can pick the ones that go up, we can also pick the ones that go down too as well. So you can see these right here. All these are stocks that tends to go down also in August. Or we can go back to our scan and just kind of see, okay, out of this list of stocks right here, what if we did a down range instead, right? And so if we did a down range, oh, here's some stocks that tends to go down during this period of time, and so on and so forth. Any questions so far? The other thing we can do, which is pretty cool, is see this column that says directive. We can actually say, okay, out of all these stocks right now, which ones are moving today? All right, which ones are moving today? So for that, I can click on this compute today's directive up here. You'll give it a few minutes, a couple of minutes. And then what it would do is it would start calculating which ones are beginning to show us that they are ready to go higher and which ones are not. Okay. And then once it's done populating this information, we can literally go in there and say, okay, show me all the ones that are ready to go up right now. So that now, if you don't even want to wait until next week or into 2 weeks from now, because that seasonality doesn't move until then, maybe we can see the ones that are beginning to move right now. Does that make sense? So that's another cool way to do that. And so let's say I click on here right now. It's beginning to show us like, hey, here's some stocks that tend to move. But now notice how ACAD is giving us a buy signal, but the rally range doesn't begin until October. So not necessarily something we want. So for that reason, we would do what is called a multi-sort, where we come over here, we pick the ones that we want, and then what we'll do is, let me see if I can do this again. Boom, right there. So now what we have is we have all the ones that are moving up, that is giving us a signal right now, and it's like literally around the corner to start heading higher. So KMB, not too sure who that is, so probably won't be the ones I would want to jump into. But hey, this is stock that's ready to move up. HR is ready to go up. CPT, PGR, all these, I think this is progressive. These are stocks that are now beginning to show us chances that they are ready to go up. The rally here gives us an idea of what to expect as far as percentage. So KMB, only looking about 2%, right? Whereas PGR, about 10.4%. Okay, so now we can start looking at that and saying, all right, maybe I want to focus on PGR because it has a little bit more. All right. We can even go in here. Let's say the price range for PGR is too much, and we say, okay, you know what? I don't want any stocks more than a certain amount. We can go in here and put in the range that we want, and that would let us know. Let's say we say anywhere from $50 to no more than let's say $50 to no more than, let's say, 150. All right. So now all these stocks in here, would be within that range that we talked about. If we said, nope, I only want stocks between $10 and let's say 10 to $30. Okay. So now we know that all these stocks would meet our criteria, $10 to $30 that we can find in there. Right now it's telling us, yep, they are ready to go up. This is going up in August, so which is next week, has about an 8% move. Also next week is this company right here going up about 14%. This one is going up starting next week about another 8%. And we can start picking and choosing which ones we like. From the $10 to $30 range, there's pretty much just 4 that moves up in the month of August, right? So that's cool. That's something we can pay attention to. If we want to expand it, we can say, let's go with $50 and see if we have more stocks that move up in that period of time. And we can see that too as well. Does that make sense? And then use this to kind of help us anticipate moves in the market. I have a question. What time do I have to? Because I know I only had 45 minutes. I was supposed to start at 3. Anthony, are you still there? Just to make sure.
Yeah, I'm here. I was on mute. Yeah,
Sorry.
I think you started at like 3:15.
Okay, so do you want me to end at 3:45? I mean, I'm okay stopping at any time you want me to.
Yeah, if you could wrap it up, that would keep us on
Okay.
yeah, do whatever you got to do to wrap it up. That'd be great. We
Okay.
appreciate that.
Give me about 2-3 more minutes and I'll wrap it up.
Yeah,
Okay.
take your time. Thank you.
All right. No problem. All right. So, anyways, I think you guys get the gist of what we can do as far as and what we do as far as like anticipating these moves. Again, this is Chipotle right here. I can go to Chipotle and see, all right, Chipotle is getting ready to move. We have a buy signal. I can go to my home price. Look, it just gave us a buy signal yesterday. This right here tells me that it can go up 10%. I can read what the candlesticks is telling me. Aggressive bullish sentiment, blah, 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 blah. All that is there for me to kind of make a better informed decision. All right. So my offer, let me just see if I can show you this. If you want to get started with us, let me just do this. Again, we don't have to guess. We honestly don't. The software does all that for us. We can then start anticipating. I just showed you what we can do in August. We can even go to September, October. We can build it as far advanced as you want to. And that's a pretty cool thing. What the software does is that it helps you with finding quality stocks. It helps you with the sentiment and the directive, so you don't have to guess whether we're bullish or bearish. It clearly shows you that. It gives you the market direction that you need to be worried about. If there's any problem, I didn't get to show you this, but if there's any problem, it lets you know that too as well. The seasonality shows you what the future trends look like. You can look at past trends. You can look at what we call key trends, so that you know which ones are the major ones for the year for each individual stocks. And in addition to the software, we have hidden opportunities in earnings, IPOs, dividends, and more. The typical cost for this is about 4,950 something. But what we're doing now is, if you want to try it out for 3 months, $450, you can get that for 3 months. If you were to go to the website itself, it'll be $741. But for today, we're bringing it down for a quarter. You can test it out for 3 months. You get all the access of everything that we just talked about. In addition to that, if you want the 12 months, which is the best offer, for $1,200, you get it for the whole year. You get to join us in our Monday night webinars that we have too as well. And then as a bonus for anybody that signs up, we would actually give you our seasonality course as well, where it goes into the manual version of how to put all this together. Does that make sense? The manual version of how to put all this together. So it'll do that for you, so that way, even if you don't have the software, you know how to do this manually. The software just makes it so much easier. You can scan for stuff much easier, all that kind of stuff, right? One last thing too that I'm going to add. So this is the link right here. You can go to rightsideTrading.com. rightsideTrading.io/special to take advantage of this. Now, for those who take action today, if you take action today, this right here, let me see, right here. If you take action today, we just came out with a new version on the software that allows us to do some intraday trading. Okay, I didn't get a chance to showcase that, but if you take action today, you will get access to the intraday trading at no additional cost. Okay, for whatever time you sign up for. So if you sign up for 12 months, you'll get the fast action and you get the intraday trading. Let me just end with this so I can show you what that intraday trading looks like. Okay, let me see, where's my slide on that one? This right here. Okay, so this is the intraday trading. You can go 1 minute, 5 minutes, 15 minutes, 30 minute, 1 hour time frame. This is the SPY. We have a bunch of different stocks on there, but notice this real quick. You'll see when the market opened today by 9:35, notice how it says bullish long setup. That was to let you know that the market is ready to go higher on a 5 minute time frame. And we talk about 1, 2, 3, 4, 5. That right there could have got you something, right? And then if you come over here, so from there, it just said hold, 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 bullish, blah, blah, blah. But then right here, it says bearish short setup. And notice how the market started dropping from that point on. And then we do that until we start seeing that things are beginning to like say wait or hold. Um, if it says hold, you kind of, hold on to it. But you can see, but once this starts turning back again, we know that, hey, something is off. We need to do something. So the goal here is between 9:30 in the morning Eastern time to about 11:45 in the morning Eastern time. Let's see what setups we get and take those. So we got one at 9:35. We got another one to go to the downside at 10:40. And then right here at 11:45, we got another one saying that we should go higher. The next time we try to look at this is after 2 o'clock, after really 2:30, almost 3 o'clock. So somewhere around here is when we start looking at that 2:30, 3 o'clock. So this is 2:30, 3 o'clock right here. It first told us, hey, go short. But the very next candle said, okay, hold up. Well, nope, we're going long. And then from that point on, it's been long, 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 long. And that would have allowed you to take advantage of this rally that took place over there. So this is what I'm saying, that this is brand new for us. This is something that we were doing. And again, we can do a 1 minute, 5 minute, 10, 15 minutes. It gives you those information. If you sign up today, you will get that feature at no additional cost. Okay. All right. That's it for me on my end right here. Thank you guys again for allowing us to show up here and showcase what we have. If you have any questions, you can reach us at info@rightside-trading.com. But look forward to seeing people joining us Monday night. This next Monday night, we'll have our next session where we'll talk about what to look for and also feature a lot of things that are on the software. And I think every Thursday night, well, not every Thursday, on Thursday nights when we have new people join us, we would demonstrate the software so you know exactly how to use it in all the various facets and forms. All right. Okay, that's it on my end. Thank you so much once again. I'm going to go ahead and turn it back over to you, Anthony. Thank you.
Thank you, Wally. We really appreciate it. And thanks for keeping us on track today as well.
No problem at all.
Thanks again. That was packed with valuable information. And thank you for putting together a terrific offer for today's attendees. We've put it in the chat there. It is rightsidetrading.io/special. So be sure to check that out and click on the link. Everyone, you'll find the link waiting for you in the chat. Coming up next, we're shifting our attention to one of today's most talked about emerging sectors. We're going to have on Wiz Buckley, but Wally kept us on time, and we told Wiz we were a few minutes behind, so we're waiting on Wiz. So we'll keep Wally's offer up there on the screen until Wiz is here.
I mean, if you want me to, I can keep on entertaining them until Wiz shows up.
You can. Yeah, if there's any questions or anything, I think now would be a great time to ask Wally.
Yeah, absolutely. If anybody has any questions, feel free. In the meantime, until Wiz shows up, and Anthony, whenever Wiz shows up, just let me know. I will stop right on pronto. Okay.
All right. Thank you.
Yeah, no problem. Let me show you guys this again. Going back here to the software. Again, this is really cool because again, we try not to guess. We don't want to guess. We can see what's happening. We can pick any of these stocks right now. Right now, I only wanted to include the major stocks that I know liquidity is not going to be an issue, simply because if we wanted to trade options on these, we wanted to make sure that we're able to do that. So here is Amazon. As you can see here, the cool thing too, again, is it lets us know what should we be focusing on predominantly. Now, it's just letting us know what to focus on, but doesn't mean that we can't take the opposite side as well. Does that make sense? And as you can see right here, so for the day, it's a look for Amazon. The goal will be to try to see if we can focus on long setups. So any long setups that we see, let's definitely try to jump on those. However, if there are some bearish setups as well, it will let us know. So you can see down here where it says momentum temporarily bearish. That means that when things started happening over here, it's letting us know, hey, you know what? I know we said we're supposed to focus on being long, but as of right now, the momentum is bearish on that. So you can choose to either say, I want to still bet against the market and short, or you can say, I want to stay away from it. But you can see right here. So at 3:55 today, it kind of let us know it's time to go ahead and start shorting. And even if it's just 3-4 candles, if you are trading 0 DTE, what's today? Today's Thursday. So today you won't really have a 0 DTE. Oh, that's Wiz right there. All right, that's it on my end. I'm going to turn over to Wiz. Wiz, are you ready to go? I'm not sure if
He
he's
looks
ready
like
to go
he's
yet.
frozen.
Yeah, it seems so. If you're ready to go, Wiz, I can turn it over to you. No problem at all.
He's also on mute.
Oh, yeah, that's true. Yeah, you are on mute,
Yeah.
Wiz. And you probably have an internet connection issues like I had over here in my hotel that I had to go into my hotspot on my phone.
Oh wow, you're doing this from hotspot. That's there was no interruptions I noticed.
Oh yeah, well that's good. Yeah, I'm glad to hear that because
Yeah.
yeah, the hotel for some reason the Wi-Fi was just not working the way it's supposed to work. But yeah, so whenever he comes on again, in the meantime, hopefully you guys can see what I'm talking about here. So again, notice that at 3 o'clock it was telling us to start buying, maybe even as early as 2:55. It was telling us to buy, hold, buy. And again, we don't need, I mean, especially for those who love to scalp, this is not a bad idea for you if you're scalping. We're not trying to be in this all day, every day. Honestly, 2, 3, 4 candles, which is about 15, 20 minutes, is good enough. And one of the things that we are doing over here is like, look, we said, look, we don't even need to like hit home runs anymore. We're not trying to shoot for the 600% returns in a day. All we're looking for is 20% per day using options. If we can use options to collect 20%, that's good enough for us. Does anybody know how many times, if you make 20%, how many times you make 20%, really compounding that, just taking the same amount, 20%, 20%, 20%, how many times it takes to go from $1,000 to $1 million? Any clue? If you don't know, it takes about 42 to 45 times to do that. So in essence, all we got to do, you know, barring any kind of like major upsets or something like that along the way, is if we can do this at 20%, 42 to 45 times, you can take $1,000 account. I mean, that's if you reinvest in everything. Now, again, that's a fantasy world, right? But if you were to take $1,000, reinvest everything, and barring any type of major setback or something like that, 45 times, and you can get $1,000 to $1 million. So that's what we're going to be doing. We actually have something called a Grow the Account. And so again, anybody who joins us today will probably add you to the Grow the Account, but only if you join today. But as you can see right now, you know, even with this alone, this drop right here, if we just look at what happened from 3:55 when it told us to go bearish to right now. Let me see if I could just show you on the options on Amazon very quickly just what the Amazon options would have done for you between 3:45, what is it? 3:45, 3:35 and right now. All right. So let me see if I can show you this very quickly. We'll go here to the 5-minute chart. Let's see if I can do this. And again, I'm just stalling until Wiz shows up.
Yeah, Wiz, if you could hear us. Well, it looks like he's trying to show his presentation right now.
Okay.
All right.
So
yeah.
is it good?
Yeah, I think so.
Okay.
Whoa. Yeah. Thanks, Wally. We appreciate it.
No problem. No problem at all. Take care, guys.
You too. Next up is Matthew Wiz Buckley. He is the founder of Top Gun Options and Tactical Trade Alerts. Having helped build a multi-billion-dollar volatility arbitrage hedge fund, Wiz understands the type of institutional research typically reserved for Wall Street's largest clients. Today, he'll discuss why the psychedelic sector has attracted so much attention, where he believes investors should be looking next. Everyone, please welcome Matthew Wiz Buckley. Wiz, I think you're on mute.
About now, can you hear me?
Yeah, you're good.
Okay. I'm not a big GoToWebinar or GoToTraining or whatever this is, guys. So we're going to muscle through it. All right, folks. Good afternoon. Welcome aboard. Matthew Buckley, call sign Wiz, former Navy F-18 fighter pilot, Top Gun graduate, adversary pilot, deployed for Operation Southern Watch, Noble Eagle, Enduring Freedom. As a matter of fact, my first aircraft carrier is over in the thick of combat operations right now, the Abraham Lincoln. So my thoughts are out to the young men, women on the tip of the spear, having to put in the work here. Went to Wall Street. That's my trading firm right there. See the big, beautiful windows and the Chicago Board of Trade. I helped build a hedge fund when I was there, helped build the retail brokerage many of you know as Options House, and also the Options News Network, ONN.TV. We were the CNBC of options. It was a blast. I felt like Eddie Murphy in Trading Places, just a lowly retail trader going to the big leagues, so to speak. Written a couple books. COVID crash, from panic to profit. What an absolute nightmare yesterday with Fauci. I made about $3 million in three weeks off the stupidity of people and the market. It was just shooting fish in a barrel as the market imploded. And then also another book, From Sea Level to Sea Level, that details me going from the cockpit to essentially to the trading pit. And this is what we're going to talk about today. A mission beyond markets. And this is going to be pretty cool because you heard a little bit just in the intro right there. We're going to talk about the most explosive sector ever. Why? Because it potentially could save and change lives. And I'm not kidding, man. Even the world. We're going to talk about my journey from being a former Navy fighter pilot to Wall Street to the White House to April 18th, standing in the Oval Office with President Trump as he signed the executive order on ibogaine therapy. I mean, it's just I'm blown away that I'm even here and talking about any of this. But that's what essentially I want to talk about.
We lost your screen.
Yeah, I have no idea how to go to training. I'm going to try and do this stuff again. Let me share screen. I'll just go maybe to the window. How about that? You guys can see that, right? But then you end up going back in time. So anyway, all right, let me give you just a little bit of my journey before we talk about what we're going to talk about today, man. Anybody ever see the movie Lone Survivor? Famous Navy SEAL, Marcus Luttrell. That's him right there. That's me. If I go over that, it's going to disappear. But anyway, I've lost 16 F-18 brothers in 15 years of flying fighters. Along the way, I've lost 4 F-18 brothers to suicide. And I was very close to being one of them as well. Childhood trauma, sexual abuse, losing a sister to a drunk driver when she was 19, military trauma, going to Wall Street, focusing on money and sadly drugs and alcohol almost destroyed my life. But about a little over 5 years ago, after my last F-18 buddy killed himself, I said, you know what? I got to do something about veteran suicide. But what do you do? I mean, I stood in my office in front of a whiteboard. How do you keep a veteran from killing himself? Help him pay the rent or get a resume knocked out or buy him a suit. I was lost. And around that time, a buddy of mine said, hey, there's a group of Navy SEAL veterans that go down to Mexico and they do psychedelic assisted therapy to heal their trauma. And there's a really cool group going in a couple weeks. Would you want to go? And I said, man, go to Mexico and do drugs with Navy SEALs. It sounds like a great weekend. Sign me up. I had absolutely no idea what I was getting into, but this is what we're going to talk about. And the most explosive things going on in this space right now. I want you to look at, Compass is, I think we got earnings coming up here, but I'm going to talk through the names in the psychedelic space, folks. And it's just, you got to buy these names with both hands. Let me step through the names right now. And you might have heard of Eli Lilly. So when was that? A week or two ago, Eli Lilly stepped in and bought a psychedelic company called Atai, A-T-A-I. Let me pause this and try and share something else because this just sucks. This going back in time window. I'll just leave my stock charts up here. How about that? Let me bring up, let's go with a 6-month chart. Let's start stepping through these stocks I want to target. Definium, DFTX. Write these down, folks, because these are the names you want to buy with both hands. Look at this. Explosive. This stock was a $10 stock a couple months ago. I told you to buy with both hands, and we've ripped. Same thing with Compass, CMPS. Same thing with, let me go grab the other one. Look at this rip in Compass. And then HELP, H-E-L-P. It's Helus Pharmaceuticals. These are publicly traded psychedelic companies, folks. And let me just show you how I kind of know what's going on. So here it is right here. The White House called Friday afternoon at 5. Could I be there Saturday morning for the executive order signing? It was insane. So that's me. I was there. Joe Rogan, RFK, FDA commissioner. That's the NIH director. Those are scientists. Over here to the right side of that picture were all my Navy SEAL brothers. Marcus Luttrell. I went to Mexico, Marcus. And absolute insanity, folks. 5 years ago, almost to the day, when I walked up to the White House gate that morning, Marcus Luttrell was there. He's like, "Hey, man, I can't believe it. Now it's a party." Could you imagine? And we laughed. I said, "Marcus, man, it's almost our 5-year anniversary." I said, "Could you imagine 5 years ago laying on a mattress in Mexico? If somebody told us, like, hey, 5 years from now, you two knuckleheads are going to be in the Oval Office for an executive order signing on ibogaine," I just would have laughed. There was no way in hell that would have been part of anything humanly possible. But that's exactly what happened, ladies and gentlemen. And let me talk to you real quick about another guy. So that's Marcus Luttrell. That's me. That's Jared Taylor, one of the founders of Black Rifle Coffee. That's JJ. He's a Navy SEAL veteran. He was a teammate with Marcus. But let me talk about this guy real quick. His name's Robert Gallery. You see the Hawkeye on his shirt? He's an All-American from Iowa, College Football Hall of Fame, played for the Raiders. This man, horrific CTE, right? I flew into San Diego and we jumped in a little convoy of cars and went to Mexico. Why? Because if you do what I tell you in San Diego, you're a criminal. If you do it an hour south of Mexico, it'll save and change your life. But I was in the car with Robert Gallery. I'm sitting in the back seat next to a massive dead iceberg. This guy was, and to hear him tell it today. So let me fast forward. He started his own nonprofit foundation to get ibogaine to NFL veterans. But man, he was dead. He told me, he said, "Wiz, if this didn't work, I was going to go back to my home in Lake Tahoe when the wife and kids were out on the boat and put a bullet in my head." He is a completely different human being. The neuroplasticity of psychedelics can regrow damaged neural pathways and sprout new ones. So this is why we're here, folks, is because I predicted this with Top Gun Options members for years. Let me try and bring up a report real quick. Let me go over here. I know you can't see, but I'll bring it back up in a second. Where is my trade plans? A psychedelic report that I make for my members. I'll try and get you guys access to this before I forget. All right, psychedelic. All right, there we go. All right, now I'll share this report so you guys can see it. Back to this window. I'm figuring it out on the fly here. Share screen, entire screen. All right, here we go again. All right, so folks, let me just give you a quick rundown on the psychedelic space, because I guarantee you're sitting here like, because trust me, I got, boom, there you go, Amazon up 7%, $16. Love it. Amazon's one of my core holdings. Anyway, back to psychedelics. You're probably sitting here going, Wiz, we're in tech earnings. this is where you're going to see explosive growth, ladies and gentlemen. Okay. So this is insane. Eli Lilly bought a tie last week, a week and a half ago, right? Eli Lilly, folks, came in. This was like a $2-3 stock, and they're buying it for $3.8 billion. Ladies and gentlemen, do you remember that I just told you we're talking about a felony? So one of the largest drug pharmaceutical companies on the planet just came in and bought one of these psychedelic companies. Why? Because the data, they heal. What does I can't stand big pharma. What does big pharma need? They need customers. They don't want cures. They want customers, ladies and gentlemen. But it's too late. The horse has already left the barn. I'm going to get down here to Compass because you have got to buy Compass, folks. There are dates on the calendar with Compass where it's going to submit an NDA, right? A new drug application that's going to be approved, not within months or weeks, maybe days, if not hours. We'll talk about that in a second. The FDA last week came out with its clinical trial guidance. Folks, this is the Federal Drug Administration just published psychedelic drug considerations for clinical investigations. Are you kidding me? No, I'm not. Folks, and one of my buddies in the Oval Office that morning said, Mr. President, you ended the war on psychedelics. Thank you. It's over with. We are in a new era, and these biotech names are exploding. Could you imagine even 3 years ago, like the FDA announcing this? No, it didn't happen under the last administration. It took this administration to move forward on this because of veterans. Marcus Luttrell, his brother, all these guys going on the Joe Rogan show and talking about how psychedelics helped heal them. So also last week, HHS Secretary Kennedy and VA Secretary Collins signed an MOU and said, we are doing a 5-year psychedelic partnership. Ladies and gentlemen, whenever you see the government, I don't want the government involved in anything, to be honest with you. I'm a libertarian, but they're getting involved in psychedelics, and I'm involved so I can make sure it goes the right way. But so a tie is going to be bought, right? I knew it. I briefed my members. I wish I could figure out how to pull up multiple windows. I have a whole Dropbox folder of screenshots and case studies from TGO members who are filthy rich because of what I told them in the psychedelic space. But let's roll down, since the tie's already in the books, Compass. This is the closest company to approval. The ATAI company I just told you about is not. Eli Lilly came in and bought them when they had some good phase 2 results. Wait a minute, they didn't even do phase 3 trials yet, and Eli Lilly bought them? Exactly. That's a big pharma company looking at it going, holy crap, this stuff's going to explode. We want it now, and we want it cheap. I think Atai got lowballed. I think it's a disgrace, but we can talk about that some other time. So Compass and the other name I'm going to tell you about aren't going to, at least publicly, they say we ain't going to sell. We're taking these things to market. So if Atai was the trade that proved that big pharma's coming in, this is the anchor. Ladies and gentlemen, we're going to go look at some options because you can potentially make a ton of money when, not if, this happens. So here's part of it. Comp 360, that's the name of the medicine. Again, I'm not calling these drugs. They're not drugs. They're medicines because they heal. 40% of patients, meaningful, durable response, and a clean safety profile after a single treatment. Ladies and gentlemen, did you hear what I just said? In the Oval Office, President Trump looked at Dr. Oz and RFK and said, fellas, how effective are SSRIs? And they both shrugged and looked at each other and said, single digits, Mr. President? Then he looked over his left shoulder at the SEALs and they said, fellas, effective? And every one of them, I think there were 7 of us standing right there, saved and changed our life, Mr. President. So these numbers are insane. Evercore just upgraded Compass from 8 to 21, folks. It's $10, $11 right now. We're going to go look at it. So the FDA is giving them rolling guidance. What does that mean? the FDA is actually flying formation with these psychedelic companies going, hey, you good? What do you need? Hey, let us look at the paperwork real quick. No, it checks out. Keep going. I'm not going to tell you who or any names, but I have buddies in these companies. Like a year ago, like the FDA called. I'm like, oh no. And he's like, no, oh no. They're like, what do you need? How can we help? How do we speed this up? This is insane news. So I'm going to show you a trade based on the Q4. They're supposed to be submitting in a couple months their new drug application. And Marty McCary, I was 5 feet away from him in the Oval Office when he said the days of waiting a year, years to months for FDA approval are gone. He said this should take days, not even weeks. I'm like, oh my God, to approve this. What do you think's going to happen to the stock if they submit an NDA in Q4 in Q1 of 2027, folks? This is insane, right? Built to hold through the Q4 new drug application and into 2027. I'll show you this trade live in a couple minutes here, right? So this is the trade that I would do. I mean, the market's closed, obviously. I would do this with both hands tomorrow morning. It's just absolutely insane. Definium. They changed their name, I don't know, 6 months ago to, it used to be MindMed. Now it's Definium. Their main medicine is called Emerge. They just had a phase 3 readout for MDD, major depressive disorder. Ladies and gentlemen, it was obscene. And they also have a breakthrough therapy designation for GAD. Do you know what GAD is? Generalized anxiety disorder. We made 200% on this name, and like it was insane. I'm going to go show you that as well. So I'm waiting for a little bit of a pullback to get back into it. But folks, this was an orally disintegrating LSD tablet. Can you believe you're sitting in a trade brief talking about LSD? This is not your father or your grandfather or grandmother's psychedelics. This ain't Woodstock, folks. These are clinical white lab coats and beakers and studies going on here, folks. And then the final name is Helus, help. This one is also looking pretty. Their medicine is called Approach, a phase 3 trial for MDD. And folks, remember these, Wiz, it sounds like they're all doing similar things. They're different medicines. One is psilocybin, one is 5-MeO-DMT, one is LSD. So it's different medicines, right? So this is the sector you want to be in. It has absolutely explosive growth and potential unlimited upside. So let's go start building a couple trades. And Compass has earnings next week, right? So what's that? August 5th. So we got earnings next week. I would still do this trade. I would not wait for earnings. What if they report blowout earnings and you miss it? Definium, DFTX, is the other name that is, boom, look at that, up 5. Look at that, 5% today. What a rip, ladies and gentlemen. Look at that. Before I went up to the White House, $20 stock. It went up 100%, and it's hovering up here. This is a buy with both hands as well. Let's do Definium first. I want to show you a trade that I would do tomorrow morning on Definium. Now, I run Top Gun options. I'm an options trader. If you trade stock, this is your last day trading stock. Why would you ever trade another stock again? I'll show you. Wiz, I love this. I would love to buy 1,000 shares of Definium. That's the dumbest thing I've ever heard in my life. Why? Do you have 40? You might. Great. Do you have 44 grand hanging out? No. Well, let's even just do 100. Let's start with 100. Wiz, you know what? I want to buy 100 shares of Definium. You're right. That's dumb, but it's $4,400. Okay. Just remember 4,400 or 44,000, right? Now, if you are not an options trader, let me just give you a quick brief. Definium's at around 40, It's rated between 43 and 44. There is no 43 strike. There's only a 45. Let's go. And you can see up here, options are simply contracts. You use contracts all the time. It's got a date and it's got a price in your contract, doesn't it? That's a contract, folks. So I hopped in my time machine and I went all the way out as far in time as I could to Jan of 2028. That's 540 days in the future. I'm giving this trade as much time as humanly possible to work. Now, 45, you see the light colored background here? That means in the money. These call options are deep in the money. So how about I buy a call option that's right around the stock price right now? That's years into the future. Buying one contract allows you to control 100 shares of stock all the way out to January of 2028. Buying a call option, folks, gives you the right, not the obligation, to buy the stock at 45 bucks before that expiration. Now, ladies and gentlemen, would you rather, what did I say, 4,400? Would you rather spend 4,400 bucks or 16? This is a rhetorical question. Why would you spend $3,000 more to buy the stock than you would the call option? It's stupid. I'm not done yet. If buying one call option is bullish, I think it's going to go up, Wiz. Somebody has to sell me that call option, right? So they're bearish. Buying a call option, bullish. Selling a call option, bearish. So let's go over to the other side, puts. Again, I'm just going to talk like you don't know what an option is. You've probably heard on TV or at a cocktail party or wherever, like, oh, I think the market's going to implode. I'm going to buy some puts. So let's use our thinking brain. Buying a put is bearish. You think something's going to go down. Okay. So if buying a put is bearish, somebody has to sell that to you. So a put seller is bullish. They don't think it's going to go down. So I'm going to sell one Jan 28, same strike, 45 put. Ladies and gentlemen, would you rather spend $4,400 to buy the stock, $1,600 to buy the call option, or 60? If you say one of the other two options, you're just an idiot. I can't help you. That's just, I'm being honest. So, ladies and gentlemen, on your screen right now is a tactic, not a strategy. If you ever hear some trainer or instructor or trader say, oh, my favorite option strategy, they're an idiot too. There's no such thing as an option strategy. Strategy is high level. Saving for college, risk management, short-term income generation, buying a ski house in a year. Those are strategies. Synthetic stock, a bull put spread, a covered call, is a tactic that supports a strategy. So stop with the option strategies, people. It's annoying. Can't stand it. So on your screen is a tactic called synthetic stock. You see that top green and red line, the thicker one? That is long stock. This is the P&L diagram if you're long bullish stock, right? Synthetic stock is the bottom line. It's almost the exact same thing. What's the difference? Well, there's just a $200-300 more of potential risk. So you're probably sitting there going, whoa, Wiz, my max loss is $4,600. Hey, Einstein, what's the max loss if you buy 100 shares of Definium? $4,400 or whatever that was. It can go to zero. So synthetic stock using options is the same risk as of now, I'm not done, as long stock. But look at the probability for maximum loss, 0.00001. The odds of getting eaten by a golden retriever are never zero. So there's probably a bunch of zeros and a one. But I'm not done, folks. I never went flying in the F-18 Hornet without an ejection seat. So what am I going to do? I'm going to hedge. I'm going to put on an ejection seat. What do? What would be a disaster, right? You ever see on CNBC or read the Wall Street Journal, oh, the S&P 500 is officially in a bear market today. It's down, say it with me, 20%, right? So I'm a political science major from South Jersey. I need easy math. I'm going to buy what I call a protective put 20% under the stock price. It does a couple things. First of all, it serves as a nice protection, but it also helps me with margin requirements. But what's 10? What's that? 45, 9. So let's go buy a protective put 20% under this stock price, right? What's that? $46, I think. 45 or 47. That's the only strikes available. So, ladies and gentlemen, now look. Buy, or no, I'm sorry, 35. My math is off. All right, here we go. Buying one Jan 28, 35 put. Now, what happened to the trade? Well, Wiz, it went from $60 up to 900. Yeah, I bought some protection. It's still cheaper than just the call option, and it's a hell of a lot still cheaper than the stock. But look at what I did to the risk. You ready? 3, 2, 1. $2,000. If you buy the stock, you're risking $4,500. If you did the synthetic stock without a protective put, you're risking $4,600. If you do synthetic stock with a protective put, you're only risking $2,000. Why would you ever buy another stock again in your life? The only two things, ladies and gentlemen, you don't get when you do synthetic stock with options is a vote. Who cares? There's no way you own more shares than the largest shareholders in Definium. Nobody cares about your shareholder vote. No offense. The other thing you don't get, since you don't own the shares, is a dividend. You ain't getting a dividend with Definium, folks. These psychedelic biotech names need all the cash that they can get, and they ain't paying a dividend. So the two things you get if you bought this stock don't matter. One more time, it's a rhetorical question. Why would you ever trade stock again? Why would you spend $4,500 when you could spend $900? I'm not done yet. I'm cheap. I'm going to have somebody help pay for this. Here's what I'm going to do. I'm going to sell in August of this year, out a couple weeks from now, 47 call. When you sell a call, look at this, between 225 and 270, let's just say, what is that, $4? What did I just do? I lowered my cost basis by $300, $400. Wow. Does everybody understand this? This is essentially, it's called, synthetic stock with a protective put, but you're selling a call against it. Ladies and gentlemen, if Definium never moves again and just stays level, I could keep selling calls against this position, and this is paid off. My synthetic stock position is free. So I forget what it is in the go to training or whatever. We ditched this for Zoom years ago, man, because it's easier to use. Hit your Windows print screen key or something like that. Grab a screenshot of this trade. This is synthetic stock with a protective put. And I'm selling a call against it to bring in some cash. Now, watch this. I'm going to do 5, 5, 5. Okay, I want more contracts, but I'm going to do 3. What? This, ladies and gentlemen, is called essentially a ratio spread. I'm doing 5 in the synthetic stock and the protective put, but I'm only going to sell 3, right? What's that? 4. That brings in $1,200, folks. I'm only going to sell 3, not all 5. Why? This is critical. Because what if between now and August expiration, breaking news, Pfizer has bought Definium for $1 trillion and the stock's up a 1,000,000%. The stock is going to rip. If I sold all 5 against this, it wouldn't, my profit would be limited to 47. I want to leave at least 2 in this case, or maybe even if I just sold 2, 3 contracts to run. 3 contracts of these to rip higher. Does that make sense? If it doesn't, don't worry about it. I got 9 options weapon school training sessions to get you up to speed quickly. Trade this synthetic stock tactic. I take an hour easily just to go through it second by second and everything. But I would do something like this ratio spread. You know, you could do a 10, 10, 10, 5, right? Let's go look at Compass real quick. All right, so Compass, what did I tell you? It sounds like a new drug application, the end of this year, and I'm not going to say maybe, I'm going to say definitely. I don't want to jinx it, but I will. FDA approval in Q1. So why don't we do something like that? What are we at right now? $11. Why don't we go buy? Let's just go buy some 12 calls out to February. Okay. Well, Wiz, I think you're right. FDA is going to approve it. The Trump administration is very bullish on psychedelics. I'm going to buy 10 of these call options, man. Essentially close at the money. That ain't, it's $300, man. That ain't cheap. But I just told you I'm cheap. What am I going to do? I'm going to sell 5 of the AUG. Let's do 12. No, 13s. I actually like those. What just happened? 5 times, what is that? $60. I just brought in over $300. Let me just get rid of those. Right? Let's go mid-market. $3,400 to buy those calls. $3,400, or I'm going to sell 5 of the AUG 13s. Boom. I just saved us I didn't save us. I brought in $400 to lower the cost basis. But one more time, like I just talked to you about with Definium, what am I doing here? I'm leaving 5 calls to run. Breaking news, Moderna just bought Compass for $1 trillion, and Compass is up 50% in after hours trading. I got 5 go look at this. What's my profit? Infinite. If I capped all 10 and 10, what's my profit target? Profit limit. It's limited. In these type of explosive names, I want to leave half of my position to run. Okay. Now, knowing that I know Compass, I know everything, and I'll get you access to the psychedelic report. They're not going to be submitting their NDA sooner than Q4, and the FDA obviously can't approve them sooner than they submit the NDA. So you could maybe get a little aggressive with the front month call. You know what, Wiz? I'm going to sell 5 of the AUG 12 calls. Man, what did that just do? You just brought in about $1,000. Look at that, how it lowered your cost basis, right? Or you can stay at 13 and maybe do, you know what? I'm going to just leave a handful of calls to run. I'll sell 7 and leave 3 naked so they can run. Ooh, well, you brought in $600. Isn't this awesome, right? I love doing this because, there are people out there who find Top Gun options. They're like, oh yeah, I just buy calls. I'm like, that sounds dumb. Why would you just buy a call option, man? Right? Buying a call, it's like going, I live down here in God's waiting room, Boca Raton. It's like looking at the midlife crisis guys at the Ferrari dealer. The second you pull out of that lot, man, that depreciates. When you buy a call option, theta, time decay works against you. why don't you go sell something against it to help bring in some money? Ladies and gentlemen, this is the tactic you want to do. Calendar spread, ratio spread, whatever, however you want to title it, this is how you do it. So again, print screen or Windows key, print screen, or your Snagit tool. This is the trade that I would do tomorrow on Compass. I have both of these trades, Definium and Compass, in my personal accounts and our model portfolio, folks. This is how you do it, especially in these psychedelic names. Now, like the last one was Helus. It's also right on the precipice of potential explosive approval in these names. But and look at this. Where is it? Phase 3. HPL 003 carries breakthrough therapy designation. Company reported a phase 2 data showing a striking 23-point MADRS reduction from baseline at 12 months after 2 16-milligram doses. Look at this, ladies and gentlemen. This should shock you. With responsive remission rates climbing to 100/70% at 1 year. Early uncontrolled figures the FDA has not evaluated, but a signal that frames the upside. How many times in your investing life have you sat here like, man, I wish I knew about an explosive new drug? Well, guess what? Today's the day, and I ain't using the word drug. So the last name would be Help. Okay. And again, I trade the options, and we would do something similar there. At $8, I'd be an option buyer, man. I would go out as far as time as I can and just do the call spread that I kind of mapped out there for you, right? Okay. I don't even know if I can go back and look at questions because I want to go look at some other things. I'll keep these guys on time here. Amazon, boom, 10% pop after hours. Absolutely love it. It needs to get back on its horse, man. Amazon. So apparently, CapEx is a good thing again. What did Apple do? Oof. That's interesting. Who else was today? Was it Meta today? Or no, that was Microsoft. How'd Microsoft end up today? But you know what, before I let me get you access to these report, at least to that report. Let me go over here. It's my beautiful family. So folks, on this, what's that thing asking me over here? Hold on, let me go back. I know you can't see anything. Do I want to switch to a new microphone? No, you guys can hear me, right? Good. All right, I'll share again. Share. Let's go to, where is it? Entire screen, boom. So folks, right here, head to go.topgunoptions.com/TTA. That stands for Tactical Trade Alerts. Now, on this page, there's two reports. The psychedelic report used to be on this page, but since AI is big right now in the S&P 500, I put these two reports on this page. You get the psychedelic report instantly in your email. You get these two reports instantly, but the third one, this psychedelic report goes straight to your email, okay? Because I kind of rotate these off this page when something's hot. Obviously, well, here's the bonus. You get these two reports. We got 10 names in our AI portfolio. That's why I really care about Amazon. Amazon is one of our major positions in our AI model portfolio. And then our Bullish on America report. Ladies and gentlemen, you want to read this. Let me show you a trade real quick from our Bullish on America. What do you mean by that, Wiz? What does the market tend to do over time? It moves up and to the right. Yeah, we have pullbacks. Yeah, we have everything. Look at the S&P 500, folks. Once again, I'm a political science major from South Jersey. Do you see a trend in the market here? Now, it ain't a straight line. Oh my God, the COVID scamdemic, that's the Trump tariff war. There's Epic Fury there, folks. Up and to the right. up and to the right. You're going to read in the Bullish on America report what I believe is going to happen in the next 5 years. Let's just round up and say we're at 7,500. Do you think the S&P can double in the next 5 years? I think it's going to do more than that. I think we're probably going to hit 22 in the next 5 years. Let me show you a trade real quick. I love doing these because people are blown away by how much you can potentially make. You can, in the land of options, folks, you can go out to December of 2031. And as high as I can go, you ready? Look at this. Look, ladies and gentlemen, down here. You see, these are my open positions. Look at the 15,000, 16, 8, 20,000 strike. These are hedge funds. These are people betting on America, ladies and gentlemen. Let's say, Wiz, you think we could hit 22 grand? Yeah. Let's go buy a December of 2031 $18,000 call. That ain't cheap, Wiz. Why is divorce expensive? It's worth it. That's $5,100. What if we sold the highest strike call against it we could? The 20 grand against it. Oh, wow. Well, that knocked the price of the trade in half by, now I'm only spending $2,700. Watch this real quick, folks. You ready? How many of you would pay $2,700 today to potentially make, you ready? 200 grand. I want that to sink in. I've been doing this for over 30 years, folks. 35 years I've been doing this. You want to know how I print money? These trades. How many of you would spend $2,700 today to make that? And folks, it's the journey. It's not the destination. Well, what if a year from now you said, Wiz, we only made it up to 16,000? Well, oh geez, you only made 80 grand. I'm sorry, you only made 80 grand, folks. So again, in options, it's the journey, not the destination. What if we only made it up to what's that? 18 grand on the S&P. Oh, I'm sorry, folks, you only made 100 in this trade. Would you spend $2,700 to make 100? And one more of these bullish on American trades real quick. Wait, these aren't showing a price. But anyway, folks, let me see if I can analyze, because I have one of these on right here. The 1516. Let me show you. Yep. I bought a 15,000 call. I sold the 16 against it. And this is really realistic. I think we're easily going to hit this in 5 years. Right now, today's market close, would you pay $3,200 to potentially make, allow me to round up, 100 grand? $97,000, folks. How many of you would do? Folks, all we have to do is essentially double a little bit in the next 5 years. I absolutely think we can do that, folks. So that's what this is, the Bullish on America report. I think it's a 20-page report on all the reasons and reasons why we won't rally. I'm not an idiot, folks. I'm a fighter pilot. I'm an options trader. I brief the bullish reasons we're going to hit it, and I brief the bearish reasons. War, sadly, continuing. China invades Taiwan. Inflation, rate hikes, job market collapse, you name it. I list all the bearish reasons we're not going to do that. But on the scale, the bullish reasons outweigh the bearish, and I think we're absolutely going to hit that. And then obviously you also get access to our AI super cycle report. I'm going to have to update this one because I was waiting for Amazon earnings and everything else to come out this week. But this one's still from last week. You can see the quality of what you get in what I call our tactical trade alert service. And these reports are free right now, free. Obviously, to join the tactical trade alert service, what is it, $97 a month or $970 a year or something like that. So one more time, it's go.topgunoptions.com/TTA, tactical trade alert. Okay. And like I said, the psychedelic report that we stepped through today is delivered to your inbox after you opt in here. Folks, I feel like the, what is that? The Hair Club for Men guy. Not only am I a member, I'm the president. Folks, not only am I the president of the No Fallen Heroes Foundation, I sat with psychedelic assisted therapy 5 years ago, and it saved and changed my life. And the No Fallen Heroes Foundation, we have, geez, in the past, I'm going to estimate in the past 5 years, we've helped over 300 veterans, first responders, and family members sit with these powerful compounds, knock on wood, not a single suicide, thank God, not a single adverse event. So either we're all lying and we're full of crap, or there's some, and Eli Lilly doesn't know what it's doing, and all these publicly traded psychedelic companies are dumb and foolish, or there's something here. And guess what? There's something here, folks, because I'm living proof that there's something here. You can go to nofallenheroes.com and check out our mission and everything we do. But that was, never thought I'd go from laying on my back on a mattress in Mexico to being in the Oval Office. But that's the power of healing, and that's to put a point on it. That's the power of God. Now I know your thing just went away. I have no idea how to do that, but let me give you. There's the link to grab the trade report if you guys are so interested. Let me, and I can see some questions here, I think. Well, actually, folks, I actually got a minute left. I know these guys want to stay on time and everything like that. If you do have a question, if I didn't, and my apologies, folks, I used to use GoToTraining webinar years ago, but my desktop version of it wouldn't launch, so I have to use the web version. So I look like a complete idiot, and that's my fault. So if you do have any questions, Wiz, W-H-I-Z, I'll just give it to you, Wiz at topgunoptions.com. I'm always up for answering questions about this stuff because it's pretty powerful. Keep an eye out next week for Compass and Definium earnings. And then I'm going to jump here, man, because I want to actually go listen to the Amazon earnings call. Love the explosion in Amazon right there. So if you don't have any other questions, have a great rest of your day. Fights on. Namaste. And Basi. Wiz out. Thanks for having me, guys. I appreciate it.
Oh, thanks for being here, Wiz. We appreciate you. And yeah, thanks for all those tips and everything. You've got a great record, so no one could dispute that.
I appreciate that, man. Thanks.
Yeah. A fascinating presentation, and certainly one of today's most unique investment themes. Thank you as well for making a special offer available to everyone watching. We put that in the chat, and you can find all of his links in the chat there. And now we're closing today's summit with one of our most anticipated presentations. Our final presenter is someone who has helped thousands of traders simplify their approach to the markets. David Wise is a professional trader, educator, and creator of the SPY Super System. And you can hear his dog in the background.
Yep, big guests coming here.
Yeah. And his trading room is pretty fun. In the Options Live trading room and SMS alert service at Right Line Trading. Check it out. Rather than relying on one indicator, David teaches traders how to continue trend, momentum, institutional participation, volume, VWAP, and key support and resistance levels into one repeatable decision-making process. Today, he'll show you how to transform market noise into clear, high-probability trading opportunities. Everyone, please welcome David Wise.
Thank you, sir. Appreciate that so much.
Thank you.
I think my dog's calmed down now. We had somebody had the audacity to come and try to deliver a package to the house. So he took care of that. Thanks a lot. I appreciate it. And thanks everybody for being here today. Again, my name is Dave Wise, and I have a trading room that I train options and some stock, but mostly options all day long. Market open to market close. We use a piece of software called the SPY Super System that I'm going to go over with everybody today. Also have a text alert service. We send out our most high probability trade setups and to members of the alert service. So we'll get right into it and get started. I know it's been a long day for everybody, and I'll try to make this as quick as I can. But I do want to cover some really important information for everybody to try to become consistently profitable. I think that's everybody's goal when you trade, is to make money, not necessarily to make trades. It's to make money. Okay, so let me first of all go ahead and do the disclaimer. All signals and trading opportunities we provide here are for educational and demonstration purposes only. Trading is very risky, so you should never trade with more money than you can afford to lose. And neither myself or Right Line Trading are licensed financial advisors, so we won't be giving financial advice. Okay, we're going to talk about indicators that we use for trading. One of the things I'm going to cover, and I'm going to kind of break this into two different sections. I'm going to go over a section on the SPY super system. We're going to take a look at the specific charts. We're going to take a look at the actual charts, the indicators, and examples of trades that we take. We're going to go over the profitability of how these trades have worked. I have my win rate this year is 88%. It's typically between 85 and 90% every year. And we're going to talk about all those things. I'm going to show you how to identify those high probability trade setups on the chart. I'm also going to bring up some live charts today that we can look at. If you would like to have any trades examined, we want to take a look at the trades from a technical standpoint, and from the indicator standpoint, we'll do that. But we have what I guess what you would call a must-have indicator. Everybody likes to think that there's one indicator you can use for doing trades. It's really not true, but everybody has one that they feel is important. And I am looking at an indicator that I use. I'm using the SPY Super System indicators, and I use them for intraday and swing trades. And the one that's the most important for me is what's called momentum. Okay, so we're going to get into this a little bit here. And this will make a little sense later at the end if you're here for the last portion of it. We're going to talk about profits and harmony and how we identify these setups. Okay, and it's one thing I do want to cover real quickly is who moves the market. How does the market, the overall market, move? We've got two groups of traders. We have retail traders, such as myself, and most likely everybody here in the room is a retail trader. And then we have institutions. These are the folks that have the money that push the market. These are who create trends, break trends, etc. Everybody knows about institutions. I look at institutions as four different groups: investment banks, Goldman Sachs, JP Morgan, Morgan Stanley, Bank of America. Those are the investment banks. And then you also have pension funds. Pension funds are huge. Pension funds for police, firemen, state workers, lots and lots of billions of dollars in these pension funds. Then you also have hedge funds. Hedge funds, another massive amount of money that's available for trading and for investing. And lastly, there would be mutual funds, and those would be things such as T. Rowe Price, Vanguard. Those are the folks that push the market. When they're moving the market, we want to take advantage of it. When there's not enough of them pushing in one direction, we don't want to be in the trade. So when retail traders are trading, and there's not an awful lot of institutional involvement in one direction, I mean, the institutions are in there all the time. They're buying and they're selling all day long. But what we're looking for is the situations where all the institutions, or many of the institutions, are pushing a stock or an ETF in one direction. We want to jump on board. When they're not, and most of the trading is being made up by retail traders, what you get is a lot of chop and a lot of chaos. If you feed the market chop up and down, can't get any footing. Typically, the retail traders are the people in there trading. The institutions are just trading mostly with their programs, with what's called algos. And institutions, by the way, do most of their trading through program trading, which are called algos. Algos are programs that they have set up that look for specific conditions, and they look for conditions, indicators, etc., to buy and sell. And they can do a great job of that. One of the things they can identify is if you have a stop on a trade. If there's enough retail traders with a stop at the same level, they can identify that, they can bust it, and then break it back up again. I don't know if you've ever been in a trade where you put a stop on it, it broke down by a few pennies, and then popped right back up above it again. You likely had a stop at a level where there was an awful lot of traders with the same stop level. The institutions identify that and they take advantage of it. So that's what they can do with the algos. The algos do most of the trading. And a prime example of an algo is if you looked at the market when the FOMC came out on Wednesday. We had the Fed announcing their interest rate hike or no hike. What they did was they held the levels. They had held the rates the same. What you look at is if you look at the SPY on a 5-minute chart or a 1-minute chart, you're going to see a huge amount of volume come in exactly at 2 o'clock. I mean exactly at 2 o'clock. 2 o'clock and like a millisecond, all of a sudden you get a huge spike in volume. Well, that's the algos who read the report. They actually can read it, and they put their trades in. And it happens in way faster than you can even click your mouse. So those are the algos, and you can always tell when they're in their those trading those kind of events, jobs reports, FOMC, any kind of news reports that occur during the day. You'll see a big spike in volume. Those are the algos. All right, so that's what makes up the market, and our job is to identify when the institutions are moving in a stock in force and take advantage of that, and that's what the SPY Super System does for us. Okay, I'm gonna bring up the question box too, so I can see if there's any questions. We go through this, okay, and you can ask any questions for me as we go along. I'll try to answer them as we progress here. All right. SPY Super System, I'm talking about my intraday strategies and my swing strategies. We do swing trades and we do intraday trades. We do a lot of intraday trades when the market is choppy, and swing trades typically when the market is giving us a decent direction. And so we want to have enough methodologies that we can use to trade in basically any kind of market. So we have two systems for doing intraday trades. It's called the SPY Super System. We use the actual SPY Super System software to identify when a setup is on for example, in the SPY, the Qs, the IWM, futures, and even stocks. These are the trades we make on, and I use a 5-minute candlestick. So I'm just trading off of 5 minutes, right? So this is called the SPY Super System. Then we have another methodology called UMCAT. These are UMCATs for high momentum trades. It stands for out of the money catalyst. This is the only time I ever take out of the money puts and out of the money calls, just for intraday trades and only on stocks that have extremely high volume and high momentum. And this I actually created or used starting last November 17th, and I'll show you the results I've had with that. But the reason I did this was because if you've heard of what's called the PDT rule, or the pattern day trader rule, if you didn't have $25,000 in your account, you can't take but 3 intraday trades in a 5-day period. That's gone away now. Everybody's lowered it to about between 2,000 and 2,500. So now you can take as many day trades or intraday trades as you want. You can open and close as many trades as you want all week long. So I put this in because this is an intraday trade. You basically would either have to have 25,000 in your account or have just a cash account. But basically, it eliminated a lot of people from being able to intraday trade. That goes away, and I figured there'd be a lot of people coming into intraday trading, and I think I'm right. We have a lot more people now trading intraday. So this is a high momentum strategy. So those are the two that we use for intraday trades. Swing trading, we typically do use calls and puts, straight calls and puts. This is fairly normal. Also straddles and strangles. These are what's called non-directional trades. These are trades that we take puts and calls on the same stock, either at the same strike price or different strike prices. And we don't care which way the stock moves. We just want it to move a lot. So it's a non-directional trade. We also do debit spreads using weekly options expiration. Time spreads over earnings, which have been very, very successful in the last couple of weeks as we're in earnings seasons now. These are non-directional trades. They anticipate earnings when they come out. What we do is we take advantage of the implied volatility increase in option prices. The market makers increase the price of options just prior to earnings because they don't know which way it's going to move and they don't know how much it's going to move. So that increased the volatility. So what we do to take advantage of that is we actually sell a current week's call, basically at the money, and we buy next week's call. That's what allows us to take advantage of the implied volatility, what's called the implied volatility crush. When the options come out, or when the earnings come out, and the stock starts trading, now the market makers know which way the market's going to go, the stock's going to go. They know about what the size of that move is going to be, and then they adjust the premiums to reflect that. This allows us to capture the difference in that. It's a volatility crush trade, and I'll show you a couple of those. We did. I've got 2 on tonight. We've done 8 this week, and had winnings in all of those. We also have a weekly ATM strategy. This is a methodology to take a neutral to bullish stock and sell puts against it every week to bring in premium, and then also maintaining a longer dated put out in time to protect it, give it basically a protective put to the downside. And we do credit spreads to capture premium over a few weeks. These are all of the methodologies we use for intraday and swing trades that we trade in the room. We want to have enough trades, enough methodologies that we can use to take advantage of most any market. Okay, again, momentum is a catalyst. This is what I'm looking at for option trading. Every trader has one indicator that he feels like a secret weapon. and the one that turns noise into clarity. And for me, it's momentum, and not just momentum in theory, but the current time frame momentum paired with volume. Those are that's the thing that gives me the indication that the institutions are very likely in the trade, right? Again, momentum is not prediction. It's a confirmation. It's the moment the market tells you I'm moving. Are you ready to move with me? That's what we look for. Okay. So the critical indicators for this, and I'm going to show you this on the SPY super system: current time frame momentum and multi-time frame momentum. We have the momentum looked at in 2 different time frames, and we use that in conjunction with high volume candles to uncover institutional activity. This is what we're looking for. We're trying to find institutional activity to basically jump on the bandwagon and join them. Okay, and just for a kind of a clarification on what momentum is, because I think it's misunderstood by a lot of traders. If you just see some green candles stacking up, that's not necessarily momentum. The way we measure momentum is we look for, assuming these are 5-minute candles, the black first line here is the open, the high is the leather black, and the blue is the close. So what you're looking for is high volume, you're looking for bullish candles with the close of each candle gets higher and higher to the high of that candle. That's momentum. And this is momentum to the downside, where the close of the candle gets closer and closer to the low of the candle, right? So that's what momentum is. That's what we're measuring. Okay, so in the room and on the alert service, we have a couple of rules we trade by. Again, we have hundreds of people in the room every day that we work with and work with them, answer questions. A lot of them recommend trades for us. A lot of our trades come right from the members. So the rules to trade by: trade the best and skip the rest. We're just looking for the very highest probability trade setups. Sometimes we have to wait a while for that. I barely could find any today, even though the market was gapped up and was moving up nicely. It was kind of chopping to the upside with a lot of resistance. So there wasn't an awful lot of good trades you can get and stay in for a while. We had some winners, but we want to trade the best and skip the rest. Some days there's a lot, some days there's not too many. Second thing is, our objective is not to make trades. Our objective is to make money. The point of this question, or this statement here, is to keep people from over trading. One of the biggest problems that a lot of retail traders have, especially day traders, is they trade too much. They make too many trades. They always feel as though they have to have a trade on. That is not the case. We just keep in mind when you're going to trade, keep that objective in mind. Your objective is not to make trades. It's to make money. We're trying to make money. We only do that by taking the very best trades. So what difference does it make if you take 3 trades a day or 30 trades a day? If you make money on 3 trades a day, you probably can make more than taking 30 trades a day, because you're going to have a bunch of losers because you're not taking the very best ones. Okay, maintain discipline. This is learn and follow the process. That just means I have specific criteria that we use for finding a trade. I'll share that with you, and you want to learn that and stick to it. Basically, that means don't be listening to posts on social media recommending this trade or that trade, or somebody who's on CNBC, on Bloomberg or something talking about a trade. You want to find the methodology that we use, stick with it, and find the trade yourself or in the room, because those are the ones that are going to work much more frequently than anything that you're going to read about or hear about from your brother's long lost friend from high school. Give him a tip. Okay, and remain patient. This is another key thing here. Remaining patient is probably the hardest thing most retail traders have to overcome. When they're sitting in front of the machine, they feel as though they always have to have a trade on. You don't. You don't. No trade a lot of times is the very best trade. All right, and we need an edge. As a profitable trader, we need an edge over other retail traders. We're taking our profits from other retail traders. We're not taking money from institutions. We just want to know what their institutions are doing so we can follow them. So the edges we have is the Super System, SPY Super System software that I'm going to share with you. This is the key thing. This tells us what the institutions are doing. Then we trade what's called relative strength and relative weakness. This shouldn't be confused with the indicator RSI. RSI is relative strength indicator. To me, it's just a piece of garbage. It doesn't work. What we're looking for is how a stock is trading in relationship to the SPY. The SPY is moving sideways or maybe moving down, and your stock's moving up. then it's got relative strength. And vice versa on the relative weakness. Those are going to outperform the ones that don't have relative strength and relative weakness. And then we trade with the market trend if there is one, and buy near support and sell near resistance. You need to know where your support resistance levels are, and you want to get into the trade as close to those as possible. 2 reasons. Main reason is if it fails and it goes against you, your loss is going to be much smaller because you're going to be very close to where you actually get into the trade. If you chase the trade way up when it's moving up fast or moving down fast, and you get a long way away from support resistance, if it fails on you, the loss is going to be much, much bigger. Right? So those are our edges. Okay, and in the SPY super system, everything is color coded for the bullish and bearish. Green, anything you see green is a bullish strong. Blue would be bullish trending. Red is a bearish strong, and yellow is bearish trending. That's the color codes in the SPY super system. I mean, this is it right here. This runs on Thinkorswim or Ninja. I use it on Thinkorswim. Now, it's important to point out that I don't trade on Thinkorswim. I can have this on Thinkorswim to get my indicators, but I don't trade on Thinkorswim. I don't have to trade on Thinkorswim. I actually trade on Tradier, but you can trade on any platform you want. But this is what the indicators look like on Thinkorswim. This happens to be an example of a 5-minute chart. We'll look at a lot more. This is on the SPY. The key things here is this is the current time frame momentum. This is a 5-minute chart. Right? So this is the current time frame momentum. This tells you what the momentum is right now on a 5-minute basis. The next one up here is the multi-time frame. This is telling you what it's looking at 3 different time frames. It would be the 5, the 15, and the 45. If this was a daily chart, it would be the 1 day, the 3-day, and the 9-day. It's looking across all 3 of those time frames to determine if institutions are in there. So this gives us a really good indication if the institutions are in the trade. When it's green, they're likely in it long, and when it's red, they're likely in it short. Blue and yellow is just kind of trending, but blue and green are both bullish, and yellow and red are both bearish. Right? And this is a long-term trend. This I use on swing trades to identify market trend along with some other things, just to give me more conviction that the trade is likely to work. Okay, up here, this is a 5-minute chart. Now, these are the indicators we use for intraday trades, right? We look for support resistance levels on intraday trades that we want to trade. This first one here is called the VWAP, volume weighted average price. If you're a trader, that should be on all your 5-minute charts. You don't want it on your daily chart. It's not effective, but it is effective on your 5-minute chart. It's a level that all the institutions use to get in and out of trades. It's a very key one. They all use this. They all know where it is. The second one is here. It's called the 15 EMA, 15 exponential moving average, the green line right here, right? And the third one is the 8 exponential moving average, this white line. All of those levels can be considered support resistance levels. So when we typically enter a trade intraday, we're typically going to be, if we're going long, we're going as the stock breaks above one of these levels. If we're going short, we take it if it breaks below one of those levels. Okay, those are our support resistance levels. Now, one of the important things here is if you look at the candlesticks, green is bullish, red is bearish. That's standard colors. All right. The white candles right here, these are bullish candles, but they're high volume candles. These are showing us that institutions are coming in here with force because there's a high volume candles. Again, you've got white ones. Those are white candlestick tells you there's high volume coming in on this 5 minutes after 5 minutes after 5 minutes. Institutions are buying here pretty heavily. And it gives us a good indication that institutions are in. Now, for the strategies that we talked about, the UMCAT strategy, the method of using out of the money puts and out of the money calls, our methodology calls for only taking UMCATs, or out of the money puts and calls, which are cheap. They have a really good return, but you only can take them if you've got white candles for a long or yellow candles for a short. And I'm going to show you some of those trades live on the charts today. So this is the SPY super system as it appears on Thinkorswim. There's some scanners and stuff I'll show you a little later, but this is what it looks like. If you buy the software, it's going to look exactly like mine. I have it displayed in the room every single day from market open to market close so that we can take a look at stocks under that. One other thing that shows up in here is the market internals. This VOLD here, this tells us what the overall market's doing right now on a 5-minute basis. And I don't mean not just the SPY, but all the 6,000 stocks in the market. This tells us what the market internals are. Gives us a good idea of market strength or weakness in either direction. All right, so there is your SPY super system. This is a piece of software that runs on Thinkorswim. You can buy it. It'll put it on there. It's always going to look like mine, but it's a key to knowing whether institutions are in the trades or not in the trades. All right, and these, by the way, I just identified. These are the bullish high volume candles. This is a trade we did on AMBA, right here, AMBA, 5-minute chart. Right here, you see how it goes from red to blue. That's buying. Blue is buying, red selling. It goes from selling to buying, and you notice where it did it right here with this high volume candle breaking above the 8 exponential moving average. There's your trend right there. This you could have just ridden right up as long as it stayed above the 8 the whole way, right? And by the way, when the 8 is white, the white line is above the green line here. When the 8's trading above the 15, that's a bullish trend. When the 8 is below the 15, that's a bearish trend. Very important to try to trade with the trend. And you also typically only want to go long on intraday trades if the price is above the VWAP, and only go short if it's below the VWAP. Not really complicated. This is really pretty much all you need to find the best trades here. And over here, I'm going to go over these are the scans, how we find some of our stocks. All right, so that's AMBA right there. And here's some bearish candles, high volume bearish candles. This was on Futu. This was an UMCAT trade I took. You notice the institutions are selling. See, it's red, right? High volume candles, yellow candle. High volume candles coming down below the 8 exponential moving average, which is below the 15. So this is bearish. I take it right here, and I can ride this down as long as I want to stay in. I got out right here when it went flat, but you could have stayed in it as long as it stayed below the 8 and it went down. It made a really nice trade. Okay, and again, if you have any questions, just fire them off, and I'll be happy to answer them for you. Okay, and I'm going to show you a couple of real UMCAT trades that we've taken recently, just so you can kind of see this in action. This was an UMCAT trade in Oracle back, I think probably February. It was a while back, but I'm going to show you some live ones today. But this was Oracle, and looking at the key indicators here, you see the current time frame momentum, which is the main one we use for intraday trades. We typically don't go to the multi-time frame until we're going to take a look at a swing trade. But you notice how it's red here. Selling is taking place. The institutions pushing this stock down below the 8, right there on that yellow candle. High volume, breaking below the 8. The 8's below the 15 is bearish. And here's a little blue arrow that you see. The SPY super system puts that in there when the stock is breaking compression to the downside. Okay, very important. This was where I took the trade. I rode this thing down for about 6 or 7 candles from in here down to here. I get in for $72 a contract. Very cheap because it was out of the money. I was buying stock that was below where the price actually was. Get in out for $125 about 35 minutes later. So 10 contracts would have cost you $720. Get out for $530 profit in about a half an hour. Okay. Hey, Lakshma, am I able to place limit orders on UMCAT trades since the options move so fast? Oh, yeah, you can. Sure. I mean, you have to be UMCAT trades that are by definition quick trades. So you have to be very quick to get in, and you've got to, you have to look at the option chain and try to pick it right in the middle of something. But you want to get in as quick as you can when it's set up, because they can move very quickly. So I would typically, I would never recommend taking a market order unless the spread was tiny. Like if it was on the SPY or something and there's a 2-cent spread. But if the spreads are wide at all, by 10 or 15 cents, then you're going to have to do it on limit order. Yes. Okay, so that was the UMCAT trade in Oracle. This was one on Frog. This was a massive trade. This was the best UMCAT trade I've had this year. This was on a stock called Frog. You see how the institutions were kind of going back between buying and selling, buying and selling. You have some nice compression here. The stock was riding along the 8 right there. And now I get a breakdown. I get a yellow candle. I mean, that's high volume. The institutions are doing a selling right here, right off the 8. Okay, so I take it there as the 8 is below the 15. I take it. Everything's set up bearish, right? We're below the VWAP. The 8's below the 15. We got high volume candles to the downside. Institutions are selling. You can see it went from blue to yellow right here, and then it went to red. So I take it right here. Now I took an out of the money put on this. It was trading at about $43, $44. I took a 39 put on this, quite a distance away. But when I get into this, I paid $30 for it. And when I get out right here, I get out for $200 a contract. So that's a $1,700 profit on a stock that a trade that cost me $30. Right? So if I buy 10 of them, it's costing me $300, and I sold it for $2,000 for $1,700 profit. This is what you look for. You look for these, and these don't happen all the time. This is very rare to be able to get that kind of move. But this stock was up 100% in about 2 candles or 3 candles. And I actually left money on the table. If I'd stayed in it, and you see how it dropped some more. But I had my sell order set in there, and I took profits right there. Okay, so that's the UMCAT trade in frog. This is about as big as you'll see most of the time. Typically, they're going to run somewhere between about 50 to about 150% profits on these things. And that's what's nice about UMCAT trades. They're only can be used for specific setups using out of the money, but when they work, you get a huge, huge return on investment. So they're fairly cheap to get into, and they can return a lot. You just have to find them. All right, here's Netflix. This was another one, the long, just so you can see the structure here. There's candlestick is the current time frame momentum is blue, went from yellow to blue. Here's the breakout. Notice we got the 8 breaking above the 15 and above the VWAP. It's breaking out all of those levels right here. We get in right here and rode it up. See the high volume candle? So I can take UMCAT trades and high volume candles. I get in at $35. I get out at $70 right here. Right? Just rode this up. It starts to turn around. I'm out of the trade. Right? It's 100% profit. That's how we use these UMCAT trades. And this was a trade in Intel. Now again, see they're not always big huge winners. I wanted to show you this one. You can see the institutions are buying this here, right, along the way. Now I didn't get in this early. I typically don't take any trades before 10 o'clock. I wait to see what the market's doing. So I didn't take it here on this early morning breakout, and I waited. And this is where I took it, where I got a high volume candlestick breaking above the 8 and the VWAP and the 15 with a pop out of the box symbol. Tell me I have a compression break. I take it right here, and I write it up, and it just kind of rides along the 8, and I had to get out of it here as it breaks down below the 8 and the 15. I was in for 247, out for 277, 13% profit. So you are going to get smaller wins like that, and you're going to have some that lose. But the overall percentage rate on these things, percentage gain, is about 86% win rate, and it has a profit factor of about 4.5 right now, which is extremely high for a profit factor. If you don't know what profit factor is, you can look it up with an AI tool. But a profit factor of 1 is break even. A profit factor of 2 is twice as much win as losses, and it goes up from there. 4 is really high. Okay, and this was the frog one. We already just looked at that one. This was a trade on Meta. I didn't show where I get in or out of this, but you can see the institutions selling the heck out of this thing here, all red across the board. But it's moving sideways. I'm looking for an opportunity to get in. I didn't mark where I get in, but what I would have done was get in right here where it broke below the VWAP in the 15, in the 8 with a high volume candle. I had high volume candles all the way along here. So I could have taken it anywhere in here, but typically I would take it as I get a break of compression, and then I'd ride this thing down, right? And this one I get in for $5.95, out for $9.45, 67% profit just by following this down. That's all I had to do. And Meta's pretty expensive. That was $595 a contract for Meta. Okay, Verizon. This was a very quick intraday trade. I took it right here as it broke down again. You can see it's bearish. Has to be bearish for a short. It's red. I take it here on this breakdown. I just enter on this candlestick, and I'm in it for 10 minutes, and I'm out right here. And that was in for 17 cents. I was out of the money. I was taking the $41 calls, $41 puts. When I was trading at $41.50, they went from 17 cents to 34 cents in that quick period of time. 100% profit. Again, you have to be quick. And these trades here, I can't post. I just let you know when I see them. But these are the ones you have to find yourself, trade yourself at least. I do point them out when I see them, but I have videos on all of these the structures of all these particular setups. Okay, and this was a Tesla here. This was a day trade, in at 380, out at 580. This is where I get into Tesla. Again, selling, yellow, buying right there. Institutions coming in with volume. That's what you're looking for. I take it right here and I ride this up, and I stayed in this quite a long time. It was stayed above the 8 the whole way, and I get out right here on this little pop. I had a sell order set at $2 profit on per contract. So it's 68% profit in an hour on that trade right there on Tesla. Okay, and just want to show you a couple of swing trades we've had recently, just so you can see that this works on swing trades just as easily. These are daily charts now. Now right here, you see how we were bullish down here, and then the multi-time frame went bullish. They're both blue. This is where I took it on a high volume candle right here. I get in for 11:30, and I get out for 13:30 the next day, right here and out here. Just overnight, got a nice move up on a high volume candle, and I took it off right there for $200 profit for a contract on Apple. Again, these are again, you notice I don't need VWAP on here. I've got the 15, I got the 8, and I got the this is the 50. The red line is the 50, and the purple line here is the 200, and the blue line is the 100. Those are the simple moving averages that you should have on your daily chart: the 50, the 100, and the 200. Okay, so you know where the support and resistance levels are. Okay, and this was an Oxy trade, in for $1.30, out for $2.34. 80% profit on this thing. This was a pretty big trade. I took it right here. You notice that we were buying, the institutions were buying right here. They went blue to green, and the stock moved back right here to this white line, to this 8 exponential moving average on the daily. That's the bounce I took, and I took it on here, and I get out right here. And that was an 80% profit on that move right there on Occidental. Oxy is an oil stock, very susceptible to news, especially in the current environment with the Strait of Hormuz stuff going on. So that was a nice move right there. $1,040 profit in Oxy for a nice 10 contract trade. But again, you can see institutions buying. They continued to buy, but you see how it ran up against this red line right here? That is the 50 the 50 simple moving average on the daily chart. That's a resistance level, just like the 100 is right here on these charts. These are resistance levels and support levels that the institutions use. The 50 is red, blue is the 100, and the purple down here is the 200. Those are all support resistance levels that the institutions all use, and all their algos also use them. Okay. All right. So SPY Super System, again, it means two things. The software is called SPY Super System, and the methodology we use using intraday trades for in the money puts and calls, not out of the money, not UMCAT trades, but just in the money puts and calls. If we're doing especially on the SPY, the Qs, the IWM, we call it the SPY Super System, right? And then we have the UMCAT. So these are the two strategies that we use for intraday trades. SPY Super System is also effective for swing trades. We're using the same criteria on the intraday and on the swing trades as we do for the intraday trades. Same criteria, same setup, right? We're just using daily chart instead of 5-minute charts. Very important to use your daily charts when you're trading. Even for an intraday trade, you should have your 5-minute daily chart. You should look at and see if you've got any resistance close by. Okay, UMCAT trades. This is my performance on UMCAT trades since November 17th up through July 8th. I haven't updated it, but this is taking trades. I was risking about $500 per trade. I had to have a few that were a little bit more than that sometimes because the option was more expensive, but risking average $500 per trade, 486 wins, 80 losses. Right, that's 86% profit factor. At that point in time, the profit factor was 511. It's about 450, 460 right now. All right, so that's what that does. And again, I reiterate, these are the trades that I took because I can't post these and I can't alert in these. These are just trades I take in the room and I point them out in the room. This is what other traders are using all the time, using the SPY Super System to take these UMCAT trades. Again, here's the same performance right here. $500 invested in each trade produced about $46,000 in this time period. Pretty good for small amounts of money like that. But it's very specific UMCAT trades. Okay. Hey, John. Hello. How are you? Okay. This was, and I just wanted to show some of the results I've had for the recent year. This is April. These are all of these things listed here. These are not UMCAT trades. These are trades I actually posted in the room and sent out alerts on, right? These are ones, if you're in the room and you followed me and you put $2,000 into each trade, this is what the results would have been. On the alerts in April, we had 5 wins and 1 loss, just 6 trades, not a lot of trades. 2,000 invested in each trade, netted $3,220 profit. In the room itself, we had 17 wins and 2 losses, 89% win rate, and 2,000 invested in each trade produced 88.33. It's a pretty good month in April, as you can see. But to see the percentage gains on most of these stocks for swing trades and intraday trades that are using in the money, you notice that they run. They're not talking about 200, 300, 400%. We had this 103 on a strangle, but mostly they're going to be somewhere between 15, 30, 45, maybe 50, 60%. That's typically, here's a SPY, 60% of the strangle. But those are the kind of percentages you're going to see on all the trades that we take. That's just so you have your expectations in line. I don't want people thinking that you're going to make 2, 3, 400% every time you take a trade, because it's not practical. Okay, this was in May. Again, we had 12 wins and 1 loss. This was just the room. 12 wins and 1 loss. 2,000 invested produced 5,070 in profits. But again, see the percentage gains. Fairly consistent. 53% in UNH. Credit spread did 20%. Had a loser in this weekly ATM right here. But again, this is what trades in May. And we do have losing trades. And I had one losing month in 4.5 years. I did have one move. I think September of 2023 was a losing month. That's the only one that I've had since I've started this room, which was in January of 2022. And I started the first month of a 16-month bear market, and we still made money every single month. We have strategies that work to allow us to do that. All right, these are the July trades. I just kind of updated this. I've had another winner today. I didn't post it. We had another time spread, but these are our July trades. Apple 18%, paying 15%. Fortinet 35%, a little loss on Apple here. We had time spread on CNC, BSX 25%, 20%, 5%, and 46% here on this time spread in Verizon. And also had today on ICE, we had another 25% gain in ICE on a time spread today. I'm doing a lot of time spreads right now because the market is very, very choppy, very difficult to swing trade. So we try to find something that works well, and time spreads have been working very well. Okay, now just to kind of go back over time a little bit, just so you can see what the results of the room has been. This was in 2023, 2,000 in each trade. We called it the Compass Option Room back then, was produced about 60,000. It's now the SPY Super System. 2024 produced about 55,000, 2,000 per trade. And these are results that you would have received if you were in the room or in the alerts, because these are all posted. These are not just my trades. These are trades that I call out and post in the room. And I take every one, by the way. Every trade that I call out in the room or post or put alerts on, I take those just like everybody does. So I know exactly where we stand as far as the trades are concerned. 2025, 2,000 in each trade, produced a little over 55,000. Very consistent, very consistent. And the profitability in trades is much more dependent on what the market's doing. Trending markets will give you typically bigger profits because you can stay in the trade longer. And if the market's trending, you can take bigger risk. Choppy markets, we're going to have reduced profits because you have to typically get out early when you don't want to put big amounts of money into it. Okay. Now I'm going to look at some live charts now. And when I bring these live charts up, I'm going to show you the SPY Super System. And I'm going to ask you if you'd like to see a trade, if you want to see a chart on any stock that you want. Let me know if it's a daily chart that you want for a swing trade or a 5-minute chart for intraday trade, and I'll be happy to do that for you. Again, we're going to be looking at mostly UMCAT and SPY Super System trades. We'll also look at some swing trades if you want. And again, because the combination of the high probability trade setups, in other words, when the institutions are buying and doing that with high volume candles, that tells us that we've got institutions pushing that. And both of these systems produce about a 4% or more than a 4% win rate as far as a profit factor is concerned. Okay, let me go ahead and bring up the. Okay, so this is live on Thinkorswim right now. I don't have after hours on here, right? This is just current time, not after hours. I close it at 4 o'clock because it messes up if I'm using after hours, it messes up the indicators. So I want to leave this on here. This is just showing the current futures on the SPY futures right now in the ES. This does show after hours, by the way, the ES, but the stocks will not. Okay. SPY 15 minutes, John. You see, I don't use 15 minutes, so I'm never sure what it's going to look like. I'd have to go back and mess with it. It's a 1 minute there, and 30. I typically would use like an hour, 4 hours, and I don't have the 15-minute listed. You have to go back and, oh, there it is, 15-minute there. See what the indicator is. Typically with the 15-minute, what you're going to do is you're going to get the indicator for the current time frame. It's not going to go do and calculate the 15 minutes for the multi-time frame, just because it's way too much processing to do that. And if you're just looking at a 15-minute chart, which you're probably going to use with a 5-minute chart, this is the only indicator you're interested in for an intraday trade. You're interested in the 5-minute and the current time frame momentum. That's what I look for. Okay. Hey, John, got that? Yeah. And typically, this is what these stocks look like. Now, I'll show you a couple that I've traded here recently. Let me look at what I looked at today. See, I did very few trades today that were intraday type trades. Let's see. I think I did a Core Z. That's about it today. Oops. Okay, Core Z. I go back and look at the beginning of the day here today. Let me pull this all the way back. All right, so I took Core Z this morning right here fairly quickly on these high volume candles right here, and I got out real quick because they started petering out. So I think I took about 25% profit on that, and I did take out of the money, but because it was green and I had white candles, but I was out very quickly on that. Let me show you another one. This was yesterday. I took a TLT. Let me get TLT. Yesterday I took it close to the end of the day on TLT. So let me go back to yesterday. Yeah, this is where I took TLT yesterday. On this trade right here I took it right there at 320, and I get out right here, and I took it out of the money put and the TLT. It was trading at about 83 and some change. I took an 83 put. It wasn't there yet. I paid 7 cents, or $7 a contract for that, and I get out 2 candles later for $14. 100% profit on just that quick trade like that. And you can see the setup. See the institution selling. It was breaking below the 8. I probably could have got it here if I didn't. I don't think I recognize it. But that TLT worked very, very nicely on that trade right there. Okay, let's see. All right, let's see other things I used. Let me look at something I just want to identify something so I can show you some of the actual results. Yeah, I had marble on the 16th. Marble on the 16th. So we have to go back a little bit for that. It was tricky to get this thing where I want it to be. Marble. All right, so I don't know if we can go back all the way to the 16th. Probably not. That's going to be further back than this will go. Well, there it is right there. So this was a marble trade. Short. See the institution selling? Institution selling right here. Here's the breakdown between the 8 and the VWAP and the 15. You just write it right down, and then of course you get out right there and then pop. That was a pretty nice trade on marble. I haven't done an awful lot of trades this week. The market has been fairly choppy. Oh yeah, the Irene. We used Irene yesterday. Let me go to Irene. Yeah, I'd be happy to show you any trades that you might be interested in looking at. Irene was yesterday. it was right here, first in the morning. Took Irene early. That was I get in for $1.42 and out for $1.65. About a 20% profit, and this Irene moved right here. Again, then it starts to fade out and get out of the trade. Okay, so let's see, anything else here? Yeah, I did show you the TLT. So those are the kind of trades you take. I could go through it, bunches of them, but I have to go back to each 5-minute candlestick, and that gets each day that takes a little bit of time. So let's see if we can't see if there's anybody here who wants to see some trades. Okay, let me know if you want to see anything, because this basically is the presentation on the SPY Super System. I'm going to go into this. If you're interested in staying, I'm going to go into some deep diving on technical analysis and how to find the very, very best trades by using these indicators. All right, really important. So I'll be happy to do that. Again, I'll give you a minute in case you want to throw anything in there. I'm looking at some trades right now to take for swing trades. Joshua, you really don't see the link? Hey, question, but no idea what I'm looking at. Please send. Oh yeah, you'll get replays in all of this. And what I'm looking at obviously is I'm just showing you at the chart for an intraday trades. This is a 5-minute chart, and a lot of people have stocks that they're trading or they're interested in trading, and they'd like to see how it sets up. Jack, does it work with futures? Yeah, it works exactly the same with futures. It works exactly the same with futures. Here's the ES today. Here it is right now after hours. Here's the ES this afternoon, all day long. Moved up strongly this morning. If you trade futures, you know that. Had a big move up, then got kind of weak, came right down to the VWAP, and then moved up, and then a pretty good afternoon moving up here. Same thing as the NQ. Same thing on the NQ. NQ it was up big today. I mean, NQ was up over 3.5%. The Qs are up over 3.5%. They look very similar to the actual indexes, but a lot of people like to trade futures. So you can trade futures off this. You can trade anything except FX off of this. You can trade commodities. You can trade gold, silver, oil, whatever you want. MP, please. Okay, let's do MP. Are you interested in the 5-minute chart or the daily chart on MP? There's MP in the 5-minute right there. Daily, okay, switch over to the daily. We can see what it looks like there. Okay, so here's the daily on MP. Been very, very weak lately. You see this bounce today, you see what it did. Now, when you look at this, what you're looking at is here's the 200-day moving average, here's the 100-day, and here's the 50. Right, you see it's below all of those. It's been in a downtrend for a while here on MP. It's been down pretty hard, and high volume candles. So you'd be watching here, if I was going to watch this, if this breaks down again tomorrow below this 8, because this 8 is a resistance level, I would be interested in going short on MP. And I wouldn't be interested in going long on this until it breaks above the 8 here in the 15, and this goes to blue or green. I'm not going to touch this if both of these stay red like this. So this is, if you took this as a short a while ago, you'd be in really, really good shape. What platforms can you use for? Well, for the actual SPY Super System indicators, it just runs on Thinkorswim and it runs on Ninja. But you can trade on any one you want. I mean, you don't have to pay for Thinkorswim. You can just get Thinkorswim, load it up on your system, right, and load the software on it. And at that point in time, you're going to get all the indicators that we get right here. And I don't trade off of Thinkorswim. I use Tradier to do my trading. So I'm not trading off of Thinkorswim. I'm trading off of Tradier. But I'm using these indicators to tell me when to get into trade and when to get out of a trade. You have Ninja, okay? It'll Rightline can put it on Ninja for you. Yep. And typically most Ninja traders are using trading futures because they have a really good commission on futures, but not on stocks. How many days am I typically in a swing trade queue? Yeah, it's a good question. I think most of the swing trades I take last normally overnight to 2 days or so. 2 or 3 days. My dog is over here trying to bug me for a cookie. They last typically 2 to 3 days, up to a week, week and a half. But I'm not in them for more than 2 weeks at the most usually. But typically I'll go out in time on them, sometimes 3 or 4 weeks, but I'll take them off before it gets to that point. Just depends when the earnings are going to be. You don't want to be taking a trade over earnings, so that's how I decide. Okay. Anything else? I'd be happy to. Okay, Hugh. Yeah. Again, swing trades in this market right now. A lot of the trades we take, I take them overnight and I take them off the next morning. And the time spreads almost always we take off the next day. Not always, but generally speaking, we take them off the next day. So we'll be seeing how they perform, because we get our answers pretty quickly on time spreads, because the implied volatility, once the earnings come out, the implied volatility gets crushed. That's when we're likely going to get our best profit right there. Okay. Then what I'm going to do here is I'm going to, now that covers the this again. I do want to cover one thing here. These are scanners. We have multiple scanners. This is called cascading up. This shows you stocks with relative strength, and this is set up right now for a 5-minute chart. But I also have cascading up here for a daily chart, right? So what that's going to do is going to show me stocks that are bullish on a daily basis, right? Make sure I get that as daily. Cascading up daily right there. All right, so here's the stocks that look bullish on the daily chart. So if you click on them right here, they're going to pop up there, and you're going to be able to see that you've got high volume candles on the daily chart. So these, you can make a determination of whether these are good stocks for a long swing trade. And if I go to cascading down, I have cascading down on the daily. This is going to show me stocks that are potentially good shorts, right? For a short trade on a daily basis, on a swing trade. You can see Meta took pretty good hammering today. So this is how you find that. And if I go back to the daily one, to the 5-minute one, which is just say cascading up, and I click it. No, these are going to show me what these stocks are doing on a 5-minute basis. So I just click this over to 5-minute. I'm looking at it on a 5-minute basis, and this is what these stocks are looking on a 5-minute basis at the end of the day. You can see how strong some of these stocks are into the close. Notice a lot of high volume candles, by the way, in the open and the close. High volume candles are much more important middle of the day because they're much less frequent. Right? There's Baxter with a nice one. So that's how you look at those things. Hey Barry, Abbott 821 put. Okay, you're talking about a swing trade in Abbott. Right. So let's take a look at the daily chart. And stick at ABT. Okay. And you've got an 821 put on this one. Okay. All right. 821 put. So here is Abbott. You can see it's climbed up pretty nicely here. It's very green. It's very green right now in Abbott. Doesn't have earnings anytime soon. So this is pretty bullish on Abbott. Now it isn't the 200-day moving average, which is going to be resistance, but I can't consider the stock bearish right now. It's way too much. There's way too much strength in Abbott right now. And I have no idea, of course, when you took this, but because it would go back a ways. You can see there was some bearishness, a little bit of bearishness back in here, but this is still pretty strong on Abbott Laboratories. On Abbott. So if I look at the daily chart, you can see it fell down today, hit the 200, fell down to the 8. What's it going to do from here? I don't know. I don't have any idea what it's going to do from there. 110 put. Okay. You got 110 put, up 155. I'm not sure. Did you sell a put or buy the put, Barry? Because you got $110 put on this thing. Yeah, you're in the money by about, I guess, $5 or something like that in the put now. Yeah. Buy it. Okay. So you bought the puts. You bought the puts that were deep in the money, I'm assuming. So and what it's going to do from here, I don't know. Right now, you can see you're up against the 200. I think you'd like to see this thing stay below the 200-day moving average. Bought on 729. All right. Oh, just yesterday. Okay. Yeah, you still bought it here. which actually I can see why you did that. You did that. You bought the put because it hit the 200-day moving average, looking for a move down, right? So I can see the strategy here. Again, the 200 failed at this point in time, so you made some money on it. So you're up decent. I think you want to make sure that this keeps going down. You don't want it to get back up above the 200 again. If it gets back above the 200, you're going to want to take your profits on that. So you took a deep in the money put, looking at it for a drop below the 200 right here. Again, you can see the institutions are still buying the heck out of this thing. So it's still a very bullish stock. But I can see technically why you did it. Okay. All right. So I'm going to wrap that up. I appreciate all the questions. I appreciate the information. You're welcome, Barry. No problem. And I'm going to go ahead and back to the presentation here. And that kind of covers it. What I'm going to do is I'm going to show anybody who's in the room is interested in these specials. I'm going to show you those now. And then if you're interested in doing some deep dive into how we use the indicators together to find the very highest probability trades, it really makes a difference. And I just kind of want to cover that for anybody who wants to stay and do that. But in the meantime, for anybody who's ready to get involved or ready to leave, you can go ahead and this is the live offer on the trading room and the alerts, right? And I think they'll take up to 25 free trials today if they want. I have to obviously manage all those folks when they come in. But basically, the quarterly membership is $396 a quarter after a 2-week free trial. That gives you the trading room and the alert service. It gives you all my trading videos, which I have a lot, about 32 of those things. And we've got an AI trade analyst coming soon. This is basically going to be an AI scanner. It's going to scan stocks based on the criteria that we define and feed them back to us so we can use those to trade from. A cheaper deal, of course, is to do the annual membership. Same thing, obviously. You get the room and trading room, the alert service. You get all the videos. $14.98 a year, which is a really good. I'll show you at the end. This really good price because the average return for the trades for if you has been about 40x, about 40 times return what you actually paid for, what you ended up paying for a subscription cost. And now if you want to get a one-time payment, you can get in for $24.98 forever, into the room forever. And again, this is one you can do right now. And I believe there's a link in the chat box for these. Let me look. Yeah, there's a chat box in there. The chat box has a link for both of those in the chat box. Okay. Now for the SI Super System, this is the software. If you're interested in the software that we just showed you, this is what you get. You get the SPY Super System software. Obviously, you get all the updates to it as we change it, add to it. You get a month in the live options room, and you get the scanners, of course. You get my training videos, and you get it installed by Brightline. They'll just take over your machine, plop it right on either Ninja or Thinkorswim. Like I said, I use Thinkorswim 1998. But what they've got here for this Traders Corner is you can get the SPY Super System software one-time payment for free. In other words, for $19.98 installed for free. It's the same as it is for the annual membership. This is so basically it's saving you $1,000. You don't ever have to subscribe. So this is what you're going to take if you want to buy the software. You definitely want to take the lifetime since it's the same price. Okay, so those are our two offers today on the room and the alerts and the software. Again, and by the way, when you buy the software now, you're going to get 3 months in the live trading room because it's a lifetime. Okay. I'm going to give everybody a chance here to take a breath. I'm going to go ahead and drink some water. Then I'm going to go into a deep dive into the Super System indicators, how to maximize your trading performance here. Gulp of water. I've been trading all day and talking in the room all day, so I'm a little bit hoarse. But I love trading. Okay, this is a deep dive for anybody who wants to stay in here. This is a deep dive into the SPY Super System indicators and how to maximize your trading performance. Okay, I call this profits in harmony, and it sounds a little strange, but I call it the symphony trade. And the reason I'm doing this is I'm trying to use an orchestra as an example of how you're supposed to find high probability trades. How many things have to work together to find the very highest probability trade? So again, indicators taken alone don't make a trade entry. A lot of retail traders make big mistakes by looking at just one indicator or two indicators and thinking they should take a trade off of that. If you're looking for the very best trade, you've got to use these all in conjunction. So only using all the key indicators taken as a unit predicts a high probability trade. And many traders are going to take trades with one or two of these. Again, it's going to lead to more losing trades. So I'm using the symphony orchestra as an example. What we're saying is no single instrument makes a symphony. They can make sound, but they can't make a symphony. Only all the instruments working together in unison make a symphony. So that's what we're looking for. Each one of these signals, indicators, is kind of like an instrument. So one signal is noise, all signals and lines is a symphony, and we want our trades to be a symphony. All right, that's what we're looking for here. That's why I call it profits in harmony. All right, so this is a trading symphony. We're going to go through some of these things. Again, this is the things we're looking for. You've got trend. This is important. Those are your moving averages. The SPY, what's the SPY super system saying? What's the actual SPY trading doing itself? What's the SPY doing on the 5-minute chart? Is it bullish? Is it bearish? Is it choppy? Then your volume comes in, right? So we're going to cover all these things and how this helps us trade. Okay, so I call this the symphony mindset. A great trade is not one loud instrument. It's the orchestra playing in perfect unison. And the whole idea of using this orchestra analogy is to try to get traders to think about this in their mind when they're taking a trade. So maybe it'll get them to maybe look at more of the indicators and think about that everything is working together. Now I've got the trade, and if I don't, I've got just a cacophony of sound. How when a orchestra sounds when it's warming up. Okay. Again, our system isn't about prediction. It's about listening to the market's music and entering when the orchestra is in harmony. Again, it might seem hokey to some people, but this is a way to get yourself to focus on looking at all these indicators together and how to find the very best trades. Again, this is the framework. How a stock and option strategy mirrors a world-class orchestra. A single indicator is like a single instrument. It's capable of sound, but not a symphony, right? Might sound nice. A high probability trade is a symphony. Multiple instruments, indicators playing in alignment, in rhythm, and in the same direction. That's what we're looking for. So market overview notes. These are things to be aware of when you're making trading decisions. This is important. This is really important. Trend days, trade the stock on a trend day. Trade the best stocks trending with the market. These are days when you can actually take trades and stay in them for a while, right? And you can probably take bigger risk on trend days. Choppy days, you're just going to trade the best relative strength and relative weakness stocks you can find. It doesn't mean RSI. That's what I meant when I said relative strength. How is the stock trading in relationship to the SPY or the Qs? Really important, right? In most days, there's going to be a lot of high volume candles early in the day. As I said, right at the open, 9:30 up to about 9:45, 9:50, there's going to be a lot of high volume candles, and there's going to be a lot near the close. So it's best to wait 15 minutes to a half an hour after the market open to place new trades and not trade the last half an hour, right? You obviously can be closing trades in the morning. One of these sayings I don't think I have listed here is gaps are gifts. If you're in a trade long and you get a gap overnight and it gaps up, take the money. I call it gaps are gifts. When you get a gap up in the morning or a gap down on a short, you want to take the money. Two reasons. One, the implied volatility is going to be much higher on a gap up. That's going to jack up the price of the options. And the likelihood of a stock doing a gap up and going, in other words, gap up and continuing, is the least likely of the options. I mean, you figure there's three of them, right? There's gap and go, there's gap and chop, and there's gap and crap. It just turns around, heads back down again. But gap and go is the least likely, and it's less than 1/3. It's well less than 1/3. So that's why gap gifts take the money. Okay. Using the key indicators for intraday and swing trading, right? So for intraday trades, SPY Super System current trading frame momentum, the one we talked about on the SPY Super System. This is the most important one. I have to trade with that. I won't trade against it. I'm going to trade with it. All right. I mean, can you do counter trend trades? We were just pointing out here a trade that he took on the stock that went up to the 200 and turned down, and took puts in it and made some money on those puts today as the stock bounced off the 200-day moving average. That is a very understandable trade for me. But especially for new, fairly green traders, you're much better off sticking with what the institutions are doing and sticking with that, because you have to be able to read price action, which he did, and it works for them. And I mean, I do trades like that, but I'm not going to typically alert people on a trade like that. All right, and the next ones that we're interested in on the 5-minute is the VWAP. We mentioned that, the volume weighted average price, the 8 exponential moving average, the 15 exponential moving average, and look for high volume candles and then relative strength and weakness. This is it. This is how you find intraday trades that are going to work. You're looking for a long, you want to have the stock above the VWAP, you want the 8 above the 15, and you want the stock price breaking through either the VWAP or the 8 exponential moving average with high volume candles. That'll give you the UMCAT trade, especially on a stock that has relative strength. Okay, those are the indicators that you use together. All of those are going to give you the best setup you can. Okay, if you're way away from the VWAP, too far away from it, you don't want to take it. It's too far extended, your risk is too high. And you can get away with taking trades if it doesn't have high volume candles, but not out of the money puts and calls. No UMCATs. They would be SPY super system. You'd be using in the money puts, in the money calls on those kind of trades. All right. Now for swing trades, SPY super system current time frame momentum, SPY super system multi time frame momentum. Right. Both of those together. They both need to be bullish or bearish. Then on the daily chart, you're going to look for the 50 SMA, the 100 SMA, and the 200 SMA. These are key support resistance levels that all the institutions use. So if you're going to go long, you don't want the stock to be going to run into the 50, the 100, or the 200. You want to have some room to the next resistance level. Then the 8 and the 15 EMA on the daily are also support resistance levels. So we use these. I use all 3 of these for support resistance levels on a swing trade. Then high volume candles again gives you much more kind of confidence that stock's going to move, that trade's going to work. And then market trend. When you're doing a swing trade, you kind of want to be trading when the market is in a market trend. Right now, the market is chopping all over the place. It has been since the beginning of June. It's chopping up, chopping down. It's very hard to stay in swing trades for long at all. So when you don't have a good market trend, you've got to cut way back on your swing trades. Do mostly intraday trades, or you can do like time spreads, something that's non-directional. But you don't want to put a lot of money into swing trades. Once the market turns either bullish or bearish as in trending, then you can start to join in on those. It's very important to, when you're ramping up size, when you're going for more profits and staying in trades longer, that you've got the market giving you the confidence to do that. If you trade a lot of swing trades and stay in them a long time in a choppy market, it's not going to end well. Okay, now using the intraday indicators for swing trades, for SPY super system current time frame momentum on the intraday trades, right? They got to be green or blue for long, red or yellow for shorts. We covered a lot of that. The VWAP, a key support resistance level. Price must be above the VWAP for long and below the VWAP for shorts. The 8 EMA, also another key support resistance level. When the 8 is above the 15, the trend is bullish. When the 8 is below the 15 is bearish. We covered that. Okay. Now, one other thing here. Now, this is really important, and this is something that I emphasize all the time. I don't know an awful lot of other traders that talk about this, but this is really important. The 15 EMA, when you're trading, when you use it with the 8, all right, a secondary support resistance level. When the 8 EMA is below when the 15 EMA is below the 8, the trend is bullish, right? The 8's above the 15. When the 15 is above the 8, the trend is bearish. When the price breaks below the 8, when the price is in an uptrend, in other words, that would, let's say you get in at the 8 and the stock comes back and breaks down below the 8. The 15 is often going to act as support. In other words, you've got 2 supports here. You've got the 8 and the 15. The 15 is likely to offer support for that trade. So when I'm in a trade and it breaks below the 8, I'm not going to get out until it tests the 15. If it goes below the 15, I'm out. But a lot of times, many times, it'll bounce off that 15. Okay, and the opposite, if you're a short and the stock comes up and goes through the 8, right, moving to the upside with the 15 above it, you stay in the trade until the 15 gets broken, because a lot of times it'll go up, hit the 15, turn around, and head back. Okay, this is I use this all the time, and it's been extremely effective. Then your high volume candles. Again, the bullish high volume candles are white, bearish are yellow. And the high volume candles can indicate strong institutional buying and selling, and it's critical to have high volume candles for UMCAT trades, which should only be for intraday trades. Okay. All right. So now entering intraday trades. This is swing trades. I'm sorry, this is intraday trades. This is day trades. Current time for momentum is what we're looking at. It's got to be bullish, or blue or green for bullish, red or yellow for bearish. Right? That's what we're looking at. Just the current time frame momentum. There should be no nearby resistance above for a long or support for a short. That also means you've got to look at the daily chart to see if you're anywhere close to the 50, 100, or 200 SMA. You're not going to trade on that, but you don't want to be taking a trade that's very close to that because it's going to offer resistance. Just like the trade we showed a little while ago when one of the members there that was in the webinar today took a short when the stock hit the 200. That was the 200-day moving average. It offered resistance. The stock moved back from that. Right? You wouldn't want to be going long when it was up there. Enter intraday longs on price break over the VWAP or 8 EMA if the trend is bullish. Enter intraday shorts on price break below the VWAP or 8 EMA if the trend is bearish. We just talked about buy at support, sell at resistance. And high volume candles on the break indicate strong institutional involvement and increased probability of success. High volume candlesticks always indicate higher probability of success. Tells you the institutions are in there with force. All right, entering swing trades, you got to use the daily chart only. Right, there's several potential entries into a swing trade. Now you can use the 5-minute chart to find your best entry, but when you enter a trade off of a daily chart for a swing, you're going to exit off the daily chart unless you're getting ready to take profits. In other words, if you get into a stock that's bouncing off the 8 and then it pulls down below the 8 the next day a little bit during the 5-minute candlesticks, you don't exit there. You wait to see what it looks like at the end of the day. So you get in on a daily chart, you get out on a daily chart. So for swing trades, bounce up off the 8, 15, 50, 100, 200. Any of these moving averages, simple or exponential, those are all support resistance. Any bounce off of those is a good long. Any bounce off of them when they go up and touch them and head down, that's a good short. Another good one set up is a breakout down from compression. The stock's been moving sideways for a good long time. It breaks to the upside, you get a high volume candle, nice potential long. Breaks into a gap fill if you've got a big gap fill that the stock creates. That's another one. And a PBO, what's called a pullback opportunity. That's when a stock pulls back to a support level, like the 8, and then bounces off of it and it goes back into the original trend. That's a PBO, and these are extremely, extremely effective. Extremely effective pullback opportunities. Now for current time frame momentum and multi-time frame must both be bullish. These are for swing trades, right? And bearish for bearish swing trades, red or yellow, right? So you're going to enter a swing long on a price bouncing off the 8, the 15, the 50, 100, or 200. All 5 of those. Those are your 5 support resistance levels that are key for getting in at a support level. Enter the intraday shorts on price bouncing down from the 8, 15, 100, 50, 100, or 200. All of those 5, right? These are support resistance levels. This is what you're looking to trade off of. And again, high volume candlesticks on the break indicate strong institutional involvement and increased probability of success. And the stock should not be more than 1 ATR extended from the 8 EMA. That means the stock, when you look where the stock in it and you see where the 8 is, if that stock is more than 1.5 ATRs, and ATR means average true range. If that stock moves $10 a day, right, the average true range is $10. If that stock is more than $15 above the 8 exponential moving average, it's too far away. It's very likely to revert to the mean. It's going to come back down again and get to the 8. So you don't want to chase them when they're up there like that. And never take swing trades over earnings. Only takes earnings trades with time spreads. Please don't try to take trades over earnings, especially with options, because the options have been increased in price by so much that stock has to go so far above or beyond what's expected by the market makers to make you any money. They're almost always, it's a losing proposition. You're going to lose money trying to trade options over earnings unless you're doing like a time spread. Even straddles and strangles don't work because they're too expensive. They've covered, the market makers cover themselves. I like the market makers today when I was watching the market action on the option prices, they were ridiculous on some of these stocks. They had these things spread out. They normally are spread by 50 or 60 cents. They were spread by $3. So basically, I likened the market makers today to loan sharks. I mean, basically, they're basically just saying, you know, here's a trade. You can pay $3 more than you should for this, you know, and they're saying to you, be ashamed if something happens to your option. Basically, so you got to be very careful about that type of thing. All right, for both intraday and swing trades, always be aware of the closest support resistance levels are. I think I probably emphasized this enough. For intraday trades, the 50, 100, and 200 on the daily are support and resistance. We just covered about this. Know where they are so you don't trade into them. Same thing for the VWAP 8 and 15 on the 5-minute chart. Know where they are so you don't trade into them. Right, and for swing trades, the 50, 100, and 200, as well as the 8 and 15 on the daily chart, are support resistance. Again, for a stock to break through support or resistance, it generally requires high volume. If you got a stock that's pushing a lot of volume and it's maybe coming up to the 8, it's likely to break through it, or even out of compression, it's likely to break out through the high. It would be the compression break. With high volume, it's much more likely to do that. Okay, now this is something that a lot of people ask me about, this anticipatory trades versus confirmation trades. Right, there's a difference here. When a stock breaks out of compression or goes down and touches the 8 and starts to bounce, if you don't have a confirmation that that bounce is going to continue, like if a stock breaks out of compression, a lot of times it'll break out of the compression, come back down, bounce off of it again, head back up again, right? Well, if you take it on the initial break, any trade you take on the initial break of support or resistance or the break of compression, that's called an anticipatory trade because you don't have confirmation that the trade is going to work. If you wait for it to pull back to support and then bounce, that's a confirmation trade. They're both valid. Okay, these are both valid. Again, a trade that goes an immediate breakthrough support or resistance is a anticipatory trade, and a confirmation trade waits for a retest of support. Both of these trades are valid. However, anticipatory trades will fail more often than the compression trades, the confirmation trades will. But when they do work, they make more money because you get in sooner, right? You're getting in right on the break. So it's kind of a double-edged sword. They're both valid trades, but you want to be aware that if you get into an anticipatory trade, you're going to have to be very careful because as soon as it breaks through that breakout level, breaks back down through it again, you've got to take your losses. All right, so that is what I wanted to wrap up today. I just wanted to try to go into that. It's kind of like an educational section, and I hope some folks found it interesting as far as that is concerned. Again, and here's the specials again: a live trading room and the alert service, $396 a quarter with a two-week free trial, $14.98 a year for that. Again, that comes with the trading room and the alert service and the videos I do, all the 31 videos, training videos I've got, and a Discord room. A one-time payment, $24.98. That gets you the room and the alerts forever. Okay? And the Spy Super System, the software here is right here, $19.98. Right now, they've got a special $19.98 forever, lifetime. It's usually $29.98. So that comes with 3 months in the room, the training room. You get obviously you get the scanners when you're in there, and you get all my training classes, and you get the software installed on your Thinkorswim or NinjaTrader by Brightline. Okay, so that kind of wraps it up for today. I appreciate everybody being here. I appreciate the questions and appreciate your attendance. I hope everybody has a great evening. We'll be back at training tomorrow. So anyway, I appreciate you being here. Thanks very much. Look forward to seeing some folks in the room in the near future, and have a great evening.
Thank you, David, for another outstanding presentation and for closing out today's Investor Summit on such a high note. On behalf of everyone at Traders Corner, I'd like to thank each of our presenters for sharing their time, expertise, and generous offers with our audience today. And most importantly, thank you, the audience, for joining us. We hope today's summit has provided you with valuable ideas, new strategies, and actionable insights that you could begin applying in your own investing and trading. Remember, all of today's special offers remain available through the links in the chat for a limited time, so be sure to take advantage of any that interest you. From all of us at Traders Corner, thank you for being a part of the trading family. Have a wonderful evening, and we look forward to seeing you again at our next Traders Corner event. Thank you, everyone.